Welcome to Sreshta for CA and CMA, and also welcome to Other Laws Marathon. Approximately 11 hours of marathon recording, we have uploaded. So you can see the continuation. It is almost 11 hours. By the way, I'm not dealing with other laws. So we have a faculty called VIKITA from Vizag. So she's a qualified cost accountant and also a GMCS trainer, and she do participate in certain institute related training programs as well. And she also give lectures at few other institutions as well. But for us, she takes up other law subject. And one point I would like to highlight. See, we as a Sreshta Institute have certain norms. For any subject you take in our institute, we have a structure to follow. It may be the material, or it may be the classes, or it may be the doubts clarification, or whatever. Any context you take, we have a particular structure. So Vikita ma'am has aligned her teaching style to suit our structure requirement, which is a very proven structure. And that particular learning you can see with other laws. One thing, for Vikita ma'am, this other laws is the first batch. She's dealing with the first time other law subject, first batch. So that recordings were already available as part of subscription model. Now these are revision recordings, only revision videos which we are uploading for the sake of mainly Sreshta students. Even other than Sreshta students also can watch. Okay, so happily continue watching. Remember the timestamps. So like example, you take first part of the marathon is actually speaking about indemnity. Two videos speak about guarantee. So we are going to give you timestamps below. In the description of this video, timestamps we will give you. Actually, you're not finding different videos. You are going to find only one single video, merged of all these 11 hours. You will find merged video. Getting it? And further, one more information. Very soon, probably we will be uploading this video on 23rd or 24th of the March. We scheduled it for 23rd or 24th of the March. So it will be uploaded depending upon the processing, all that. And further, in coming next 1 week or 10 days, you are also going to get accounts group 1, complete group 1 accounts marathon, costing group 1 marathon, entire taxation, approximately 25 hours of GST plus income tax together marathon, and amendments and other laws, and company law as well. Company law, it might take actually I have to take up the company law marathon because I deal with company law. So because of certain works, I need to keep it little late. Company law marathon, at least I will try my level best to give you before April 20. Okay, I will try my level best. 99% I'll give you. Last time also I promised, but somehow I couldn't give it marathon. But this time I want to give at least 50%. But you remember, you see, complete other laws, 40 marks weightage is covered, or entire 40 marks concepts are covered. So that's it. Happy watching. Continue the video. Watch at standard speed. I always believe in watching at the standard speed is most important. It's not listening the words, it's understanding the sentence and understanding the concept, understanding the structure of the subject. That is what most important, and that understanding you will get only when you watch at standard speed. Maybe very few students are exceptional who has very good grip on the subject. They may watch at a higher speed, but believe me, watching at standard speed will give you a best clarity, best exposure. Watch at standard speed. The playback speed should be 1x, not 1.2, not 1.5, not 2. Choice is yours, but my suggestion is 1x. Okay, continue watching. Have a nice time. Bye bye. All the best. So the madam will continue with the marathon. Thank you.
Hello, hi everyone. Welcome to my classes. So, welcome everyone to the marathon lectures of other laws. Myself is your lecturer, your faculty for other laws, CMA Vikita here. What are we going to do? We are going to understand the other laws in a fast track version, like we are going to revise, recall, and refresh ourselves with the other laws portions that is of 40 marks. Got it? So before we go ahead, so you people need to join hands with me and start revising each and every particular point and the terms and the terminologies of other laws. So are you ready, guys? Ready? So with a happy smile, we are going to start. So obviously, I'll go not fast because it's marathon doesn't mean I'll go fast. Marathon means we're going to revise everything within a small duration of time, right? Like indemnity chapter, like bailment chapter, we're going to cover within 1 hour or 2 hours time, which normally in the normal lectures or the regular lecture it takes 2.5 hours, 3 hours, 4 hours, according 5 hours. Some chapters take 10 hours, 15 hours also, but we are going to reduce the time. We are going to read the important portions which are required for an exam point of view. Got me? So you people are ready for the marathon with me? Yeah, very good. So for that, what we require we require is books. We require books, that is study material of Shrestha or the study mat of ICAI. If you are a Shrestha student, you can happily use the material made by me. All those who have already read, already are with me in the tune of the classes, you can happily go with the study mat which I have made. If you are not a Shrestha student and you are directly going and reading this one just for your revision, you can happily prefer the study mat which is being given in the BOS portal of ICAI website, right? Next, open up your notes, that notes which you had made before when you had done a regular course. Got me? Then must have a rough copy in case you have got to a point which you have not able to recall while reading or while attending this lecture. Just make a note of that thing in your rough copy or somewhere side in, and that should be related to law notes. Not that rough copy means, rough copy where you after reading you write it, you forget that where the notes were. No, it should be a copy where you remember that what are those points which you're not able to recall. You make a note of it, make a list of those points during the lecture, right? After I am done, okay, or whenever you want, you can just put a pause of it and just go to the main point where we read in the study mat, where what you have written in your notes, then you can happily recall, rewind it. Okay, so do not worry. We may be a bit faster, but not that fast that you will not able to rewind things. Okay, it will be cooler, happier. We are going to finish every important points of other laws. Right? Now, one more thing. As you people know, other laws is what is of 40 marks, right? Yes, ma'am, it's of 40 marks. So what I want is my students should secure 35 above out of 40. And it is an easy and very mark fetching portion of our total loss in our CA inter portion. Fine. So these are some points which I have told. Now, one more point is there. While we are reading, you will be recalling the points. So it's very nice from your end, wherever you're sitting in, whichever corner of the house it is, even if it is a library, even if it is a house, even if it is an office, please make sure that you also keep remembering, refreshing your mind with those points along with me. If you do that, it will come from your subconscious mind and it will be stored in the main memory. As it is stored, it will be, it will be connecting you to one or the other points which we are going to read in this whole marathon. So please keep speaking if you know that meaning. If you know the sentence which I am speaking, if you know it, speak it on. No one is going to say anything. Shut down your doors wherever you're sitting. Shut down, or tell, where if you're doing it in the office, tell your sir to give you some half an hour, 1 hour time, complete the whole portion, and then go to the next chapters. Got me? Very good. So for that, I wish you all best of luck. Now, I'm going to show you the material which I have. The material which I have for the regular mode is the material I'm going to use for the marathon. There is no different sub notes or small shortcut notes or chart notes. No, I am, while reading, if required, I'll make you small flow charts, or I'll just refer to you and tell you that these are the important points which you need to remember as per the exam. Right, me? Okay. So coming to my material. This is the material which I use, okay, for my regular course students. So now also while doing this subject like marathon, we are going to go through this material only, okay. Now, a small short brief about what the material, how the material goes, okay. The material speaks about, it is group 1, paper 2, other laws, okay, and you know it is a 40 marks portion. And how do we go ahead with material? It is given. So we know that the other laws portion is having the chapters called Indian Contract Act. In Indian Contract Act, we have those special acts. What are the special acts? Ma'am, what is special acts? Special acts are those acts which we come across in our day-to-day routine. Hence, these are called as special acts. Why these are called as special acts is every particular situation in our day-to-day routine or daily life is carried on by one or the other act which we are reading in our law paper, like indemnity, like bailment, like guarantee, like pledge, like agency. These are the special acts of the Indian Contract Act. Got me? What are the basics? See, in CA foundation or CPT level, we have covered the basics of our Indian Contract Act. What are these basics? Yes, these basics are what is agreement, what are the people required for the agreement, what is free consent, what is consideration, what is like related to law, is it lawful, is it not lawful, is it required for the contract, it is not required for the contract, what are the things enabling for a Indian Contract Act, and many other basics we studied. Refreshing with these additions to this basics we are reading is the special acts. Got me, everyone? We are adding on our concepts with the special acts. So in our CA inter level, we have this special acts, that is indemnity, bailment, guarantee, pledge, agency as our Indian Contract Act chapters. Fine. With the duration of our marathon, you will surely understand what is indemnity, what is guarantee, what is bailment, what is pledge, what is the requirement of agency. Okay. Now that was just a small starting of it. Okay. Now we have one more portion. This is one. The second chapter we have is the General Clauses Act. Third chapter is the interpretation of statutes, IOS normally it says. The fourth chapter is the Negotiable Instrument Act. So these are the chapters which we are going to read. Why we are reading here? We are reading here because when we are understanding, we are going through the basic level. We are in between the medium of understanding what is law. How do you relate law? Why are we reading law? Why do you understand law? Okay, and what is the lawmaker's point of view? These all things are covered in GCA and IOS. IOS is what? In interpretation of statutes. Means what are the different acts like Partnership Act, Sales of Goods Act, Indian Contract Act. You have n number of acts, right? Those acts are being made with some point of view, some reason of making those acts, right? So we are going to understand the lawmakers' point of view, lawmakers' interpretation, how they read one small words, terminologies in interpretation of statutes. Related to it, we are also going to understand the general way of interpretation. Means how do you understand basically for a normal simple person? Law is not easy, right? So to understand in a simpler way, there is GCA Act which has come forward for only for a better and excellent understanding. So GCA is General Clauses Act and IOS is what? Interpretation of statutes. Now coming to the last one is what? In Negotiable Instrument Act. What is Negotiable Instrument Act? It is not about negotiating anything. No, remove that misconception. Interpretation statutes simply speaks about, sorry, negotiable instruments simply speaks about what? Simply speaks about the different types of negotiability which can be done by one person to another. Why? To increase the source of income, to enlarge the, like, source of income in the society. Okay, to increase the GDP, to have a better economic condition and financial stability, to increase the credit ratingness of the country. This Negotiable Instrument Act is there. In this Negotiable Instrument Act, it's very easy, very nice. We are going to understand the negotiable instruments which we have. For example, if you have gone through a note, 10 rupees note, a 10 rupees note is also a negotiable instrument. In the same way, we have different ways or modes of negotiable instruments which we are going to go with. Okay, in this marathon you're going to learn these all points of Indian Contract Act, GCA, IOS and Negotiable Instrument Act. Okay, now see, basically what my material speaks is about these things. Like, I have divided the Indian Contract Act into different chapters so that it's easier for us to understand, and basically you go into a easier and a smooth way of learning. Okay, so it's like contract of indemnity, then you have guarantee, then you have bailment, then you have pledge, then you have agency, then you go with the General Clauses Act, interpretation of statutes and Negotiable Instrument Act. Now what I would like to say is, I am thinking of doing in this way that we start with the Indian Contract Act, we complete the Indian Contract Act, and then we we decide our position that should we go with the General Clauses Act or the IOS or the Negotiable Instrument Act. So first, what I want to complete is the Indian Contract Act, and then I would give you an portion that we should do which chapter next. This. Okay, got me? Fine. We have different questions which are related to it in each particular terms, each particular portions, each particular explanations, so that it's easier for you to revise the RTP, MTP from that particular sections. Okay, fine. Now, the first part is the Indian Contract Act. Now, what does Indian Contract Act speak about? Indian Contract Act is simply saying about what it's saying about, section 124 to 125. Nice. Okay. So, what does indemnity speak about? Indemnity, ma'am, what is indemnity? Think, relate. You have read it, guys. You have read it. You have to just come into a proper way of attention and see my lectures. You will absolutely do wonderful. You will have so much confidence in you. You will like send me a message that time that, ma'am, I got confidence in myself because I am able to relate what the chapter is speaking, what the question is saying. Got me? Now, what is indemnity? Let's understand indemnity. Indemnity in speaks about making making good the loss. Means what? It means that there is one party. Okay, there are two people involved. There is indemnity holder. Okay, and you have indemnifier. Indemnifier. So these are the two peoples which are the two parties for making a contract called indemnity. Got me? Now, how do you make good the loss? So obviously there is some reason to make good the loss. When there is any damage which has occurred to any one person, and the other person before the damage comes is assuring and telling you that if you are having any damage in the near future, I will compensate that damage. I will make sure that if you have a damage, I will compensate or do good the loss. Means what does it mean? It says that if Mr. A, if Mr. A has done a contract with Mr. B. Who is Mr. B? Mr. B is a insurance company or an insurance agent. Okay. I mean, Mr. B is representing an insurance company and he is an insurance agent. Now, what has happened is Mr. B goes to Mr. A and says, sir, because you have bought this particular house newly. You bought this particular house, and what has happened is if by mistake in near future your house is on fire accidentally, if your house is on fire, sir, how do you go ahead? What will happen to you? You have invested almost half of your life, half of your amount on this making the house, right? So if your house is on fire, it's a dream. Your dream is to live in that particular house which you have made the whole years you worked hard. Then if your house is on fire, then what will happen to you, sir? Then Mr. A thought, yes, this is a good point, right? Let's think about it. Then A said that, B, can you please give me any advice? How do I go ahead with if this situation comes in my future? Then what happens is B is going to tell A that, sir, I am coming from HD, no, not, let's not take HDFs. I am coming from Tata Insurance Company, and our insurance company provides this particular benefit. And A says, is it really? Obviously, B says, yes, sir, we provide the insurance to your house. We have a product which is a house benefit insurance. Okay, means if your house is accidentally caught by fire or accident, anything which happens wrong to the house and the house is damaged, then what happens is our Tata Insurance Company will make good the loss and compensate the amount which was approximately the loss which has happened to your house. Fine. A says, is it, if this is so, like, are you going to do it in free of cost? Then what happens is B says, sir, for this you need to pay a premium amount yearly per annum. As you pay the premium amount per year for a period of time, like say 10 years, and in this 10 years, if your house has got any damage any way, okay, if it is an earthquake, or if it is a tsunami, if it is a flood, if it is fire, anything which happens to your house, as you pay the premium to us, later when you have any damage, according to the calculation of the insurance, we are going to compensate that loss, and you are not going to have any loss which has happened. So we are going to be the security against the loss. Got me? So I hope you got a small clarity what is indemnity. Indemnity speaks here that indemnity is what? Indemnity literally means security against loss, or to make good the loss, or compensate the party who has suffered from loss. Now, A has suffered from loss. A is getting the compensation from whom? Tata Insurance Agent or the company. I hope you are able to recall things. So this contract which is being done with A and the insurance company is the contract of indemnity. Picture clear? Very good. So the contract of indemnity is defined as the section 124 of the Indian Contract Act 1872. Fine. Very good. Now, as I told you, there are two people involved: indemnity holder, indemnifier. Now, you can guess who is indemnity holder and indemnifier? Say me. Indemnifier is what? Is a person who is promising you, that is the insurance company in this case. Here, in this case, it is the insurance company who is promising you to pay back or to compensate the loss. Hence, indemnifier is the B, or the insurance company, right? And the indemnity holder is who? Is A. Why indemnity holder? Means the indemnity contract is been done by this holder with whom? With the B. Hence, indemnifier is B, indemnity holder is A, or the indemnified is A. Hence, indemnity holder is having two words: indemnity holder or indemnified. Why it is called indemnified? It is called indemnified. Why? Because it is being indemnified by the laws. It is being safeguarded by the laws. It is getting the compensation for the loss which has been occurred to him. Fine. So this is the concept of indemnity. Now, basically, I'll tell you one more thing, one more small example. Let's go with the example. Now, before we go with the example, there are some things which are not covered in the indemnity contract. What are those things? First thing, the loss occasioned by the conduct of the promise or accident or any act of God or natural event. If these are the three conditions, this will not be covered in the indemnity contract. Got me? Okay, now let's understand some examples. What are the examples? Now, what has happened is this is Mr. Rao. Mr. Rao is who? Mr. Rao is a student. Okay. What he has done is Mr. Rao has done a contract with the government. With the government. Okay. Now, how do we go ahead? He has done a contract with the government that after his studies, like he is studying in US. He is studying in what? US. And what is he studying? He is studying some MS. Now, this whatever he has studied, the scholarship has been provided by the Indian government. Indian government. Now, how do we go ahead is there is a contract which has been done by Mr. Rao with the government, Indian government, telling that the Indian government is saying what? Indian government is saying, Rao, you can go and study in US, you complete your MS, not a problem. But after completion of your MS, you're going to come back to India and work for the government for minimum 5 years. Right? So you need to work for the government for minimum 5 years. So this was a contract which was done by Mr. Rao and the Indian government. Now, for example, if Mr. Rao is not coming back to India, fails to come back to India, then you say me what happens? Okay. If Mr. Rao fails to return to India, then what? Mr. Rao will have to reimburse. Will have to reimburse the government. Whatever amount, it has to be calculated and it has to reimburse the government. Hence, this is one case of contract of indemnity. Fine? Okay. One case done. Now, next case is next case. Now, what has happened is this is Mr. Y's fence. You people know what is fence? What is fence, you know? The campus or the area, which area of the house, or you know, it is being closed by the borders, right? Now, what has happened is this is a Mr. X has this house, and this is the boundary of the house. He has done what? He has planted a tree. Now, he has planted a tree. The tree is growing. It's growing. The branches are growing. I hope you are able to see my tree. Now, if you are able to see, the branches are growing and it's almost going to the direction of the Mr. Y's fences, right? Now, Here, what has happened? Here, situation is that Mr. Y has told X that because you have a tree in your garden and that tree is growing in a wrong direction, it is affecting my fences. It is affecting my fences. If it is affecting and it is damaging my fences, you have to reimburse about that particular amount of the loss. So this is one of the situation where what happens, where there is contract of indemnity, COI, or you can say CI, contract of indemnity. Got me? Fine. Now I want to say you one question. You tell me whether it is indemnity contract or not. Now what has happened is, this is Mr. Ram Ramesh, okay, Ramesh, Mr. Ramesh, and this is Mr. Suresh. Now, what has happened is Mr. Ram and Suresh are friends, okay. Ram said Suresh that you go and beat Mukesh. If you beat Mukesh, I will give you rupees 10,000. Okay, I will give you rupees 10,000 if you beat Mukesh. Got me? Fine. Are you understanding? Do you think this is a lawful agreement or lawful contract? Do you think that this is a lawful contract? Give me an answer. Ma'am, beating is not a lawful contract, right? So do you think this is a contract of indemnity? Think wisely and tell me. Think wisely and tell me. Now, I'm going to take you to that particular portion where it says, here it explains very nicely that when it is an unlawful agreement. See, I told you that it's the same type of example. Let's read it. A asks B to beat C, promising to indemnify him against the consequences. It's one example which says A is telling B, go and beat C. If anything goes wrong, okay, I will compensate the loss. So the promise of A cannot be enforced. Why it cannot be enforced? Because it is unlawful promise. The agreement is purely, the objective is not correct. The objective is unlawful. And when it is unlawful, it cannot be called as a contract of indemnity. Fine. One more example. Suppose B beats C and is fined rupees 1,000. B cannot claim this amount from A because the object is unlawful. You are understanding? It is saying B is beating C. Now A has told B to go and beat C. And B is really going and beating C. Suppose it goes really and beats C and is fined rupees 1,000. Can this rupees 1,000 be claimed by A? No. Why? Because this particular purpose is only unlawful. The object is unlawful. If it is lawful, then it can be. But if it is unlawful, it cannot go ahead. Fine. Boys and girls, are you understanding? Okay, now there are small things which you need to understand, that which type of, because I gave you an example of insurance in the starting. I think insurance example will actually relate you easily. So I said you, there are n number of examples which I think I have made you understand. Now, life insurance is not a contract of indemnity. Boys and girls, very important MCQ can be asked, that contract of indemnity does not exist in life insurance. Got me? A contract of fire insurance, marine insurance can be contract of indemnity. So fire insurance, marine insurance can be a contract of indemnity. As I made a note, you also make a note. Put a star mark or write there MCQ. Then only when you read again, you can relate it as an MCQ, and in your mind, there will be an MCQ question asking you that how this question can be asked. This particular sentence can be asked in which way of MCQ. That can be a portion which can be coming to your head in the next time you read. Fine. Now, so as I said you that there are, we read is the portion when it is unlawful. Now let's understand that what are the essentials of a valid contract. Okay, as I said you, the valid contract essentials are being read in our basics, that is in the CA-CPT level or the foundation level, right? That's just to recall us, we're going to read it. So a contract of indemnity is purely made by some particular 10 to 12 essentials. What? First, it should be an offer. Now you tell me, now when you are doing, A is doing a contract with B, if B is giving an offer, B is saying there is an insurance offer, okay? When only when A is accepting this offer, it becomes an, it becomes a, it becomes a agreement. It becomes a agreement, and then it becomes a contract. Got me? So here comes the offer and acceptance. Next, it should have an intention to create legal obligation, not unlegal. Only purely legal and legal. Okay, there should be a proper consideration. Now you tell me, if A is not going to give anything, and why will B do anything or support A if there is any loss? Think logically, guys. If in this whole world everything is give and take, right? So when you are giving something that is a premium, then only B is giving you an offer and saying, sir, this is an insurance product. We have this product and we are giving you this facility. Right. Next, competency to contract. There should be a competency of contract within two parties. There should be free consent. You cannot force anyone to do this thing. No, it should be from heart, from mind, and from whatever these situations, they should accept it only. It should not be with any, like, you know, you show a knife and say you have to accept. No, this cannot be done. Okay. Next is, it should be a lawful object. No unlawful purpose. Unlawful purpose is not acceptable, guys. Unlawful purpose, boys and girls, class, please understand, unlawful purpose not acceptable. These can be any way. MCQ can be asked, and small MCQ can be asked. They can twist your mind and say, and you get confused. Please properly think and give your answer. Next, an agreement. An agreement must not be expressly declared to be void. Okay, so an agreement in the restraint of trade and marriage, etc. The terms of agreement must not be vague or uncertain. Means it should not be, it must not be, it must be clear. It must not be in confused mind. It should not be in haphazard. It should not be in whatever they want, they can give the agreement. No, it should be pure, clear, and it should be with the two people's acceptance only. The agreement must be capable of performance, and the agreement to do a impossible is void. Remember this point. This can be an MCQ. What? An agreement to do an impossible is a void agreement. There should be purely and proper legal formalities involved. Fine. Now let's understand. What we are going to understand is there are two people involved. What are they, guys? What are they? Repeat with me. Indemnity holder and indemnifier, right? Indemnifier is the person who is safeguarding the indemnity holder from loss, and indemnity holder is accepting that particular situation and giving some particular consideration to it. And what it is doing, it is preferably is the party who is promised to be saved against the loss. And indemnifier is who? Is the party who promises to indemnify or save the other party from loss. Got me? Very good. Now let's understand what are the different rights of the indemnity holder or indemnified. I already said what is indemnity holder. Obviously, we are going to understand is some rights. See, when there are two people involved, when are two parties involved, we have to also understand what is the basic rights of each particular party. So first right we are going to understand is the rights of the indemnity holder. Who is indemnity holder? Indemnity holder is the person who is being promised to be saved. Who is being what? Who is being promised to be saved. Clearly understand, who is being purely promised to be saved. Okay, hence it is also being named as the indemnified. Okay, so we are going to understand is what are the different rights you have. What are the basically what are the different rights of the indemnity holder or the indemnified when sued. Okay, so there are small rights. There are just three rights, simple rights. It is section 125 speaks about these rights. First one is the right to recover damage. Second, it is the right to recover cost. And the third, it is the right to recover from other payments. What I prefer you people to remember, see, how do you remember? You remember it this way: RDOP. RDOP. What is R? R for recover, D for damage. Sorry, it will be not O, it will be C. It will be C. Okay. Recover damage, recover cost, recover other payments. Okay. So RDCP. RDCP. Okay. RDCP. Why did I say RDCP? Because R is common for those three, so that it is easy for you to understand. Recover damage, recover cost, and recover the other payments which you are done. Okay. Now, first one is the right to recover damage. Now, indemnity holder is having the whole right to recover the amount of damage. From whom? From the indemnity. Indemnity? No, not indemnity. From the indemnifier. Understand this thing. If you're not able to recall it easier, remember this point. Remember this particular small example. You'll understand. Okay. Okay. So indemnity holder is what? Indemnity holder has the right to recover damage. Why it is having the right? Because it is done a contract. It is done an indemnity contract. Got me? Okay, simple. So indemnity holder is entitled to recover the amount of damage which has been compelled to pay to another party in a suit to which the contract of indemnity is applicable. So it is saying that, so when an indemnity holder is entitled to recover means get the whole amount of damage, the amount of damage which he has been compelled to pay, means he has been told, like, see, indemnifier would have told that, sir, this is the damage done and I'm going to recover this particular damage, right? So whatever the damage amount he has said, okay, if he is not able to, then the indemnity holder has the whole right to recover the damage from the other party. Okay, in a suit to which the contract of indemnity is applicable, means in a case if he is not able to, then in a case he can also compel, means he can force the other party, that is an indemnifier, to give the amount. Next, recover cost. What is recover cost? Recover cost means the indemnity holder. See, one very important thing, remember, this particular rights, all the three rights are almost the same. The explanation speaks, it's the meaning is the almost the same. This is the small difference. You have to write the whole sentence. Got me? The indemnity holder is also entitled, means indemnity holder has the whole right to do what? So to do what? Is entitled to claim all the costs which he has incurred for defending himself in the suit to which the promise of indemnity is applicable. Means if in a case, if he has gone to a court and in a case he has, like, he has occurred some 20,000, 30,000 cost. Why cost? Obviously he has, the indemnity holder has occurred damage, and the indemnifier has not given the compensated the damage or not made good the loss, right? If this is the case, the indemnity holder can go to the court. Okay, he can go to the court and give all the particular reasons, and if there is any cost which has been occurred by him while defending the case, then it is the right of the indemnity holder to get back all the cost which he has done on that particular case. Got me? Very good. Now, next is the right to recover other amount, other payments. What is other payments now? In the contract of indemnity, if the indemnity holder has made any payment to another party means third party. Okay, on the compromise of that suit, means on the compromise of that case to which the contract of indemnity is applicable, is entitled to recover such payment from the indemnifier. Now, think A and B have an indemnity contract. Okay, A has given some payment to this third party. Okay, in the contract of indemnity, if the indemnity holder has made any payment to another party on the compromise of that suit to which the contract of indemnity is applicable, then what happens? is B is fully liable to give all the other payments even. Got me? So indemnity holder has to act as a person of reasonable prudence and comply with the order of indemnifier. Such compromise has been allowed by the indemnifier. Now, what are the three rights of the indemnity holder? As per section 125, ma'am, it says that it can happily recover the damage from the indemnifier. It can recover cost from the indemnifier. And what is recover cost? Recover cost means if there is any extra cost which has been occurred during the case, during defending the case. Okay, at that point of time, whatever the cost which has been occurred, those costs can be given by the indemnifier. Next comes the right to recover other payments. What is other payments? Other payments here refers to if there is any payments which has been done by the indemnity holder to any third person, to any third person on the compromise of the suit. On the compromise of the suit means to just settle down the case, settle down the issue with the indemnifier. If there is anything which has been given by to the third party, then that particular amount or that particular amount is called the other amounts. That other amounts should be also paid by the indemnifier. So these were the rights of the indemnity holder. Guys, going good? All okay? Have water? You feel lighter? And then we go ahead with the next sections. Now, there is one small thing which normally comes in our head, that is, when does the liability of an indemnifier commence, with an illustration. Now you must be thinking that this is indemnity holder, this is indemnifier, right? When will the liability of the indemnifier arise, right? So, in our Indian Contract Act, this particular commencement of the liability of indemnifier has not been given properly. It is totally silent. Okay, it is totally silent. Now, how do we understand? Is the liability of the indemnifier commences or starts as soon as the liability of the indemnity holder becomes absolute. Absolute means zero or certain. Absolute, certain, or done. It's done. The principle has been followed by the court in several cases. This particular principle is being used by many cases in India, and they are going ahead with this particular principle. How is that? When the indemnity holder's right or the liability, the indemnity holder becomes absolute, totally absolute, clean, clear, and certain. When this is the case, at that particular time, the liability of the indemnifier begins. The journey of the liability of the indemnifier begins, guys. Okay, chalo. Let's. I hope you have understood the very, very necessary things which we require for the contract of indemnity chapter. Just cutting short, there's small points which we need to understand. Okay. So just recalling those points for you people. So what is done? What is contract of indemnity? Just in short, in brief, in some minutes, we are going to complete this particular contract of indemnity. If one party promises to save the other from loss caused to him by the conduct by promisor or any person, it's called contract of indemnity. It's also known as security against the loss, or making good the loss, or compensating the other party from any loss which has been occurred, right? What are the two parties involved? It is the indemnifier and the indemnity. It is the indemnifier and the indemnity holder, right? Who is the indemnifier? Indemnifier is the person who promises to save. Indemnity holder is also known as indemnified, and he is the person who is promised to be saved, right? Now, one more thing, contract of indemnity can be of two types. It can be express, it can be implied. What is express? Express means when we are speaking or orally saying it, and it can be indemnity contract, it can be oral, it can be written. That is express. What is implied? It is done with the conduct of the parties, right? What is right of indemnity holder? The right of indemnity holder has 3 points. That is, first one, the indemnity holder has the right to recover. See, as I said to you, recover the damage, recover the cost, right? Recover the other payments. Done? Got me? So all good. Going ahead with the next chapter. Okay, so let's go with the next chapter. But before that, just take a 1 to 2 minutes break. Understand, like, just if you want to, you can just go back to those things where you actually read the chapter. It's very easy, very nice. Calm your mind, refresh yourself, come back again, join us with the next chapters marathon. Okay, till then, take care. Okay. So we are continuing with our marathon lectures, and we are in the second chapter of the Indian Contract Act, that is the guarantee chapter, right? So everyone ready with the guarantee chapter, right? All set? Shall we begin? Okay, good. So what we do is we are going to do the guarantee chapter. I hope you have all revised, recalled, and refreshed your mind now. Coming to the contract of guarantee, as you can see on the screen with my notes, we are in the contract of guarantee. And here it is saying about section 126 onwards. Okay, we go understand with the section 126 and go on with the later sections. Now, what is contract of guarantee? As the name suggests, it is saying about a guarantee, or it is saying about some surety, assurance, or surety given by one person to another, right? In simple words, I told you now, right? So let's understand this with a easier example. How do we go ahead is, see here only I'm explaining you, making it a little bit big so that you can understand. And if you have not written this example, you can write down nearby so that when you read again, it's easier for you to grasp the concept, right? Easier concept I'm saying you, very, very easy. Now what has happened is, this is Mr. A. Mr. A, okay, this is Mr. B, and this is Mr. C, okay. Now what has happened is Mr. A is requesting or advising or saying B to pay rupees 10,000 because C required some help. A is requesting B to pay rupees 10,000 to C. That means, in short, you can say the rupees is going from B to C, right? Yes. Yes or no? Yes, ma'am. Now, as and when B is paying rupees 10,000 to C, it is a liability of the C to recover this amount again to B. Right? C wanted rupees 10,000. In some case, some requirement was there. He didn't have money. So C wanted 10,000. Hence, A had requested B to give 10,000 to C. Fine. Now, again, with this request, also A explained one thing, that is, in case C is not able to pay back your 10,000, remember, C is not able to pay back your 10,000, then I will ensure and pay you the whole rupees 10,000. Now, understand it in a deeper way. What do you understand? A is giving a guarantee. To whom? To B. For what? For the amount he paid to C, that is 10,000. In case C is not able to give back rupees 10,000 to B, then A is assuring B that don't worry, I am going to pay you the 10,000, right? So now you tell me, with this small concept, basically it's a very beautiful and a very small concept, not to worry. So if you are understanding this concept, don't you think it is some assurity, some promise given to one person, right? Don't you think it is a surety or assurance given by one person to another person, right? So here the contract of guarantee comes into our law, that is in section 126. It speaks about, it is a contract to perform the promise made, or discharge the liability of the third person in case of his default. Okay, Fine. I hope you understood. Now, I'm giving you another example. Okay. Now, example we are reading. Okay. We have Mr. Boss. Okay. We have Mr. Boss, a person. What he has done is he is in need of what? Of a education loan. Why does he need an education loan? He is married. He has kids. One kid is going to study after 12th. He wants to pursue some good education and he is not having that much of money. So he is going to a bank and asking for an education loan. So here comes the bank. Here comes the bank. Bank is saying that if you, Mr. Bose, if you require the loan, education loan, you need to provide me these details: Aadhaar, PAN, and then driving license, education certificates of the son, okay, and many more things. Now, this bank is ICICI Bank, okay. This bank is ICICI Bank, and obviously any bank it is, whenever he is giving loan to any person, the bank is going to check many details like, past history, and he's going to check the income and expenses of Mr. Bose and many other details. After detailed explain, like, detailed history by the bank declared that Mr. Bose able to get this particular education loan. Due to his past history, he has income, but the point is that he has more expenses than income. That means whenever he's going to take any loan, he is not in a criteria, or he is not in that eligibility to pay back it in easier way. Hence, the bank is not going to do any risk, not going to take risk. Hence, it directly said that Mr. Bose, the you're not going to get the what? Loan, right? Yes. Okay. Now what happened? Mr. Bose is in urgent requirement of the loan. Mr. Bose said, bank, can you please give me some other way? How do I get loan? Bank gave an idea. Bank said, if you're going to get me a good and important person who is going to guarantee that you are going to pay me the loan back plus interest, then only I can assure you the loan. Now, Mr. Bose went to the guarantor and requested the guarantor to come to the bank and tell on behalf of Mr. Bose that Mr. Bose is able to going to give the loan back plus interest. But in case Mr. Bose is not able to do so, the guarantor will ensure or will pay back the loan, pay the loan amount plus the interest. To whom? To bank. If this is the scenario, if this is the case, only then ICICI Bank is going to give them loan. Here, you tell me, people, you tell me, there are how many parties involved? 3 parties involved, right? How? One is the guarantor. Next is the creditor. Next is what? Semi. Guarantor, creditor, inka? Who? What else? Let's see in our book what is given. I hope you have understood till now. You have the surety, that is the guarantor. You have the surety, that is the guarantor. You have a creditor, you have a debtor, principal, debtor. So when these are the three parties which are involved in a triangle base, if you see, it is boss, Mr. Boss, it is bank, and it is the guarantor, right? These are the three people. So now you tell me who is guarantor, who is debtor, who is creditor. Easy to understand. Bank is the creditor, right? Miss Guarantor is the surety, right? Mr. Bose is the debtor. So if you are able to understand these three words, which we are going to understand in our little bit ahead in our discussion. Three parties involved in our contract of guarantee are debtor, creditor, and surety. Okay. In every situation, you'll be having these three parties involved in the contract of guarantee. In the contract of guarantee. Okay. Now, let's go to the book once. Okay. So, if you see down, we have the three parties involved. You see this? Principal, debtor, surety, and creditor. Now, who is principal debtor? Now, if you are able to understand this example, Mr. Bose, bank, and Mr. Guarantor. You know, Mr. Bose is the debtor, surety is this person, creditor is this person. Means what? Think. Creditor means the person who's going to give the loan. Means a person whom the principal debtor liable to pay. Means Mr. Bose needs to pay back the loan to bank. And bank is allowing Mr. Bose to pay back it. Getting me? If Mr. Bose is not able to pay back, it is the guarantor who is going to pay the loan to the bank. Hence, a guarantor is the surety, the person who is safeguarding, who is assuring, who is giving us promise, who's taking a pure responsibility in paying the obligation. In case this promiser, this is the promiser who is not able to pay. Promiser is principal debtor always. If the principal debtor is not able to pay, then comes the guarantor and the surety. Got me? Okay. Now, who is principal debtor? Principal debtor is a person or a person liable to pay the debt or discharge obligation. Means he wants the loan. Principal debtor is a person who wants loan, right? So when he wants loan, he is promising. He is going to promise the creditor that he is going to pay back. But in case he is not able to pay back, he has to get a guarantor or a surety to make sure that he is getting that particular service done on time. Fine. Hence, in this particular situation, we are coming across the three types of contracts. Okay. So it is called a three-party agreement. What is the agreement? Three-party agreement. Principal contract. The first one is the principal contract. Second is the primary contract. Second is secondary contract. Third is the implied contract. First contract is what? It is done within the principal, debtor, and the creditor. Example, remember, that is Mr. Bose and bank. You able to realize? I have told you in the starting that you have to keep talking. You have to keep mentioning names when I'm giving a pause, right? Next, secondary contract means the contract which is being secondly done in this guarantee is the contract between the creditor and the surety. Creditor here is what? The bank. Surety is that Mr. Guarantor, right? Very good. And this is an implied contract, means it is implied or it is giving an implication that this contract should be done. Fine. So what is it? It is a surety and the principal debtor. Means here it is a print. Fine. Got me? Everyone? Sure? Okay. So we have small thing, that is, there is always a consideration for guarantee. Okay. What is consideration for guarantee? Now, basically, that it happens is, consideration here speaks about any promise made or anything done for the pure benefit of the principal debtor, then that is called a consideration for guarantee. Means any promise made or anything done for benefit, okay, benefit of the principal debtor. Remember, for the benefit of principal debtor means for the benefit of Mr. Bose. That is called as the consideration for guarantee. Now, one more thing. If a guarantee without consideration, then it is a void guarantee. Means a guarantee without consideration is void. But very necessary and very important, that is, this MCQ can be asked. What is it? It says that a guarantee without consideration is void. Okay. But there is no need for a direct consideration between the surety and creditor. Okay. It is saying that guarantee without consideration means a guarantee without consideration is always void. But there will not be a direct consideration between surety, that is the Mr. Guarantor, and the bank. Realize that situation, the example which I said, and you will go ahead with me. Okay, fine. Now coming down, there are some related essentials as we read in the indemnity contract. We have some more rules, some more essentials which are required for a valid guarantee. Means for making a guarantee valid, there are some rules to be followed. Okay, so there are some 6 rules to be followed. If you see this particular material, as per ICAI, we have 6 points to be followed. The first one is existence of principal debt. Now you tell me that if you do not have a debt, if no debt, then will there be guarantee exist? No, right? No debt, no guarantee. If there is debt, then only there will be guarantee coming. Means there will be Mr. Guarantor or surety coming to this particular situation. Simple and easy. Next, primary liability of some person means the principal debtor is primarily liable. Okay, principal debtor is very important and necessary. Why principal debtor is liable? See, as I said you, it is Mr. Bose. Mr. Bose is having the promise, means he is only the promiser. So he is the first liable person to pay the loan. To whom? To bank. But in case he is not able to pay, then comes the Mr. Surety to pay the loan. Got me? Fine. Okay. Next, there is writing not necessary. Means it is said that all, as you read Indian Contract Act, Indian Contract Act is having a very important essential characteristics. It can be an oral or it can be in written. It is never there that it should be necessarily mandatorily written. No, it can be expressed, it can be implied. Hence, the contract of guarantee is one part of Indian Contract Act, which says it can either be oral, it can be also written, right? Now, next Next is joining of other co-sureties. And then you have no misrepresentation or concealment. Okay, now very necessary. Remember these two very important points. We have a important discussion on these points, so we'll discuss it at that particular page numbers when it comes, right? Okay, now coming down, we have the last point is the consideration. The benefit of the principal debtor is a sufficient consideration, but past consideration is no consideration for the contract of guarantee. It is saying there should be a sufficient consideration, which I said you. If there is no consideration, it is not valid, right? Now, coming down, we are going to understand basic difference between indemnity contract and the guarantee contract, which is very simple, very easy, guys. Okay, so how do we go ahead? Meaning of it. So what is indemnity meaning? It is what? It is a contract. Yes, very good. It is having how many people? It is having one person who is agreeing to save the other from the loss, right? Who is, what it's doing? It is agreeing to save the other from the loss or the damage, right? But in the contract of guarantee, what happens? It is the surety who is assuring that in case the principal debtor, who is primarily liable, is not able to pay back, then the guarantor comes into and pays. So, right? Done. How many parties involved in indemnity? Two parties. Indemnity holder, right, and the indemnifier. Here guarantee has three parties. It's the surety, it's the principal debtor, it's the creditor. Very good. What is the scope? It is a narrower scope, and this guarantee is a broader scope. Very good. What is the nature of liability? The nature of liability of the indemnifier. Indemnifier means the person who is promising to safeguard is primary and independent. In case of the guarantee contract, the liability of the surety is secondary as the primary liability of the principal debtor. Okay, so what it says, as I said you, the principal liability, primary liability is of whom? Is of principal debtor. In case primary liability is not being doing the thing, then comes the secondary liability, that is the surety. I mean secondary option, that is the surety. Fine. Then go ahead, we have the liability, the time of liability. The liability of the indemnifier arises when it is only when the happening of the contingency. Okay, it means when the indemnity holder is become absolute. You can write it here, absolute and certain. At that particular time, the indemnifier's liability arises. Here in this case, the liability already is in existence, specifies the and specifically crystallizes when the debtor fails to do so. Time to act, the indemnifier needs not necessary to act request of indemnified. The surety must act by extending the guarantee at the request of the debtor, right? Done. Next, number of contracts, there are, you can say, only one original and independent contract. There are three contracts, right? What I am telling is an easier way to understand, hence you can read those points only. Next, competency contract, all the parties must be competent to contract. Here in case of the contract of guarantee where a minor is a principal debtor, the contract is still valid. Okay, it is still valid, guys. Okay, fine. Now coming down, we have some RTPs, MTPs, where you can see that there is November 2020 question asked about this difference. So it's important for you to remember. Then we have some case studies here, which is saying whether it is a guarantee contract or not. It's easier to understand. Do not worry. It's very easy. Then we go down to explain briefly about what are the different types of guarantee. So for your good information, there are two types of guarantee: specific guarantee Continuing guarantee. As the name suggests, specific guarantee means it is saying about a specific or a single net or a specific transaction. Okay, continuing guarantee is saying about a repeat or a series of transactions. Single, here it is series of transactions, right? So means what? For example, it says about, you have a very nice example in our study mat. It says what? It says that, let's read that example, then you get a clarity on it. Okay, it says A guarantees payment to B of a price of 5 bags of rice delivered by B to C. Means what? You have A, you have B, you have C. Okay, what it is saying, read again. A guarantee. This is how you read. First you read it, you will obviously not understand. Basically you not understand, don't worry. Don't have to get worried that I'm not able to understand as examples, ma'am, not able to understand the case studies. How do you read in exam also? If this is a question, read it, okay, and stop there. Then again slowly read. Find out what are the different parties involved. Write it there in the pencil if you can, or in the pen, wherever you can, in the paper or in the question paper, answer paper or question paper. Then slowly find out who is doing what position, who is of what position, like as I did, A, B and C. A guarantees payment to B, means A is what? Guarantor. Fine. Payment to B of the price of 5 bags of rice to be delivered by B to C, means what? A is the guarantor. Okay, B has to deliver that pack of rice, to C. And if C is not able to pay the amount to B, then A is going to do the, A is the guarantor, right? Now let's see what is there. To be paid for in a month. Okay, in a month, in 1 month. This guarantee assurance was done that whatever 5 bags of rice is there in a month. Okay, remember. Next, B delivers 5 bags to C. B is going to deliver this 5 bags of rice to C. C pays for them. C is paying back. C is becoming good. C is paying back for the 5 bags of rice. Very good. This is a contract of specific guarantee because A intended to guarantee only for the payment of price of the first 5 bags of rice to be delivered in one time. Remember? Okay. It is saying that if it is just specifying single time only, the guarantee has been done by A, telling that if these 5 bags are to be done, it will be paid by me in 1 month. After that, whatever it is not my case. It is your wish. You want to give that bags to C, or you want to receive or not receive money. Understanding clearly specific guarantee it is. What is continuing guarantee? Continuing guarantee and the same type of thing, which is like here, if you see, continuing guarantee means the series of transactions are continuing continuously. There is one or the other series of transactions going on, and hence this is the contract of guarantee which happens. Okay, here if you see, A guarantees the payment to B. A, B, a tea dealer, to the amount of rupees 10,000 for any tea he may from time to time supply to C. It's saying whatever tea you are going to supply to C, whatever the amount, any time, like in a day 20 times he asks for tea, I am going to pay that thing. Okay, if he is not able to pay, I'm going to pay. B is supplies C with T to the above value of rupees 10,000, means rupees 10,000. Okay. And C pays B for it. C is paying rupees 10,000 because that was the amount which was occurred for the T. And C is good enough. He paid it. Next. Afterwards, B supplies C with a T value of 20,000. C fails to pay. C is not able to pay this rupees 20,000. The guarantee given by A is a continuing guarantee. Why? Because it is saying from time to time supplied to C. It is not given any specific period. There is no mentioning for a month or 2 months or 5 months or 20,000, 10,000 value. No, if there is no mention and it is continuing going on, then it is A who is becoming the guarantor or the surety for this particular case. I hope you are understanding my language. Okay, fine. Let's go ahead. So this is how you understand this examples. This one example, say third example also, it's almost the same thing. Okay. Okay. When can be a termination or revocation of continuing guarantee? Okay. Continuing guarantee may be revoked at any time by the surety, by giving notice to the creditor or the debt of the surety. It can be done by two ways. When it is by giving notice, telling that I'm not going to take care of your guarantee. Next is by the death notice of surety. Fine. At this point, there can be revocation or termination or withdrawal of continuing guarantee. Got me? Is it clear, boys and girls? Am I going fast? I don't think so, but still. Okay. So let's continue. We are doing the chapter called contract of guarantee. As you know, there are three people involved in the contract of guarantee. What are the three people? The first one comes the principal debtor, second comes the creditor, and then comes the surety. You know what the name suggests? I already explained. As you can see, these three people are there, so it is called a three-party agreement even, right? Now going ahead, we have to understand is what is the surety's liability. As you people know, the primary liability is on the hands of the principal debtor, right? Why it will be in the hands of principal debtor? Because the principal debtor is the person who is promising the creditor to pay back. But in case the principal debtor is not able to do so, then comes the secondary liability, that is the surety, who is going to have the same type of effect. Means the surety's liability is the coextensive with that of the principal debtor, right? Coextensive with that of the principal debtor means the liability of the principal debtor, in case the principal debtor fails, then it is the surety's responsibility to pay back the creditor, right? Hence you say that section 128 here speaks purely that surety's liability arises on the default by the principal debtor. Remember these words, boys and girls. Remember, very, very necessary. I'm saying it arises at the time principal debtor fails or not able to recover, right? What does it arise? Surety's liability. This is section 128. What does section 128 say? Section 128 purely speaks about it arises only when the principal debtor fails or not able to recover, right? So here it also mentions one thing, very, very necessary word, that is surety's liability is a coextensive, okay, coextensive with that of the debtor, with that of the, with that of the principal debtor. PD here is principal debtor. Anytime I have written PD, I'm not written the full thing. Do not worry, it's seeing only about the principal debtor, right? So very, very necessary. Surety's liability only arises when the principal debtor is not able to pay or fails to do so. Okay. Hence, it is the surety's liability is an extensive with that of the principal debtor, right? Okay. So now very important is this liability can be maybe of three ways. It can be limited liability, it can be a continuous liability, or it can be a conditional liability. As I already have mentioned, the different types of guarantees, you remember the different types of guarantees, you have the specific guarantee and the continuous guarantee. In the same way, you have the limited guarantee, which says it is very much restricted within the range and it is up to that period only, like that period or that limit, whichever is being mentioned. Continuous means it is having a series of transactions which keeps on going. Conditional here speaks about what? Conditional says about a particular condition, as and when that condition is over, the surety's liability is also over, right? Okay, there is one more important point here in section 128, which says the creditor. Who is the creditor? In our example, the bank is the creditor. Remember the example once again. Mr. Bose, bank and the guarantor, right? You have three people. The boss is coming to the bank, ICICI bank, and saying that I need loan. That is education loan to make his son study in a good college, right? The bank is saying due to your past history you are not getting this loan, so bank is just requesting or advising the principal debtor, that is Mr. Bose, to get a guarantor. That is guarantor here is the surety. Here, as and when surety comes and the surety assures that if the Mr. Bose is not able to pay back the loan with interest, surety is taking care of it, right? So here the creditor may sue the surety directly. Remember, very important point. What is the point? Here the creditor may sue. Creditor can file a case against the surety. Against the surety, important point, okay? Against the surety. Fine. So it is saying the creditor has the whole right to sue the surety directly without giving any notice or filing suit against the principal debtor. So two things, when the surety, like, when can the creditor sue the surety? Two things. It can be possible, right? It can possibly be done anytime without giving any notice, or without filing suit against the principal debtor. Means normally what happens is some people have a thought process that if principal debtor has got a if the creditor has filed a case against the principal debtor, then only the surety will be liable. No, no, nothing such. The creditor has a whole right to sue. I mean, file a case against the surety directly without even sending the notice, or or filing a suit against the principal debtor, right? So this was about the surety's liability. Coming again short in just some 30 seconds, let's complete it. Section 128 speaks what? It purely speaks about the surety's liability, and surety's liability arises when, guys? When? Recall, it arises when the principal debtor is not able to pay. Okay, hence it is called the coextensive with that of the debtor. And this thing can be of three ways. It can be limited, it can be continuous, it can be conditional, right? The creditor may sue the surety directly without even giving a notice or filing suit against the principal debtor. Now coming down, in short, we are going to discuss what are the different rights of the surety. The first right is the right against the principal debtor, right? The what happens is this sureties the surety's rights have been divided into three important combinations. What is here we mentioned is the principal debtor right against the creditor, right against the co-sureties. So what does it say? Right against the principal debtor. Right against the principal debtor is saying about if the principal debtor commits default, the surety pays the debt to the creditor. This is a simple and easy language, right? The surety steps into the shoes of the creditor. Remember, surety is doing what? Surety is stepping into the shoes of the creditor, and the surety will avail all the rights which the creditor has against the principal debtor. Fine. Okay. So, let's deeply understand the right against the principal debtor. Right against the principal debtor. The first right speaks about the right of subrogation. Okay, right of subrogation. Right of subrogation. What does right of subrogation speak about? Right of subrogation here speaks about substitution. Right of substitution. What does it happen? What does it say? It purely says that this right is known as right of subrogation, as it means that on a payment of guaranteed debt, or performance of guaranteed duty, the surety steps into the shoes of the creditor. What does it say? The right against principal debtor means the first right here is right of substitution, means the surety is going to step into the shoes of the creditor. That means it is substituting its place, right? So what it says where a guaranteed debt has become due. Due means what? It is not being paid, right? Or default of principal debtor to perform the guaranteed has taken place, means there is principal debtor had to pay the creditor, but the payment has not been possible. Why? Because it is due, first thing, or the default has been made in some wrong way. Okay, there is some issues with the payment. Okay, then what happens? The surety upon the payment or the performance of all that he is liable for and is invested with all the rights which the creditor had against the principal debtor. Means it is saying here comes the surety who is going to come into the come into the shoes of the creditor, step into the shoes of the creditor and understand the creditor's pain, and then pay those particular amount of things which are required for the creditor to be got from the principal debtor. Got me? Okay. Coming down, we have section 145. What is section 145? Section 145 is very easy. It is saying about implied promise to indemnify surety. Means there is some promise which was made by the principal debtor to indemnify the surety. There was some promise which was made by the principal debtor to indemnify the surety. Okay, the surety is entitled to recover from the principal debtor whatever the sum he has rightfully paid under the guarantee, but not the sums which were wrongfully paid. Means it is saying the surety has the whole right to recover those amounts which the principal debtor had told to pay, right, in a rightful manner. Any wrongful manner, it will not be possible. Now let's go and understand one small example. This is the example. This is an easy example. Let's understand. A guarantees C. See, here you have A, you have B, you have C. Okay, A is becoming a guarantor, guarantees C to the extent of rupees what? Rupees 2 lakhs. Okay, fine. Payment rice to be supplied by C to B. Supply of rice is done from whom? From C to B. Okay. And the payment will be given, like A is saying that if B is not able to pay, then A is guaranteeing on behalf of B and is going to pay 2 lakhs. Fine. Now, C is supplying. C is doing what? C is supplying. C is supply rice. Okay. Rice to a less amount than rupees 2 lakhs. C supplies B but less than 2 lakhs amount rice. Okay. But what happens? Obtains from A payment of the sum rupees 2 lakhs. Why? Because here A had purely guaranteed that to the extent of rupees 2 lakhs, payment for rice to be supplied by C to B. If B is not able to, then A is going to pay. Fine. C, in short, supplied a less amount than 2 lakhs rupees. Okay. In respect of the rice supplied, A further cannot recover from B more than the price of the rice actually supplied. You understanding? A cannot recover from B more than the price of the rice which was actually supplied. Hence, whatever the supply was done, think it was done for 1.5 lakhs only. Then B will pay only 1.5 lakhs. B will say that it was you who guaranteed 2 lakhs. I didn't never say. Right. So when C has given me the amount of rice, the quantity of rice or the amount of rice is 1.5, then I will give him 1.5 or I will give you 1.5. It is your wish why you took 2 lakhs. Right. So this is how the A answers B, and this is how there is a guarantee contract between A, B and C. Got me? So what are the things we have is we have right against the principal debtor. Under this right against the principal debtor, there are two important rights. The first one is the right of subrogation, which says about right of substitution. What it says in short, it says about it is entitled to all the rights which creditor could claim against the debtor. Important, remember, it is entitled means it is having all the rights which a creditor could claim against the debtor, which the creditor claims against the debtor. Next right is the right to indemnity or right of indemnity or implied promise to the surety, right? So it is entitled to all the or to claim all the sums rightfully paid. No wrongfully paid amount will be done, right? Fine. Next right is the right against the creditor. In this right against the creditor, there are two important rights. The first right is the right to claim securities. Second right is right of set off. Now, to cut short and easily say, right to claim securities means it claims security which the creditor had. Means the creditor had some securities, right? So it is saying it has the right to claim securities speaks about it is claiming the securities which the creditor had. If returned, discharged to that extent. Okay, let's understand in a proper way. Now, the surety's right to benefit of creditor's securities, section 141 purely says what? It says that a surety is entitled to benefit every security which the creditor has against the principal debtor. Every security which the creditor has against the principal debtor at the time when the contract of suretyship is entered. Means there is contract is entered at that particular time only. Whatever the surety is entitled to be benefited of every security which the creditor has against the principal debtor, whether the surety knows of the existence of such security or not. Even if the surety knows about it or not, if the creditor loses without the consent of the surety such security, the surety is discharged to the extent of the value of the surety. So let's understand. When you understand this example, you will get it more easier way, right? So we have to understand this section 141 in an example and it will be easy. Now I am saying you an example. This only example we will understand in a graphical way so that it's easier for you to grasp it. Okay. So let's read the example once, whatever is there as per the material, then we will do it. Okay. C advances to B. Okay. C advances to B. His tenant. Okay. That means B is the tenant. B the tenant. B is the tenant. Okay. Rupees 2 lakhs on the guarantee of A. On the guarantee of A means A is the surety. I hope you are there with me. Okay. Now, C is what? C is the creditor. C creditor. B is the principal debtor. Very good. We got three parties. Now, C has also a further security for rupees 2 lakhs by the mortgage of B's furniture. Before this, we have not written this particular thing. So we are going to write it. So C advances to B. C advances to be 2 lakhs on the guarantee of A, right? Very good. Now with this, it has a 2 lakhs mortgage loan. Okay, 2 lakhs mortgage loan of B's furniture. Fine. Now after some time, C is cancelling this mortgage furniture. Okay. It is cancelling this mortgage furniture. B is becoming insolvent. And C sues A on his guarantee. Means files a case. C is filing a case on A's guarantee because C is worried B has become insolvent. Who is going to pay? Hence, he started to file a case and he sues A and says C says A, that is the surety, that you have taken a guarantee of B. Now you pay me back. Okay. Now what happens is, what is the liability of A to be paid to C? It is only simply 2 lakhs. Why? Because already this 2 lakhs, which was a mortgage loan, which was already cancelled, right? Hence, A is discharged from the liability to the amount of the value of the furniture only. Got me? Discharge means cancelled or revoked. Got me? So this is one example which says about the surety's right to benefit the creditor's security. Hence, it is the creditor's security. Okay. Hence, it is the surety which has the right to what to do? To ensure, to see the surety's right to benefit creditors' securities. To benefit creditors' securities. Next particular example is right to share reduction. Share reduction is what, there's nothing much. The surety has a right to claim the proportionate reduction in his liability if the principal debtor becomes insolvent. As in, when the principal debtor is insolvent, right, he has, the surety has the whole right to claim the proportional reduction in his liability. Next comes right to set off. How do you set off? If the surety sues, if the creditor sues the surety, here if you see, the creditor is suing the surety. In this case, you see, no, in this case, you see, creditors use the surety for payment of principal debtor's liability. The surety may have benefit to set off if that principal debtor had against the creditor. He has the right to do the set off of it also. Okay. Fine. So I think you have understood what are the right against the creditor. The right against creditor, very important, is the two rights, that is set off and the surety's right to benefit the securities of the creditor. And the last one, if you don't remember also, it's absolutely fine, is the proportionate one. Okay. That is the share reduction one. If you don't remember, it's also absolutely fine. Now you have this particular example which says that, you know, it's almost the same thing, having the mortgage and then C sues A, same, almost the same. You had this in the study mat, and November 2019 this was asked in 4 marks question. So properly read it. If you just remember this thing, you will really do wonders. Now coming down, we have the last right, that is the right against the co-sureties. What is co-sureties? You people know what is surety. Surety means one person. When there is additional one person who is going to become a surety also, in a particular case, there is always one surety, one principal debtor and one creditor. But when there is an additional surety, then it becomes co-surety. Right, it can be one or two or more also, right? Next, so what does it say? Co-surety purely says about when the same debt or the duty, see, that means you have whatever that principal debtor had a debt on the creditor, this debt is not able to be paid by the principal debtor, then this debt can be divided into 2 or 3 people. Then this can be, when it is divided in 2 or 3 sureties, then it is called co-sureties. Fine. So in this we have one right, that is section 146, which easily speaks about the co-surety which are liable to contribute equally. So it is what, you know, it is the co-sureties So what happens is that it is the right to contribute. There is one particular right, that is contribute equally unless some proportion fixed subject to maximum limit, if any. Means it says that if there is any limit, then up to that limit, fixed up to that limit, then you have to, like, it can be clarified. If there is no limit, it can be divided equally, right? Next comes the right to share benefit of securities. If one co-surety receives security, then the others also benefit to share benefit also. Means the when one surety is getting a benefit of the security or the share, then the other co-sureties are doing what? Nothing, right? Like, they are also having a same equal right. So it is saying it is also having the right to get that share benefit. So that's what is given here. Here, if you see A, B, and C, it's easily given. A, B, C are the sureties of D. Means it is D is the principal debtor. Then A, B, and C are the sureties. That means these are the co-sureties, right? You are able to understand this is a principal debtor. Okay. And here it's saying, or the sum of rupees 3 lakh rupees lent to E. Lent to E. E makes a default in payment. A, B, C are liable. Are liable. So how it will be? 3 lakhs when there is no definite point or a fixed amount, no specified condition, then this 3 lakhs can be divided into 111. Okay. So this is how it will be. The next point, you can, if you read, you can understand that if there is a limit which has been given, that it should be 25,000 or 50,000 to A, B, and C will take the others, then this will be restricted, and C will take the other surety will take the half part. This is how it is done. Then we have in the end, I think we are almost in the end of our so there's some things left, very small things left. Let's read it. Let's rewind it actually. How do we go ahead? Next, we are understanding is surety is discharged. When can a surety be discharged? Means when can a surety be away from his responsibilities? Okay. So these are the conditions. It can revoke, it can by the conduct of the creditor, by invalidation of the contract of guarantee. So by revocation of the contract of guarantee, under this revocation of contract of guarantee, it has some points, like it can be done by novation. What is novation? Means when new contract has been made between the guarantor, between the creditor and the principal debtor, there are new people involved. At that particular point, there is revocation of the contract of guarantee. Means that particular time there will be cancellation of the contract, right? Next comes when there is notice given by the surety. When surety itself is saying that I am withdrawing from this particular situation, at that time surety is giving a notice and telling that I am revoking, and this can be possible. This can be possible anytime. Okay, it's surety's wish. At that time there will be revocation. Then comes when there is death. When there is death of surety. When there is death of surety, obviously there is close of the guarantee contract, right? When there is death, when there is notice given by the surety, when there is novation. Then comes the conduct of the creditor. Conduct of the creditor means the creditor itself is giving some way or some point telling that I want to come out of this contract. At that particular time, it can be conduct of the creditor. Let's understand this point because this is a bit relevant and it's referred and it's important. By the conduct of the creditor, this can be done by the variance in the terms of contract. Means when there is changes done in the contract, When there is changes done in the contract between the principal debtor and the creditor, and the surety has no, surety doesn't know about it. For example, what happens is, this is A, this is B and C. Okay, A, B, and C. What happens is, A is the principal debtor, B is the creditor, this is the surety. The C is giving a guarantee to B to give A 1 lakh rupees. Okay, and A will give back 1 lakh rupees after 3 months. But in case A doesn't pay 1 lakh rupees to B, then C has to pay, right? But this was a contract done. This is a contract of guarantee. Now what happened is, after some case, this A and B decide to reduce 3 months to 1 month, but have not informed, they have not informed the surety about it. When they have not informed the surety and they're making any changes in the agreement or the contract, any variances which are being changed, then obviously this will be the conduct of, by the conduct of the creditor. Means it is the creditor who is doing it. According to it, it is the surety who is coming out of the contract. So this is one example. This one example is there. This is easy example which I gave. You have another example where it says about there is a surety, there is a manager, there is one person who has been put, there is A, B, and C. Let's read it. A becomes the surety to C. A becomes the surety, means this is the surety to C. C is the creditor. Okay, and conduct as a manager in C's bank. C is having a bank. Afterwards, B and C contract with each other without the consent of A. B and C is doing contract with each other, but they're not informing the surety. If this is the case, as I said you, if this is the case, then here the variance made without his consent is not liable to make good for his loss. The same thing, if you read it, you will purely understand easily. Okay, now coming down, we have okay, this is an important case, not case, this is very necessary for you to read, make a star note. Now you have this variance which has been done. Okay, this variance in section 133. Here with that you have an exception case. Exception. What does this exception speak about? There is variance which is not substantial or material, or which is beneficial to the surety, will not discharge him from of his liability. Means what does it say? It says, let's understand with an example. See, this is the example which has been mentioned. Anirudh versus Thomcott Bank Limited, AIR 1963. Here what happened is, the surety guaranteed the repayment of loan provided by the bank to the principal debtor. This is surety. Guaranteed the repayment of loan provided by the bank. This is bank. This is principal debtor. Of only up to 25,000. 25,000 only. Okay, fine. But what happened is, since the bank was willing to provide the loan only for, the bank is providing loan only for rupees 20,000. But there was a guarantee done by the surety to the bank that up only for 25,000. But bank gave loan only for 20,000. Now you say me, the surety is going to pay 20,000 or surety is going to pay 25,000. If you are able to understand that if there is any alteration made and this alteration is going to give an benefit to the surety, then obviously this variation will not be, or this variation will not affect the surety to go out of the contract. Okay, hence if you see, first it was 24,000 which was decided, and now it's 20,000. So 25,000 is being reduced less. So this will be a benefit for the surety, and the surety is not going to go out, or is going to do the discharge of itself. Next comes by release or discharge of principal debtor. Principal debtor which enters, like if the surety is discharged, the surety is discharged if the creditor, I said you, the creditor enters into a fresh or a new contract, that is novation, or does any act or omission, the legal consequence of which the discharge of principal debtor. If this is the case, at that time there can be discharge of surety. Fine. Okay. There are some cases where surety is not discharged. So there's small cases only. Let's read it. Surety not discharged when the agreement made with the third party to give time to the principal debtor. Means where a contract to give time to the principal debtor is made. Remember, is made. What is made? It is given, a contract is made, an agreement which is made between whom? A contract is been made to give time to the principal debtor by the creditor with the third person and not with the principal debtor. Then the surety is not discharged. Means the surety is not discharged when the agreement made with the third person to give time to the principal debtor. Agreement, see, there is agreement which is made by the, this is the third person. At this particular time, this surety is not discharged. Means what? Example C, the holder of an overdue bill of exchange drawn by A as surety for B. A is the surety for B, A, B and C, and accepted by B, contracts with M. M is third person. Contracts with B, contracts with M. This is the third person. To give time to B, At that time, A, who is the surety, cannot go out of the contract. Next, it is a creditor's forbearance to sue does not discharge surety. Means what? It means C. B owes to C. B owes to C. A debt guaranteed by A. Means P is the principal debtor, C is the creditor, A is the surety, right? The debt becomes payable. C does not sue B for a year after the debt becomes payable. A is not discharged from his suretyship. It is purely saying that if the creditor is not suing principal debtor, see, A does not sue principal debtor. Sorry, C, creditor is not suing principal debtor for a year after the debt has been become payable also. A is not discharged. Here, A is not discharged from his suretyship. A cannot be discharged from his suretyship. Why? Because the debt has not been paid. Fine. Very good. Next, the discharge of surety by the creditor's act or omission impairing surety's eventual remedy. Let's understand with an example. C contracts with B to build a ship, the payment of which is to be made in installments at various stages of completion. Okay. A guarantees C's performance. A is becoming the guarantee for C's performance. In case C is not able to perform, that is C is the principal debtor. D repays last two. B repays last two installments. A is discharged from his liability. A is discharged from his prepayment also. Means it is given that A is a surety entitled after paying off the creditor and to his indemnity from the principal debtor if the creditor acts or omission deprives the surety of the benefit of this remedy, the surety is discharged. I think you have understood. Okay. Now we have, as I told in the starting, you have to read page number 17 and 18 for those 2 points which we have left. That is misrepresentation, and you have another point that is concealment, right? So that I think this is the last year. This is the last, just some 4-5 minutes left, and then we are done with the guarantee contract marathon. We'll go with the next is the bailment. Okay, so what does it say? It says that this is saying about invalidation of the contract, which says the guarantee obtained by misrepresentation is purely invalid. Means there are some situations which will say that the contract is not valid. What are the situations? Here, the first situation, if the guarantee made is by misrepresentation, means what it says that, it is giving, like, it is not properly representing the fact which is being there. If this is the scenario, then the guarantee contract is invalid. Next is the guarantee obtained by concealment invalid. Means if there is any situation where the creditor is keeping the principal debtor and the surety in silence, means he is lying, or he is not giving the true value or true thing, or he is not, even if he knows things, he is not giving or the opinion, or not representing the opinion towards. At that particular case, it is called the concealment, and this situation, this scenario is always called invalid. So it is given any guarantee which is a which a creditor has obtained by means of keeping silence, knowing the fact, like, knowing the fact that the building should be done for only 5 floors, but the building afterwards took 7 floors. Knowing this fact, but it was not being informed to the principal debtor or the guarantor, then this means you are keeping silence, knowing the fact. This is obviously a wrong thing. Hence, at this situation, it will be cancellation or discharge of liability. Done? Very good. And the last one we have also understood is the guarantee on the contract that the creditor shall not act on until the co-surety joins. This is done. Then we have some questions. Here we have questions in the study mat which we have read. I think you can do this at your home. This is very easy. If you have understood till now, it's very, very easy. Acha, very, very necessary. Some things I would like to say is, the misrepresentation point, concealment point. Then you have the rights of the surety. When can the surety be discharged? Are very important for getting marks in exam. Why? Because from these situations, these scenarios only they ask questions. So very, very important for you to do it. Okay. So so we are done with this. We will go ahead with the bailment contract. Okay. So we are going to continue with our marathon lectures, and we are in the new chapter, that is contract of bailment. Everyone, contract of bailment. Right. So till now what we studied was the contract of indemnity and guarantee. This is one chapter. Now we are going to the second chapter, that is the contract of bailment, and then we have is the pledge. If you basically understand the bailment is a bigger portion. Under this one small scenario is called as the pledge. So basically, the bailment concept is very much important for you people to understand. Why? Because there are n number of case studies or n number of cases or situations which can be made or which can be given for you in the exam point of view, right? So coming to what does bailment speak about? Bailment is, in a easier words, I can say you. Okay. So here bailment is starting from section 148. Section 148. Now what happens in this bailment? We should understand, right? So we will understand it with an basically a simple example, as you must have got to know since last 45 to 1 hour session. You could have understood that how do I take the, take you people into the flow of the chapter. So the way I teach is I basically go into the depth of the chapter through an example, and when you understand the example in a proper and proper way, then we are going to read some things which are required in our material, right? So fine. So section 148 speaks about bailment. Here, there are two parties involved. One is the bailer, another is the bailee. Till now, you could have understood that the Indian Contract Act special contracts are basically having parties involved in it. When there are parties involved in it, there is a contract or the agreement within those parties involved. Okay, so as you people know, when can there be a contract? When there are some essentials which are explaining or making the contract happen, right? So like it should be a free consent, it should be an agreement, it should be an offer, it should be, it should be legal, it should not be forceful. These all things are there, right? In the same way, there in the contract of bailment, what happens is there are two parties involved. So basically, we'll understand what and how the functionality of these two parties which come together, and then you understand a concept called bailment. Easy, guys. Very, very simple and easy. Now, what has happened is this is me. You people know me, right? This is ma'am. Ma'am, okay? Ma'am has got a car. Now, what has happened to the car? All the teachers have car, you think, right? Yeah, fine. Let's leave that aside. Ma'am has car. Now this car, she wants to make it make the car fresh and clean enough with all the checking of the brakes and many other things in the car, so that she goes for a tour on the car for 5 days. She has an important meeting and she wants to take the car for the trip. Okay, fine. So what she does is obviously she takes this car to the service center. She has a service center nearby her, her place, wherever she stays. Okay, she means here me. Okay, me. I hope you are understanding the language. Okay. So here I'm just saying about ma'am. Okay, I'm not saying me. I'm saying about this is ma'am. Ma'am is having a car, and this car she wants to go and take it for a service center, and she wants to make the proper servicing of the car so that as a car is like serviced properly, she can happily take it for the trip for 5 days, right? She goes to the service center and says, Bhaiya, Mr. Service Center person. Now, this is my car. This is a Maruti Suzuki car. I want it to be properly serviced and check whatever repairs and maintenance required. Do it as soon as possible and give back the car to me by this weekend. Means within 3 days. Okay, the service center person says, ma'am, please hold. I would like to check some small requirements and conditions, and I need to write a receipt on it so that it is mentioned in our system, software or the system. And he checks the car and he says, ma'am, there are small issues in the brakes, and I want to recheck the brakes, and for that I need some oil required, and I also have to put some small items into the car so that it is properly in a proper flow it goes, right? And he says, ma'am, it will cost you ₹1,000. Okay, now ma'am is saying that okay, this ₹1,000 I'm going to give you back when I take back the car. I give you this thing. Okay, and ma'am is giving the car plus she is giving the keys of the car and telling the service person to ensure the car is being serviced in a proper and a good way. And she is saying also that whatever required in of this ₹1,000 you have given a bill, please ensure that you're doing it properly. By the weekend, on Saturday morning, I'm going to take back the car. Okay, she says this and she goes off. Okay, she says this and goes off. Now here comes the concept of bailment. How does here come concept of bailment? Yeah, here comes the concept of bailment. I'll tell you how it comes. Now when you are here, this is one person, this is another party or person, right? And this is the goods. What has happened to these goods? If you properly understand these goods, this goods, that is car, is going to the service center for what purpose? For repair and maintenance purpose. Is the car in the hands of the service center person for now? Yes, ma'am, it is in the hands of the service center. Is the key with the service center person? Yes, ma'am, it is there with him only. Is the car, who is the owner of the car? Is it ma'am or is it the service center person? It is ma'am. It is ma'am, not the service center. So now tell me that this concept here you can understand is the concept purely speaking about bailment. How? When one person delivers his goods to another person for a specific purpose, okay, and after the purpose is accomplished means it is properly done by that another person, the goods are being returned back to the owner of the goods. Fine, it is returned back to the owner of the goods, or it has been informed to the owner that the purpose is accomplished. What should I do with the goods? When this is the scenario in the real case, you have to understanding the concept called bailment. Bailment here comes here, section 148. Section 148 speaks happily telling that bailment is the delivery of goods by one person to another for some purpose upon the contract that the goods shall, when the purpose is accomplished, returned. And or I said you or disposed of according to the instructions or the directions of the person delivering them. Got me? I hope you understood. Now, basically, the car is of whom? Is of ma'am. Is going to whom? To the service center. For what purpose? For the servicing purpose. Will it be returned? Yes, it will be returned by the weekend. If it is not returned, if it is not returned and it is kept, it is not called bailment. Remember this scenario. Very, very important point here. Now there are two people involved. One is this person, one is this person, right? One is the bailer and the other is the bailee. One is the bailer and the other is the bailee. I hope you are seeing my sheet where I'm writing and the material, right? So here comes the two parties involved. One is the bailer. What happens? The person delivering the goods is the bailer. Bailee is the person to whom the goods are delivered. Means in our scenario, if you tell me, I think you could have now understood this is the bailer. Means what? He is giving these goods to whom? To the service center person. And this person is the person who is the bailee, who is receiving the goods. Receiving the goods. Fine? Understood, everyone? Okay, now coming down. There are different ways of understanding bailment. Like, there are n number of scenarios you will come across and it will be said as bailment. Now, there are some examples. One example I said you about the car given to the service center and repairs. I will tell you another example, that is, what happens is this is a cloth, Raymond's cloth. You people know what is Raymond's, right? Raymond's is a brand and it is a very, very international brand where what happens, they keep good cloth and from there you can stitch things like, stitch the shirts and pants or blazers, you can say, or suits. Okay. So now what has happened is this is Shriek. Shriek has a Raymond's cloth. He bought a Raymond's cloth and now he wants to make the cloth stitch into a shirt. Into a shirt and a pant, right? I'm sorry with the very, very bad drawing, but bear me off for now. So now what has happened is obviously he goes to the tailor. He goes to whom? Tailor. And says, tailor person or master, please make this cloth and take my all the, like what requirements is required. Obviously you require measurements of what? Of hand, the collar, neck, and then you have the waist and all the measurements should be done, right? Take the measurements of me and make it stitched to a shirt and a pant. Okay. And the tailor says, oh, you come after 1 week and rupees 1500 is the charges for stitching, right? And Shriek says, okay, after 1 week I'll come and take back the cloth. Now you say this is bailment or not? Yes, it is bailment. Here, this is one person. This is one party. This, sorry, the tailor is the other party. And the goods is this one. What is the specific purpose? The purpose is the cloth has been stitched to a suit or a shirt or a pant. You getting me? So when the purpose is accomplished, you are returning back the goods again. You're not keeping the goods with yourself. You're returning back the goods again to the owner. Okay, got it? There is, here comes a concept called there is no transfer of ownership, but there is change in possession of goods. There are two important words here. What are the words? There is change in possession of goods means this goods, which is a cloth, is going to the tailor from the hands of the Shriek to the tailor. Means the goods are being changed from one person's hand to another person's hand. Means the possession of the goods are being shifting. Hence, there is change in possession of the goods. But do you think the owner is different? Is the owner changing? No, the owner is still Mr. Shriek here. Hence, there is no transfer of ownership, but there is always a transfer of change in possession of goods. Fine. This is one example. I'll tell you another example. Now, what has happened is this is Mr. Suresh. Mr. Suresh had to send some important documents, some files. Okay, some files to Kolkata. Okay, now what he decided that this files to be sent in DTDC courier services. DTDC courier services. Okay. Now he delivers these goods to the courier services, and the courier services here are sending it to Calcutta. Fine. Got me? Okay. There's one more example. This, what has happened is you have a horse. This is a horse, you think. This is a horse. Okay. You have a horse and you are giving this horse to your friend. Why? The friend wants to take the horse and go for a ride. Okay. You are, this is X and this is you, that means X, who is giving the horse to the friend for just normal use. After the use, these goods are being returned again to X, that is horse is returned again to X. Yes or no? This is what? This is bailment. So there are so many scenarios where you understand what is bailment. Okay. Okay. Let's understand what are the properties required for bailment. First thing, there should be possession of goods. There should be change in possession of goods. Means the goods are changed from this person's hand to this person's hand. But there is no change in ownership. The owner remains the same for always. Okay. Next, there should always be a contract. Okay, the contract can be express or implied, means it can be oral or written, or it can be implied by conduct of parties. Okay. Next, this, there should be pure delivery of goods. Okay, that means what? The bailment is only for the movable goods. This bailment concept only comes for movable goods, not immovable goods or money. Everyone, very very important. It is involving the delivery of goods from one person to another for a specific purpose. Okay, and this bailment is only for movable items or goods, not for immovable. Fine. Okay. And next, let's understand is as and when the purpose is accomplished. Okay, first thing is there should be a specific purpose. See, the goods are delivered for some purpose, that is specific purpose, and the purpose may be express or implied. As and when the purpose is accomplished, the goods are to be returned back to the owner. See, here there is return of goods. It should be returned back to the owner, or else it should be asked to the owner what has to be done to the goods. How do you dispose of the goods? Fine. Next, I said you there should be change in possession of the goods, which should happen in the concept of bailment. Understood? Okay. Now you have given a car to the service center, but the keys are with you. Do you think this is bailment? No. Why? Because keys are with you, then how will the service center use it? It cannot repair. The keys should be with the service center, then only the repair can be done, and then again the car can be with proper servicing, right? Understanding? Okay. Another question. Now what has happened is so specifically, there are some scenarios where you can say there is no bailment. Normally, that scenario will tend you to feel that it is concept of bailment, but no, it is not concept of bailment. Now, what is the scenario? Now, what has happened is this is a ornaments box where you keep ornaments like bangles, gold, the different types of jewelry which you have, right? And you are keeping in the bank locker. Now, what happens in the bank locker? In the bank locker, it is this is one key, this is another key. The one key is of the bank, and the other key is of the owner of the locker, right? So here what has happened is this is Mr. Ram. Mr. Ram has kept the ornaments of his wife in this bank, and this bank is the City Union Bank. Okay, City Union Bank, which is very famous in the south, specifically in Tamil Nadu and Chennai. Okay, so this bank is having a locker, and in this locker, the Mr. Ram has taken a locker of it, and he has kept it. Now, for example, what happens is, now you tell me that this particular scenario is bailment. Is it bailment or not bailment? No, it is not called bailment. Why? Because Because the position of the goods have been changed from one place, one person to another person. But very, very important point is the keys of this locker is in the hands of Mr. Ram yet, right? If you are going to give the keys to the bank, that means you are giving the possession of the goods to bank, and the ornaments becomes the responsibility of the banks also. But now here it is the owner who has not given the key. The owner has still not given the key to the bank, right? Hence sense a concept here, depositing ornaments in the bank locker is not bailment. Fine. Hence, what do you say? You have to write that the ornaments are in the possession of the owner, though kept in the locker at the bank. Why? Because, as I said you, the place of the particular ornaments keeping from one place to another place has changed, but the possession of the goods have not been changed. Why? Because if there is possession changed, as I said you, like the car example, the car has been sent to the service center, as well as the keys has also been there with the service center person. Then only it's called possession of the goods. Here in this concept, it's not called. So this is one scenario where it says it is not called bailment. Next. You have another example which says why it is not called bailment. Now, you people, what happens is, normally what happens is, we people go to bank when we have huge amount of money. We go to bank. What do? We obviously deposit that particular money, right? Right. So when we deposit that particular money in the bank, okay, and later after 1 month or 2 days or 3 days, when we come back and say the bank and withdraw that same amount of money, do you think will you get the same money you deposited? No, right? Like, for example, you have deposited this 100 rupees bundle, okay, bundle. Okay, you have deposited rupees 100 bundle into this bank. Okay, fine, into the bank. And this bundle has, serial number will be there in every particular note. Every note there will be a serial number. Think that serial number is 2, 3, 4, 5, 6, and it goes on full bundle. Okay, now you have deposited this bundle. Remember, you have deposited this serial number bundle to the bank, and later after 1 week you come to the bank. And say, I had deposited 2, 3, 4, 5, 6 100 rupees bundle. Can you return me the same bundle? The bank will say, are you mad? Are you crazy? How can I return back the same goods? I mean, how can I return back this particular serial number? I can't check. I don't have time. I can't. When this comes the scenario, then the situation which occurs to the money when deposited in the bank, it is not called bailment. Not bailment. Why? Remember this point. Why? Because the same goods are not returned back to the owner. Remember, there are 5 situations when there will be called bailment. First, it should be a contract. Second, there should be a change in possession. Third, there should be for a specific purpose. Fourth, there should be delivery of goods. Fifth is the return of goods. Remember. So there are small situations where we are dealing with now in our lectures, that is about when it is bailment, when it is not bailment. Fine. Getting me? Okay. Now I think you are clarifying your doubts with me also. Okay, now we have a concept here we are going to understand is what are the different types of bailments. So when we go ahead with our chapter, we have two types of bailments which come across for us in our material. Okay. So the first one is the gratuitous bailment and the second one is the non-gratuitous bailment. As you see, it is gratuitous means it is it is giving you a situation which says that there is bailment within one person to another, but there is no consideration taken by the bailer or the bailee. Okay, hence it is purely said when there is no consideration, it is called gratuitous bailment. And the next one is the non-gratuitous bailment, which is also known, very establishedly known as bailment for reward, BFR, bailment for reward, where it says that you need to give some consideration to the other party to do some work. For example, you have given this car for service and the service charges you are paying to the service center. That means there is non-gratuitous bailment. I'm giving you another situation. You have given your car to your friend and your friend says, and this friend is working in the service center. Okay, and your friend says, because you are my friend, I'm making the service charge free of cost. Means there is bailment between you and your friend, and this is gratuitous bailment. Clarified, right? Okay, now going ahead. So we are going to understand what are the different forms of bailment. Okay, there are some forms of bailment. I think with situation we have understood some more we will understand. First one is the delivery of goods by one person to another to be held for bailer's use. Means what? There is bailer, there is bailee. Now you tell me, when you're giving this car for the service center, to the service center, is it for the purpose, for the benefit of the bailer, or is it for the benefit of the bailee? Ma'am, obviously it is for the benefit of the bailer, right? Hence, this situation of the car servicing is for bailer's use. So when it is for the bailer's use, there is one form which comes ahead and we have understood is the delivery of goods to another person only for the bailer's use. Fine. Next, another. Second, goods given to a friend for his own use without any charge, means it is for bailee's use. You can write there. It is for bailee's use. I'll tell you one scenario. Now what has happened is, this is Chandni and Shushmita are studying in a school. Okay, they're studying in Loyola school. Okay, this is an ICSC school and they're studying 10th together. Okay, now what has happened is Chani is a very good student. Okay, very good and a bright student, A+ student. But Sushmita is a B+ student, but both are good buddies. They are try to help each other. They're like, they are very friendly with each other. They give notes and so many things. Okay, now what has happened is one day Sushmita has not gone to school. Chandi went to the school and grabbed down all the notes of all the subjects. Now Sushmita gave a call to Chandi after the school and saying that, can you give me the notes, and I'm going to I'm going to check the what has been done in this class or not, and I'm going to do a Xerox of it. Okay. Chandi gives the notes because Sushmita is a very good friend of Chandi, right? And she is not charging any amount for it. Now you tell me, is Chandi benefited or Sushmita benefited? Ma'am, it is Sushmita who is benefited. Why? Because Sushmita has not gone to school and she wants this notes from Chandi. So now you understand, some goods given to a friend for his own use without any charge. Without any charge means it is purely gratuitous bailment. So when you read a sentence, at that point of time only you should clarify from which chapter, from what concept, what are the small subtopics it is clarifying. Is it like, shortly you have to also capture your mind those important words. Say, as I said, any charge, without any charge means it is gratuitous bailment. If it will be with the charge means Chandni would have given the books to Sushmita telling that you have to pay me ₹100 for it. That means this will be non-gratuitous bailment. Got me? Fine. Okay. Very good. Now, let's go to the next form of bailment. The next form of bailment, which speaks about hiring of goods. Boys and girls, hiring of goods. Hiring of goods means what? Means what? That means you have hired a goods for rent purpose. Okay, now I'll tell you example. Now this is Ram. Ram has gone to a bike center. Means what? Bike center here means this bike center, SS bike center, is what is providing bikes. Is providing bikes. Is having 100 bikes. Is providing bikes for hourly basis. Okay, now Ram went to this SS center and saying, sir, I need one bike for 2 days. 2 days. So the bike center calculated what is the amount to be done for 2 days, means 1 day is 1,000. So 2 days will be 1,000 into 2, that is 2,000 rupees. So now Ram has to give 2,000 rupees. Then only the bike will be in the hands of Ram for those 2 days. For those 2 days. Got me? Okay, very good. Now fourth one. Delivering goods to a creditor to serve as a security for a loan. So trust me, this is another chapter, pledge. Pledge. Okay, more detailedly we will read in pledge. Don't worry, I will complete this portion also. But in short, what is it? Delivering of goods to a creditor to serve as a security for a loan. Means you have put some particular amount or some ornaments as security to get a loan. Okay, that is just simple language I said you. But to understand this, you have to read the concept called pledge. We will read it just after half an hour to 45 minutes. Now, the last but one is delivering goods for repair with or without remuneration. See, this comes two concepts. This is gratuitous bailment as well as non-gratuitous bailment. What is it? Delivering of goods for repair. See, I said you car. Two scenarios I said you of car. What are the two scenarios? The first scenario is giving the car to a friend and no charge. And the next car is giving a car to a service center who is an unknown person and he is charging for it. So this is form 5. Next 6. Delivery of goods for carriage purpose. Carriage purpose means what? Now this is Mr. Mukesh. Mr. Mukesh is a manager in mutual funds at Delhi. Okay. Now what has happened is he has got a transfer to Haryana. How does he go ahead? What does he do? So what he does is, obviously he has got a transfer. That means he has to shift his house. He has to totally shift his residence and go to Haryana and settle down, right? Now for that, what happens? He had a talk to the movers and packers. And this movers and packers have very nicely taken the whole things of the house, the furniture, the clothes, the utensils, the kitchen related thing, the tables, the fans, and all the things to Haryana. And Mukesh has paid rupees 25,000 for this particular delivery of goods for carriage purpose from one place to another. Remember what is happening? This is also one form of bailment. What is happening? The goods, the movable items are being changed from one place to another. And the possession of the goods has been changed from Mukesh to Ms. Movers and Packers and settle down at Haryana, and then Mukesh gets the goods. Got me? Is it fine? Clear? Very good. Okay. So let's take a break for just 1 minute. I mean, not break means you go out and have water and so. No, just relax down, sit back, and just recall what we read in the contract of bailment. The contract of bailment is preferring you or referring you to what sections? It's referring from section 148, boys and girls, section 148. And from section 148 to section 181 is the contract of bailment. So there can be a small MCQ, easy one. Sometimes they ask easy ones also. The contract of bailment is from which section to which section? So you can happily say that it is referring from section 148 till section 181. Okay. So what does this contract of bailment speak about? Contract of bailment, it says about it is delivering of goods from one person, delivering of goods by one person to another person or another party for a specific or some particular purpose. Okay, as and when the purpose is accomplished, it has to be, the goods has to be returned back from that another person to the owner, or else it has to inform the owner for what has to be done with those goods. Okay, hence here comes the delivery of goods. The delivery can be, it can be of two types. It can be actual, it can be constructive. Okay, so normally what happens is delivery can be of actual or constructive. So some people have a small point here that comes that, ma'am, we have read three types of delivery in CPT level or CA foundation level. So ma'am, now how you are saying that it is two? Now tell me that those three are what? Those three are actual, this symbolic and constructive, right? So now for your better understanding, there is only two types. The symbolic is one, is the same that of the constructive delivery. Okay, now when you have this delivery of goods by one person to another person, there are two people involved, that is a bailer and the bailee, right? We also understood that is what are the different essentials required for a bailment. As I said you, there are some 5 essentials. That is, there should be goods, and those goods should be movable in nature. There should be a contract, and then it is saying there should be change in possession of goods, and change in ownership is not included here. There should not be any change in ownership of goods. The delivery must be essential. It can be actual delivery, it can be constructive, or it can be symbolic. Means constructive or symbolic is the same point, right? Next, the goods when delivered from one person to another, the same goods should be returned back to the owner of the goods. If there is any variation of the goods, for example, when you're depositing money in the bank and you are withdrawing the same money, you are never getting the same note from the bank, right? So when you're not getting the same note from the bank, that means it is not bailment. Fine. So these are some essentials which are required for bailment to be taken care of. Okay. Now, there are two ways of bailment. There are two categories, or you can say that there are two uh, ways of bailment, that is gratuitous bailment and non-gratuitous bailment. What is gratuitous bailment? Gratuitous bailment speaks about there is no consideration between the bailer and the bailee. Non-gratuitous is simple. It says it is bailment for reward. Mark my words, it is an MCQ. So this can be a question for you. Non-gratuitous bailment is a bailment for reward, and here what happens is there is always a consideration from one person to another in the duration of the contract of bailment. Now going ahead is the different forms which you have already understood. Going little fast, the duties of the bailer. There are duties of the bailer and duties of the bailee. Now for your better understanding, the duties of the bailer are the rights of the bailee. Getting me? The duties of the bailer are the rights of the bailee, and the duties of the bailee is the rights of the bailer. So if you are understanding only two things, then you are able to understand the other part of it. It's the vice versa concept. Got me? Now, simple and easy. There are some duties of the bailer. There are some 5 to 6 duties of the bailer. Very, very simple. If you understand in a proper way with me, if you are not able to catch the point, pause it and rewind back and again listen slowly, and slowly you will understand the flow what I'm going to do. Okay. Now the duties of the bailer. The first duty of the bailer is the duty to disclose faults in goods. Okay. It is the duty of the bailer uh, to disclose the faults in the goods. Means duty to disclose fault in goods. Okay. Now this particular duty or this particular point can be divided into gratuitous bailment and non-gratuitous bailment. Now to make it in better understanding, let's understand the point. Disclose faults in goods bailed. We are going to understand first scenario is the gratuitous bailment. Now what has happened is you have you have a friend. This is A. A has given the horse. It is a horse to B. A knows that this horse is a bit dangerous. Okay, dangerous. Okay, dangerous or vicious, like crazy or mad. A knows about the fact that the horse is dangerous, but knowing this fact, he gives this to B. Okay. Now B has no clarity that the horse is dangerous or not. He rides the horse. Okay. He goes for a ride with the horse. Suddenly, B is fallen down. And the horse has thrown B. And B is injured. In this category, A has given the horse to B but has not taken any money. any money. Okay. But here, you know, A is what? A is one party, that is the bailer, that is the owner, and B is the bailee. Got me? Fine. Now, ma'am, you tell me that this is the two things. Okay. Now, what has happened is A knows about it, knows the fact, and given that horse to B. In this scenario, whatever the expenses which has been occurred to B due to the injury, due to the horse, it has to be bear by A. Hence, it is saying one very simple thing, that if A is aware of the fact, then A is responsible to what? To incur the cost or the damage. Fine. Okay, in case A is not aware. Now, in case A is not aware, now what happens? Tell me what happens. In case, first scenario is B is aware of it. Okay. Second scenario, if B is not aware of it. Obviously, very easy. When B is aware of the things, then what happens? It has to compensate the loss or the damage done to, right, to that bailee. In case A is not aware of it, in case A, that is the owner, who is not aware of it, then what happens? It happens that it is not allowed. There is no liability against the owner to pay. Okay, because see, if B says that I have fallen down due to your horse, then A will say, how do I know? I have given your surety. I have given you a surety the horse is fine. And I never knew that horse is vicious or dangerous. So it is not my responsibility to pay back. Okay. So the compensation will not be liable by A. So this is one scenario. Okay. Now, next scenario. Next scenario is gratuitous. Gratuitous is done. Now we are reading is non-gratuitous. Okay. So in non-gratuitous, what happens is whether the owner is aware or not aware, he has to pay, he has to compensate the loss or damage which has been occurred to the bailee. Simple and easy. So the first point is done, that is the duty of the bailer to disclose faults of the goods. Got me? Very good. Okay. So let's understand the next point. That is, the second point is the duty to pay necessary expenses. I think you understood the first point. Yeah. We are going ahead. I'm going very slow and nice because it's required for you to understand the duty to pay necessary expenses. Now, this necessary expenses are also divided into two scenarios, that is gratuitous bailment, non-gratuitous bailment. Okay, so this can be understood with a simple example. What happens is, the scenario I'm going to explain you is what you have. This is A. So this scenario is, what has happened is, there is one person. Okay, there is one person who has, who is wanting a car. Fine. Now, in this scenario, what happens is, this person is going, he has a car and is going to the repair shop. That is a service station or service center. There, what happens is, he says that he has some clutch issues and tire problem is there, and he gives the car to the service center. Now, for better understanding, this service center person, like manager, is a friend of you. Okay, so obviously, when it's a friend, the friend is saying that, do not have to pay me for any charges, no service charges I'm going to take. But whatever the repairs, like, if anything extra components I'm going to add into your car, I'm going to give you a bill, just pay me that bill. Okay, then you are saying, okay, I am going to pay you that bill, but just make the car ready happily, properly, so that I can use a car in proper way. Okay, and I come after 2 days, make it sure. Okay, before that, the service center, that is a friend, he is giving a small note to you, and says, this is some components I'm adding to your car to make it faster and to work properly. Okay, and it costs you 5,000 rupees. Now, I'm having a very important question. Is it the duty of the bailer, that is the owner, that is you, to pay that rupees 5,000 to the service center? Yes or no? Think. Is it the duty to pay rupees 10,000, I mean rupees 5,000, that charges whatever extra components he has put to the car, to the bailie? Yes, ma'am, it is required. Yes, very, very good. Now, coming to the point, it is the bailer's duty to reimburse the expenses whatever has been used for the repairs of the car. Remember this point. Even if it is gratuitous bailment, it is the bailer's duty to reimburse the expenses whatever has to be done, whatever has been used for the repair and maintenance of the car. Coming to the second scenario, the second scenario here says about non-gratuitous bailment. Now, what happens here is, you have, like, you are having an iPhone. You are having an iPhone, you are using an iPhone, and suddenly the iPhone has some charge issues. So you go to the service center of the iPhone and say, I have some charge issues and my phone is not getting charged, can you please look into it? The service center person says that, sir, I'm just looking into it, just give me an hour, I'll give you what are the things required for it. So the service center says that, sir, it will cost you 2,000 rupees, and the inside one small circuit has been damaged. I'm going to repair that circuit and give you back after a day. Okay, so it says 2,000 rupees. Now, what has happened is, now you tell me, is it the duty of the bailer to pay rupees 2,000 to the bailee? Yes Yes, ma'am. Ma'am, he is going to the service center person is said 2000 rupees for that component. But when he is asking, one small point here, when he is asking again extra 1500 rupees for the service he has provided, extra 1500 rupees for the service he has provided. Okay. Is it the bailor's duty to pay extra 1500? Remember, no, it is not the bailor's duty to pay the extra charge or any necessary charges to the service center person. Got me? So here comes the second point completed. Next point is the premature termination. Premature termination. Here, this is the point. Section 159 says duty to indemnify the bailee for premature termination. Means bailee, here it is bailor, this is bailee. There is a contract done between the bailor and the bailee for 12 months. Think. Example. Now what has happened? The bailee comes forward and says that I want to complete this, I want to do a premature termination within 6 months. After 6 months, he comes and says. Now, what happens is, if this is the scenario, the bailor must compensate the bailee for the loss or damage suffered by the bailee that is in excess of the benefit received, where he had lent the goods gratuitously and decides to terminate the bailment before the expiry of the period of bailment. So one small point here, the bailee is not doing premature termination. I think I just made a small change of it. Sorry, not that. The bailee, but the bailor. When you have a contract between the bailor and the bailee, it is the bailor who is saying he wants to do a premature termination. Like it will be a 12 months termination, but he wants to do a 6 months termination. If this is the case, obviously the bailee is in loss. If this is the loss or this is the scenario, then the bailor has to compensate the bailee for the loss or damage. Fine. Next comes if defective title of goods. If there is defective title of goods. Okay. See, the defective title of goods here is the point. I mentioned it under bailor's responsibility to bailee, and in this is defective title of goods. Every point is mentioned. Don't worry. If you want to clarify, you can make a note here, just a box and write it. This is defective title of goods. So here what happens is, now what happens is Mr. Ram is there. There is Mr. Ram, and Mr. Ram is having a motorcycle. Now what has happened is this motorcycle he is giving to Shyam. Ram has this motorcycle doesn't mean Ram has bought the bicycle. No. What he did, he got it on theft basis. He did a chori of bike. Fine. So this bike, he did not inform Shyam and he gave it to Shyam. Now what happened? Shyam was caught through police. As and when Sham got caught in police said that why are you using this theft bike, this chori bike or theft bike? Why are you using? Sham has no clarity. He is totally confused. Ram is my friend. How can he do it? He got angry on Ram. Now, obviously, he can't do anything. He was taken to the police station and filed a case. Like he was dealt with a case, and that case was about a theft of goods. Now, whatever the expenses was spent by Sham on clearing this case or getting a bail, is it bailor's responsibility to the bailey's situation? And is bailor reliable for the compensation? To all these questions, yes, it is the bailor's duty, or it is the bailor's duty to, to pay the expenses incurred or occurred to the bailey due to the defective title of goods. Now you tell me, what is defective title? Defective title means the title of the goods is not properly mentioned. It is of not one owner. It is shifting. It is wrong. Getting me, boys and girls? It is wrong title. It is defective title. Hence, due to this defective title which has been occurred by Ram to Sham, Ram is responsible for this thing. Got me? Okay. Next point is safe custody. What is safe custody? It is bailor is responsible to pay for any additional expenses or any additional things, additional days keeping the goods in the hands of the bailey. Now what has happened is, this is Mr. Shyam. This is another example. Okay, Shyam has kept his car in the shed of Mr. John. Okay, and he is paying rupees 1,000 because Mr. John has said that if you are going to keep the car in my shed, you're going to pay rupees 1,000 for 15 days. For 15 days. Now, Mr. Sham kept the car and he went outside. After 15 days, he forgot to take the car. Mr. John is calling repeatedly and saying, take back the car, take back the car. It's already 15 days. Sham says, do not worry, John. If I'm keeping the car for more next 15 days, I'm going to pay rupees 1,000 extra. So that means that here, this is the bailor and it is the bailey. It is saying that for any additional days kept and the car is safely kept in a safe place, then whatever the expenses, necessary expenses incurred by John has to be paid by Sham. Fine. Okay, so we are done with the duties of the bailor. So boys and girls, if you are understood the duties of the bailor, make sure that you read this chart and then you read the rights of the bailey, because it's purely same. So I'm not going to read this particular portion or mention this portion in our lectures. Okay. Now coming down, I'm going to complete the duties of the bailey, which is a required question. Very, very easy. These are the duties of the bailey. The first one, take reasonable care of the goods bailed. When a bailor is giving those goods to the bailey, it is the bailey's pure responsibility to keep the goods in proper care. Okay, in proper care. Next, no unauthorized use of goods. No unauthorized use of goods. Next is no mixing of bailor's goods with his own. Return of goods, the goods, whatever goods the bailor has given to the bailee, it has to be returned back in a proper way. Should be the same goods which has to be returned. Next comes return and accretion from the goods. Means if for example the bailor has given a dog to the bailee, and then the bailor has gone out. After 3 months he comes back and see, after 6 months bailor is back and the bailee is giving a dog plus dog's puppy. Is it the responsibility of the bailor to take back dog and dog's puppy, and is it the duty of the bailee to return this to? Yes, it is. Accretion means new goods added. Got me? Next, not to step adverse title. Not to step adverse title means defective title. Now we will understand in a better way. Now, so we read just a shortcut. Now I'll say you, it is the first one, duties of the bailee are also known as the rights of the bailor. Okay, duties of the bailee is also known as the rights of the bailor. So the first duty is the bailee's duty to take reasonable care of the goods. Now, as I said you just 2 minutes back, I said you an example of a dog, remember? So now I'll give you that same example. Mr. X has a dog and he gave the dog to his neighbor. And after 15 days, he comes back and asks the neighbor to get back the dog. Now it is the responsibility and the pure care of the dog should be taken for those 15 days by the neighbor. So this is one example, simple and easy example, which says about bailee's duty to take reasonable care of goods. Now, one more example I'll say you. You have kept the ornaments. You have kept the ornaments in your friend's house. Okay, you have kept the ornaments in your friend's house in a locker at your friend's house. Suddenly, and you are going to a trip. Suddenly, your friend's house has got a theft, night theft, and the ornaments are stolen. Now, you tell me that is it your responsibility? I mean, is it the friend's responsibility on it? Now, one more thing. You have kept the ornaments in the bank locker. Okay. And suddenly the bank got a theft. No, we'll change the example. Now what has happened is you have got a ornaments. You have told your friend to keep it in his locker at the bank, but the friend didn't listen. The friend kept it in his house and there was a theft. Now, because it was you who told to keep it in the bank of your friend, but the friend did not listen to it and friend kept those goods or the ornaments in his house and there was a theft, then obviously your friend is responsible for this particular expenses also your friend has to pay. Fine. Next point. The first point is over, boys and girls. The first point is over. Second point, it is the bailie's responsibility or it is the bailie's duty or the liable. The bailie is liable for the loss occurred in case of bailee uses the goods bailed. Now what has happened is you have a horse. You have given the horse to B. Okay. You have given the horse to B. Now B, what he did, B has given this horse to C. And while C riding the horse, because C doesn't have proper knowledge of riding the horse, C fell and the horse also badly got injured. Now you tell me, it is A's responsibility or B's responsibility? Obviously, it is B's responsibility. Why? Because A had told to keep the horse with B, but A had never told to keep the horse to C. Okay, when B did not listen to the instructions of A and again delegated or again gave the horse to C, it is B's responsibility to ensure if there is any loss in case in this scenario. Section 154 says about it. Next, section 153, which says about anything which is not in the terms and conditions of the contract of bailment will be voidable. Now, the same thing, Mr. Ram has given the horse to Mr. Sham. This was contract of bailment and there were some conditions on it that the horse will stay for 1 week in the hands of Ram has given the horse to Sham. And this was a contract between Ram and Sham. But here Sham did a mistake. Sham gave the horse to C. When this is the scenario, this is not there in the terms and conditions of the bailment. If this is the scenario, obviously it is not called bailment. Fine. Next we are reading is this one. Not to mix the goods. Section 155, 156 and 157, very, very necessary, very, very important. So you can make a note that it is saying about effect of mixture of goods. For example, there is a mixture of goods by the bailee. Okay, for example, there is mixture of goods done by the bailee. Then what happens? Okay, so then comes two scenarios. The first case is the mixture of goods done with the consent of the bailer. The second scenario comes is without the consent of the bailer. Let's understand the case one. Case one says if the mixture of goods done and the bailer knows about the mixture, then what happens is the bailer has the right to ask. Remember point, the bailer has the right to ask for the proportionate or agreed share in the new mixture done by the bailee. Remember, very important and keyword is the bailer has the right to ask for the proportionate or agreed share in the new mixture made by the bailee. Okay, fine. Next case we are reading is in case there is mixture of goods, but the bailer has no idea on it. The bailer does not know about the mixture. If this is the scenario, there comes two cases under it. Under case 2, we are reading scenario 1. First scenario is if those goods which has been mixed, if they are separable in nature. If they are separable in nature, then the bailee has to incur all the necessary expenses, all the necessary expenses for separation and any extra or secondary expenses incurred for the goods to be separated. Got me? Okay. First scenario done. What is the scenario? Is if goods are separable in nature. If goods are separable, the bailee has the right or the duty of the bailee is to incur all the necessary expenses for the separation as well as the incidental expenses or the secondary expenses for it. Right? Next, in case if the goods are not separable, in case the goods are not separable. If this is the scenario, there should be a reasonable compensation which should be clarified or declared by the court. And that reasonable compensation which has been declared by the court must be paid by the bailee to the bailer. So I hope you have got a clarity which says what? Which says about section 155, 156 and 157. So what is it? When mixture of goods. Okay. Now, for your clarity, I'm writing it. Now, what has happened? In mixture of goods, there are two scenarios. Bailer does not know. Bailer knows. Bailer knows. If bailer knows, there is proportionate share agreed to the bailer, right? Next, if bailer does not know, there is two scenarios. If goods are separable, bailee has to pay expenses on separation, right? If goods not separable, then court has to declare the amount and bailee has to pay the bailer on it. Easy? Fine? Okay, very good. Now, we have the fifth point, that is section 160 or 161, which says about the return of goods. Return of goods has two scenarios. If the return of goods is returned, hence at that time bailee is safe, means the bailer has given the goods to the bailee, okay, and the bailee has returned back the goods, then in that scenario bailee is safe. In case the bailee is not returned the goods, the bailee has to be liable for the loss which has been done to the goods. And in case if you have not returned the goods properly, the bailee is liable for it. Fine. Next point is, in case of any accretion of goods by the bailee. As I said you that if there is a dog you have given to the neighbor and after 6 months you are asking the neighbor to give back the dog, and the dog plus the puppy has been bought by the neighbor, then it is obviously bailee's responsibility to give back those new goods also. Fine. So these were the main things which we have read till now. Okay, next is adverse effect. Adverse title, that is if there is any adverse title of defective title of goods, of goods, he must hold the goods on behalf and for the bailer, and he cannot deny the title of the bailer. Okay, fine. These were the duties of the bailee. So for your better information, we have made a chart point that says about the different rights of the bailer. So as I already explained you, duties of bailer is rights of bailee and duties of bailee is rights of bailer. This is an important point when you understand that you don't have to read these two things. If you read these things, you can happily analyze and give the answer for rights of the bailer and the bailee. Very, very simple. Very, very simple. Okay, so for your better understanding, these are some things which are there. Do not worry, you can happily read it by your situation or circumstances. Here we have some little bit of study mat questions which says about, you know, different sections, 150, 151, 152. If there is jewelry kept in the locker and the locker is lost and the keys are with the bank, if it is in the bank, the keys are with the bank, then it is called like, you know, it is called bailment. And if the keys are with you, then it's not called bailment. Small things which you remember and like, you know, you can read. Very, very necessary question I would like to discuss, which says about a small case study which says about Radhesham. There is a person called Radhesham who borrowed a sum of rupees 50,000, borrowed a sum of rupees 50,000 from a bank on security of gold on 1/7/2019. Under an agreement which contains a clause that the bank shall have the right of a particular lien on the gold pledged with it. Radhesham thereafter took an unsecured loan. The first one what he did was 50,000 rupees, borrowed from the bank on 1/7/2019. This was a particular lien. Okay. Next, on the gold pledged. And what he did for getting this loan, he pledged gold. This is one. Next, Radhesham took an unsecured loan of rupees 20,000 on 1/8/2019 for 3 months. On 30th September 2019, he repaid the secured loan. He repaid the secured loan of 50,000. What he did, he repaid this amount and requested the bank to release the gold pledged with it. What he did, the gold was kept in the hands of bank. Okay, when the gold was kept in the hands of bank, as he repaid this amount of 50,000, he is requesting the bank to give back the gold. Don't keep the gold, he give back the gold. Now, the bank decided to continue the lien on the gold until the unsecured loan is fully repaid by Radhesham. Now, what has happened is decide whether the bank decision is valid with the provisions of the Indian Contract Act. Now, if you read this thing, you will purely understand what has happened. Okay, see, let's read it. You will understand. You have to refer section 171 and 170. What says about lien? We will read what is lien now. Now, going down. Particular lien and general lien. What are these two things? Particular lien is implication, or it implies a right of the bailee. You have bailer, you have bailee. It is the right of the bailee. It is the right of the bailee to retain specific goods bailed for non-payment of amount. Okay. What is general lien? General lien here says about it alludes or it speaks about the right to keep the possession of goods. It is the right to keep the possession of the goods belonging to other against general balance of account. To ensure that there is proper balance of account, he can keep the goods. Okay. Particular lien is automatic, general lien is non-automatic. Okay, every bailee can entitle particular lien, but here it can be exercised by only such person who is under section 171. That is, it can be a banker, it can be a factor, it can be a warfingers, it can be attorney of the high court or the policy brokers. Not everyone, only these things. MCQ can be asked. Fine. So now if you have understood, let's read the question. Not question, let's read what's there in our answer and you will understand it. Why I want to read the answer? Because in the answer you will only get a clarification. Then I'll make you understand, don't worry. Section 171 and 170, that is particular lien and general lien, empowers banker with general right of lien in absence of contract, whereby where there was absence of contract, whereby it is entitled to retain the goods belonging to another party until all the dues are discharged. Until all the dues are discharged. Now what? This was our provision. Now here what is written in our situation, like in our case explanation. Here, in our first instance, the banker under an agreement has a right of a particular lien on the gold pledged. It was against the first secured loan of 50,000. As I said, you said you listen. Okay. Which has already been fully repaid by the Radhisha. But according to bank's decision to continue the lien on the gold until the unsecured loan of rupees 20,000. Here you see the second loan, this one. It is saying this loan has to be fulfilled. Then only I will release the gold. So let's understand what's there. Here it says that the bank's decision, this is the bank's decision to continue the lien on the gold. But Radhisham is saying, because I have paid the loan and can you please give me back the gold? The bank's decision to continue the lien on the gold until the unsecured loan of rupees 20,000, which is a second loan, is not valid. It is saying the bank's decision is wrong. Hence, bank must release the gold as and when the 50,000 secured amount was paid by Radhesham, as it was particular lien, as per the agreement done. The particular lien tells about the retaining and keeping the particular goods in hold until the payment amount is not recovered. As and when the amount is recovered by the security, that is gold, the security must be returned or released to the person, that is Radhesham. So this was an important case study which says that the bank's decision was not valid. This was invalid decision. Okay. There are some small points which we will read is what are the ways when the bailment can be terminated. The bailment can be terminated in many scenarios. First, when there is expiry of fixed period, means if the bailment is done with the bailer and the bailee for 12 months and this 12 months is already done, then there is termination. Next, fulfillment of purpose. For example, the bailer has given a car for servicing and the servicing is already done, the car is returned. That means the purpose is complete. That time the bailment is closed. Next, by the death of the bailer or the bailee, at the time when either bailer or bailee is die, death, at that time obviously there is no one else to come into the contract. At that time it will be cancellation or close of bailment. Next, when there is inconsistent use of goods, when there is inconsistent, if the bailee makes an inconsistent use of goods, the bailment becomes voidable. Means when there is bailer and the bailee, between these both there is a contract and bailee here does what is he gives to the third person, then it is called voidable. Fine. Next, when there is destruction of goods, like for example, if the goods which has been given to the bailee has been destroyed and it has been like, you know, properly, it is not in proper place, at that time it is termination of bailment. So in short, we have done almost everything which is required, which is necessary for us to understand. This small thing, let's complete. The right of the finder of lost goods. What are the right of finder of lost goods? Now what has happened is, this is you, you are walking on a road and you find a wallet. Okay, this is what? Lost property. When this is lost property, you are what? You are the finder of lost goods. So here comes two very important rights. The first right is the right of lien. Right of lien speaks about keeping the goods in his possession and till he is paid his expenses. Means like, you know, he is going and finding means the finder of the lost goods can ask for reimbursement of the expenditure incurred for preserving and searching the true owner. Means what happens, this is the finder of lost goods. He is trying to find by doing many expenses, by like, you know, going in rickshaw and then going to one place to another and searching the true owner for it. Whatever the expenses he has been incurred, he has to be got back by the real owner. Fine. Next comes right to recover reward. Right to recover reward means where the true owner of the goods has declared some reward. Means sometimes what happens is the finder of lost goods has like, you know, done a poster and says, if you are finding the real owner of this item, then I'll be pay you rupees 10,000 and so. This is how they do a declaration of the reward. The true, where the true owner has declared, means the goods has been lost by the true owner and the true owner is doing this particular thing of 10,000 rupees. And if the lost goods finder of the lost goods person comes and says about it and gives the goods, then he gets the reward. Fine. This is the thing which is there. Next comes the right of sale. For example, the finder has no right to, like, you know, what happens, the finder has no right to sell the goods. But in case if the goods are, you know, in perishable condition, okay, like, you know, the shell life of those goods is 1 to 2 days. If he is not finding the real owner, okay, or the real owner refuses to pay the expenses incurred on finding him, then what he does, he can sell the goods on the following conditions. Underline or make a highlight. What is it? The first, even after reasonable efforts of the owner and cannot found, refuses to pay lawful charges. In this scenario, second scenario, in case the, like, you know, shell life of goods is less than 2 to 3 days, and then is when the lawful charges of the finder for the preservation, I mean keeping the goods safe, or finding out the owner, the amount of two-third or the market value of goods. If these are the scenarios, he can sell the goods. Fine. For your better preference, this is a summary chart of bailment. So let's take a break and come back after some time, refresh your mind and recall, close your eyes and recall what are the important points we read. And then we come back with the pledge, which is very easy. We'll complete in just 20-30 minutes. Okay. So till then, take care. So friends, we are in the chapter number 3, and that's called the contract of pledge. So coming to the pledge, before we go to the pledge chapter, we need to understand a bit of what is bailment. So recalling ourselves again, section 148, right? 148, is it? Sure? Yeah, is there any other section? Yeah, it's 148. What does it say? It defines that it is a delivery of goods from one person to another for specific or some purpose. As and when the purpose is accomplished, the goods are being returned back to the owner or disposed of as per the advice. Right? This is called bailment. Now, why am I saying bailment, ma'am? We read just now what is bailment. Why are you again recalling it? For your revision again recalling it. Why? Because there is a connection between pledge and bailment. What is the connection? When you have understood what is bailment, you can easily understand what is pledge. How? How? Because pledge is a form of bailment. Means a part of bailment concept. Okay, so now when you see the whole bailment, one there are different examples which we have read, like you have given your dog to the neighbor and the neighbor has to take care of it. You have also understood the car example. You've also understood the example where you you keep money in your friend's locker, and also you give the keys to your friend and suddenly it is gone for theft, and what happens in so many cases. One example you would have also gone through, that is when you are this is thing Mrs. Mamta. This is Mamta. Mamta goes to a bank, okay, and asks for a gold loan. Gold loan. Or else let's keep it easier. She asks for a loan, okay. So when she asks for a loan, the bank says, I will only give you loan when you are keeping something as security, because I do not believe that you will return back the loan plus the interest amount to me. Right? So what happens is Mamta is keeping some amount of some gold as goods, as security. For what? For at the bank. Why it is kept at the bank? Because the bank has to give the loan. For getting the loan, she has to keep some security purpose. Now, when there is some particular goods which has been kept as security, okay, as security. When will those goods be released? It will, this gold will be only released when you are, Mamta is going to pay the loan amount less the interest which is being calculated. Okay, at this situation, it will be this gold, this gold will be released off. Okay, hence this scenario which you are understanding is the scenario of pledge. So to make you understand more better, section 172 says that pledge is one of the type of bailment where what happens, there are goods as security, kept as security. For what? For payment of debt, because you are not able to pay the debt and you're not able to realize that debt, the goods are kept as a security purpose with the other party. Or in case when you have promised to do something to the other party has not promised, I mean you have not fulfilled the promised, at that point of time there comes pledge. And here comes the, it is called as pledge, or it is also known as pawn. Pawn. Okay, so it is two parties which are involved, two parties which are involved, that is pawner, that is pawning, pawner and pawning. Okay, that is pawner or pawning, or pawn, pledger or pledgee. Pledger, see here, pledger or pledgee. Okay, or you can say pawning. Okay, so pledger or pawnee or pawner or pawnee, that is the way you do it. Now what are, how these two parties are coming into contract? In the same way as you have those essentials required for a pledge, like for a bailment, in the same way there is some essentials for making the contract of pledge to be pledged. How? There are, first thing, there must be a bailment, there must be a bailment for security, for security, for payment of debt or promise of, like, you know, performance of promise. Okay, first one. Second essential is the goods must be in the subject matter of the contract of pledge, means it should be according to the terms and conditions which has been done in the contract of pledge. Next, third one, the goods pledged must be in existence. The goods pledged, whatever gold you have pledged, must be in existence. It should not be any virtual type of goods. It should be real and it should be in existence. Next, there must be a delivery of goods from whom? From the owner to the owner. Okay, from the corner to the corner. Fine. I think you have understood this example. We have more examples for you. Okay. Now I am telling you another example. Okay. So the first example is, yeah, the first example was about what? About Mrs. and this Mrs. goes to bank, asked for loan, and the loan will be only provided by the bank only when you are providing your gold as security, and then you get a loan back, right? As and when this Mrs. is able to pay back pay back the loan amount, less the interest. Bank will give the gold back to the owner. This is one example, and this example says about payment of debt. Now, next example. I'm saying. Next example is you have a house. You have a land. This is a land. And you want to construct a house. Right? Now, to construct the house, you have already constructed. You want to take the advice of the architect plus interior designer, right? So you have gone to an interior designer, that is Mr. Shyam, and Mr. Shyam is an architect, okay, and he advises how to build a house in this land. Like there will be 4 floors, and there will be some 12 rooms, and all the descriptions it will say what are the area to be given for each room, and many other descriptions the architect will say, because architect knows how it is designed and how it has to be done, it says. Now what has happened is this land is belonging to whom? To Mr. Bean. Think Mr. Bean. Mr. Bean is only going to Mr. Shyam and asking for his advice, and then it is getting construction. But now what happens is there is a contract between Mr. Bean and the architect. For what? The contract is that in case, like what has happened, Mr. Bean wants the house to be done within 6 months. And this was a contract which was between Mr. Bean and the Shyam. Now Shyam also accepted this one and promised. What he did, he promised to deliver the land with house within 6 months. Okay. Now, when this was the contract, and for example, you, Mr. Shyam, has deviated with his promise. Just imagine, okay? Then what? Then what? Now, I'll tell you how. Before getting deviated, there is a small scenario, okay? Small scenario. We'll understand the scenario and then we go. Now, here when they did a promise, Mr. Bean was very much interested to go into the house and make a housewarming party exactly after 6 months, and was in so much happy mood, okay, was so much in happy mood, and he invited many people for the party for the party. So what happened, he told Shyam that please make sure that you are building the house with proper interior and give it to me within 6 months. Okay, like I mean, after 6 months, you have to give me this particular land with the requirements which we have discussed. In case in case Shyam is not able to give back the house within 6 months, then what will happen? Okay. Now, Mr. Bean said, you are very busy. In case you are not going to deliver me the house on time, then obviously the party which I have thrown to the people, it will be on loss. It will be of no use. So you have to guarantee me saying that The house is going to be delivered on time. Say 1st Jan 2022. Okay. If you are not delivering within Jan 2022, 1st Jan 2022, then I am not going to pay you the rest amount. I mean the balance amount. Plus, Sham also says that, sir, if I'm not going to give you the house within the time which I have told, that is 1st Jan, you can keep my iPhone because this is my promise to you to give the house, and in case I do not give the house, you can keep my iPhone. So now this scenario which we read now, I hope you have understood. This scenario is called pledge. This scenario which we are reading is called pledge. And this is case 2 of pledge. What it says, when the promise made for a performance okay, made the performance of a promise. I mean, if you understand this criteria, that is for the performance of a promise. The first one is the payment of debt. Second is the performance of a promise. Means this particular contract has been done with a promise, and that promise was for some performance to be made. In case you're not doing the performance, then you are going to keep the goods, right? I mean, you are going to keep the iPhone, or you are not going to pay the balance amount. Hence, here comes the contract of pledge. Fine. Okay. Now, let's go down and understand. I think we have also read this essentials. Just now I told you those 4 essentials. Just go through that. Now we will understand 2 parties involved. Who are the 2 parties involved? Are the pawnee or the pawnee. Okay, fine. Who is a pawnee? When the goods have been pledged, the bailer is called pawnee. Okay, the bailer is called pawnee. So what is pawnee? Who is pawnee? First thing is, pawnee is the person who is taking the place of a bailer. When you read bailment, you remember there are 2 parties in the bailment, that is the bailer and the bailee. The same thing which here it is, only the name changes and a small topic changes, that is pledge is done for a security. Okay, so the pawnee is a person who have kept the goods on pledge. Okay, when the goods have been pledged, the bailer is called the pawnee, and when the goods have been pledged, the bailee is called the pawnee. The same situation, it's the same thing. When bailer and bailee situation is there, it's the same thing, only names are changing. Okay, fine. Now we are going ahead and we are understanding are the some of the duties. What are the different duties required? Some duties of a pawnee. That is section 175 purely says about the duties of the pawnee. So basically there are 5 duties of the pawnee. The first one is the duty of the pawnee is to pay the debt. Okay, pay the debt. The pawnee is purely liable to pay the debt or perform his promise as the case may be. Means when we read about a scenario, there are 2 scenarios which I said you about a promise, I mean about a performance and about the payment of debt. Okay. So when there is any one scenario, it can be on the promise or it can be on the debt. Whichever the case may be, the pawnbroker is liable to pay the debt. Okay. Next is second duty is the pawnbroker has to pay the deficient amount. Means if the pawnee is in loss or if the pawnee sells the goods, if the pawnee, okay, pawnee means the other party, okay, owner is the person at the one party and the other party. If the pawnee sells the goods due to the default by the pawner, okay, if there is any default which has been made by the pawner, and if pawnee sells the goods, the pawner may pay the deficient amount. Deficient amount must be paid by whom? By the pawner. Next, pay extraordinary expenses. The pawnee is purely liable to pay the pawnee any extraordinary expenses which has been incurred for keeping the goods safe and fine. If expenses which has been occurred by pawnee, those expenses must be reimbursed by whom? By the pawnee. Next, the pawnee must disclose faults in goods. Must disclose faults in goods. So disclose faults in goods means the pawnee is liable to disclose, means he has to disclose all the faults if there are any, and he has to make the pawnee, like if the pawnee is facing anything or is having any damage or loss on it, the pawnee he has to put the pawnee to extraordinary risk. Okay, means the pawnee is liable to disclose the faults which may put the pawnee to extraordinary risk, and he has to also reimburse those losses or damage which has been occurred to the pawnee. Okay. Next comes indemnify the pawnee. Means if the loss is caused to the pawnee, means if there is any loss which has been caused to the pawnee, then the pawnee has to indemnify the pawnee. Okay. And this loss can be caused due to the defective title of the goods. Hence, at that time, the pawnee must indemnify the pawnee. So these were the some duties of the pawnee, that is section 175. We are going to understand is the what are the different rights of the pledgee or the pawnee. Pledgee or the pawnee, section 173, 176. Easy, it's very easy, do not worry. So what are these very small sections are there? It's a very small topic actually. We are going ahead and we are almost in the edge of completion. The first one is section 143. What does section 143 say? Section 143 says what is retain the pledged goods, means it has a right to lien. Right to lien, it can be keeping. What is it? Keeping the goods on custody. It can be particular lien or it can be general lien. Okay. Now, what is it? The pawnee has the right to retain the goods pledged with him until he is paid the money due under the pledge. What first thing? Until the money is being paid by him. Next is until he is paid interest on the debt which has not been paid. For example, as I said you, this is the example which we have, and Mrs. has given, like has gone to bank and she wants loan. Okay. And this loan for the loan purpose, she has gone The bank says bank will give loan only on the gold as security, and when as and when the loan is being, I mean the amount, the loan amount plus the interest amount on that loan has to be paid back to the bank, then only the gold is back to the owner. In this scenario only I'm saying. Got me? Hence here, next, until he is paid the necessary expenses for preservation of the goods, means keeping the goods, taking care of the goods, and whatever the necessary expenses was held by the pawnee, it is the right of the pawnee. I mean, the pawnee has the right to retain the goods until the necessary expenses has been paid by the pawner, until the money due has been paid, until the interest on the debt has been paid. Got me? Very good. Next one, receive extraordinary expenses. The pawnee has the whole right to receive extraordinary expenses incurred by him for the preservation of the goods. Just now we read. Okay, but here comes an important point. The pawnee has no right to retain goods in case of non-payment of extraordinary expenses. Okay, in case of non-payment of extraordinary expenses, this can be an MCQ. MCQ. Okay. Okay. Now, pawnee has a right to do what? To sell the goods. When can it sell the goods? These are the conditions when it can sell the goods. See, the conditions for sale of goods are: the pawnee has failed to pay the pawner has failed to pay the debt or perform promise. Okay, at this condition, one. Second, the pawnee has given a reasonable notice to the pawner for his intention to sell the goods. At these two cases, at these two cases, scenarios, it can sell the goods. What will be the effect of sale of goods? If the proceeds of sale is less than the amount due, is less than, I mean, when you sell the goods, these are goods, you sell the goods, okay? Whatever proceeds you get, I mean, whatever thing you get from the sale, I mean, amount you get from the sale of the goods, if this amount after sale, well, like whatever the amount is less than the amount due, like whatever due it has to be from the pawner. At that time, what happens? The pawnee may recover the deficit, whatever the amount which will be less, it should be deficient. I mean, it should be recovered by the pawner. Like for example, like the goods which has been sold, and from that sale you got rupees 5,000. Okay, and the amount, this is from sale proceeds. Okay, and amount due from the pawner is rupees 5,700. Just imagine if this is the case, and what happens is sale proceeds is less than the amount due, then here obviously 5,000 is less than 5,700. That means rupees 700 should be paid by the pawner to pawnee. Okay. Now, next scenario is if if the sale proceeds is rupees 10,000 and amount due is rupees 9,000. Okay. Then what happens? Obviously, you know the sale proceeds is greater than amount due, right? Then what happens? The pawnee shall pay the surplus to the pawner. Means rupees 1,000 will be paid to the pawner. Okay. So whatever the case may be, if the sale proceeds is greater than the amount, then that amount, whatever the amount, whichever is the difference, that will be given to the owner. If sale proceeds is less than the amount, then whatever the amount, it will be given to the pawnee by owner. Fine, done. Very good. Fine. The last right is the right to sue the pawner. Okay, the pawnee has a whole right to sue the pawner if the pawner fails to pay the debt or perform his promise, and the pawnee has the right to sue the pawner. Okay. Remember this point, very, very necessary point. Okay. Then we have is, what are the different rights of a pawner or a pledger? Okay, pawner or a pledger. The first one is the pawner has a right to get back the goods, means the pawner has given the goods to the pawnee. Then the pledgee has to return back the goods, and it is the right of the pledger to get back the goods. Next, the right to redeem debt. Right to redeem debt means uh, means what? If the pledger, like what happens there, that there is a time period, the time is stipulated for the payment of the debt. There is a time period for a for a debt to be recovered. Okay, for which a pledge is made, right? In this scenario, what happens if the pledger makes the default in payment? If the pledger is not doing the payment, or does a late payment of the debt at a stipulated time before the actual sales of debt, at that point of time, this is the right of the pawner to it is the right of the pawner. Next, preservation and maintenance of goods. The pledger has a right to see that the pledgee, that is like Bailey, preserve the goods and takes a pure, proper care and maintains the goods in a proper and effective way. Fine. Okay. Next has the pledge. Pledge where the pawner has only limited interest. Where a person pledges goods in which he has limited interest, the pledge is valid to the extent of that interest. Means the pawner is saying that I have interest on particular item for only 6 months, but the total duration of that item is 12 months. That means the pawner has the right up to 6 months only. Fine. Okay. What are the different duties of the pawnee? The first, there are 6 duties. Very fastly, we'll recall. First duty is the duty to take reasonable care of the pledged goods. Second, the duty not to make unauthorized use of pledged goods. Duty to return the goods when the debt has been repaid or promise has been performed. Duty not to mix. Duty not to do any act which is inconsistent or which is not there in the terms and conditions of the pledge. Next comes the duty to return the new goods which has been added and during the contract. Okay, fine. Coming down, some important points, that is what can be the pledge by a non-owner. See, what happens is it is like, what happens is ordinarily it is the owner of the goods or any person authorized. It is the owner of the goods or any person authorized by him in that behalf who can pledge the goods. But in order to facilitate mercantile transactions, to bring out the best and the mercantile transactions, the law has brought some exceptions to it. Okay. What are the different exceptions to it? These are the exceptions to it. First is the pledge by a mercantile agent. Second, the pledge by a person in possession under voidable contract. Third, pledge where the pawner has only limited interest. Fourth, pledge by a co-owner in possession. Fifth, pledge by a seller or the buyer in possession. These are some which we have. So the first one is the pledge by a mercantile agent. These are some conditions. These are some conditions which has to be followed, and at that time only it will be valid enough to be said that a pledge can be by a non-owner like mercantile agent. Means pledge can be done by a non-owner like a mercantile agent. Okay, so this is an important question, and basically we can read this in the agency chapter also, but let's complete it here. What are the different conditions? Let's read it. The first is that the person pledging the goods must be a mercantile agent. First thing, what is mercantile? You people know who is mercantile or what is a mercantile agent? Mercantile agent means a person who is doing a business or who is doing something related to trade and commerce. Okay. Hence, a person pledging the goods must be purely a businessman related trade and commerce. Okay. The mercantile agent must be in possession either of the goods or of the documents of the title. Means he should either have the goods or he should have the goods related documents. Next, this is one, this is two, this is three. Next is such possession must be in the consent of the owner. The possession must be in the consent of the owner. If the possession has been obtained dishonestly or by any trick, then a valid pledge cannot be effected. If they are doing it by a trick or anything which has been wrongly done, then it is not called a pure pledge. The pledge must have been made by a mercantile agent when acting in an ordinary course of business of a mercantile agent. Okay. The pledgee, okay, pledgee or the pawnee must act in good faith. Next, the pawnee or the pledgee should have no notice of the pledger's defective title. If he notices and he knows before this contract about the defective title and then doing it, then obviously it is not called a valid pledge. It is called a void pledge. Okay. Next, if the pledgee knows that the pledger has a defective title, I said in this particular void, it will be void. Right? Very good. So the next point we are reading is the pledge. See, out of these all points, very, very necessary is this one only. So I feel maybe the question comes, then it will come for this point only. Okay. Others are also necessary. We will read it. Okay. So the first one is done. The second one is the pledge can be done by a non-owner, like pledge by a person in possession under a voidable agreement. Okay. So now what has happened is when a pawner has obtained the possession of other goods pledged by him under a contract, voidable under section 19 or under section 19A, means in scenarios of misrepresentation or fraud, but the contract has not been rescinded at the time of the pledge, has not been rescinded at the time of pledge. But the contract has not been rescinded means cancelled or revoked or stopped at the time of pledge, then the pawnee acquires the goods of the title and provides that he is the title of good faith and without the notice of the pawner's defective title. And this all happens without the defective title. Now you understand, very important case this is. What does it say? It says where the pawner, this is the pawner, has obtained goods, okay, obtained the goods possession pledged by him under a contract, and this is a contract which has been done in misrepresentation of fraud. But here what happens is, due to misrepresentation of fraud, this contract has not become revoked, it has not been terminated, or it has not been cancelled. At that time what happens, the pawnee, who is the pawnee, the pawnee acquires the goods, acquires these goods in in good faith, and without informing that pawner is a defective title, without the notice of the pawner's defective title, he acquires the goods and provides that he is in good faith. Got me? At this time also pledge can happen. Next, pledge can even be possible when where a pawner has only limited interest. As I said you, when it has limited interest, when it says that the contract must be for 6 months, but the pawner is saying that I want to do it for 2 months only. So this 2 months interest is the pawner's wish. So it will be for valid for that particular extent of that interest. Next, when the pledge is done by non-owner and is a pledge by a co-owner in possession. At this scenario, what happens? Where goods are owned by many people and the goods are there are many owners. Mr. A is owner, Mr. B is owner, Mr. C is owner. With the consent of the other owners, the goods are left in possession of one of the co-owner. Such co-owner may make the valid pledge of the goods by his possession. Means the three people are jointly discussing and saying the goods must be in the hands of Mr. B. At that time, this is called pledge. Okay. Next is the pledge by the seller or the buyer in possession. What happens? What happens is, here we read an example. Here there is A who is buying a cycle. This is a cycle from whom? From B. But what happens? He buys the cycle and keeps the cycle with the hands of B only. Now what happens after 1 year? Within 1 year, B wanted A to take it, but after 1 year, B again asked A. A was on no response. At that time, what happens? B again sells the cycle, or pledges the cycle to third party, that is C. So very important, not sell, it pledges the cycle to C. Okay. Who does not know of the sale to B. Fine. Now you say me, if this is done with a good faith, then it is called valid pledge. Got me? Fine. Now we are almost in the end of the chapter, boys and girls. We are going to understand the basic difference between pledge and bailment. Very, very necessary. A question comes also. This is the table which I have made for you. Bailment is what? Bailment is done by one person to another person, where what happens, there is transfer or the delivery of goods from one person to the another person. For what? For what purpose? For a specific purpose or for some purpose. As and when that purpose is accomplished, the goods are again being returned back. Here comes, there are two parties involved, bailer and the bailee. And here, then what happens is, see, there it can be gratuitous bailment, it can be non-gratuitous bailment. Then what happens, the bailee has no right to sell the goods. Okay. And the bailiff can use the goods only for the purpose specified. But here, when it comes to a pledge as a concept, what is pledge? There is transfer of goods from one person to another, but it can be only on the basis of the security for the repayment of debt or for a promise which has to be performed. Okay. There are also here two parties involved, the pawner or the pawnee. And here what happens is, the purpose is the purpose of delivering of the goods as security for the payment of the debt or performance of the promise. And this pledge is done only on consideration. Next comes that the pledgee or the pledgee or the pawnee, pledgee or the pawnee cannot use the goods pledged. Okay, and the pawnee has the right to sell the goods if the pawner fails to redeem the goods. Okay, this was about the short and a good brief about the pledge. We have also understand bailment just some 20-30 minutes before. So for your better understand, take a break. Come back soon. Before that, just check on with this chart and then we go ahead with the agency chapter. Okay. Till then, take care. We are now in the contract of agency, the last chapter of the Indian Contract Act. Boys and girls, get excited. We are almost in the edge of ending the Indian Contract Act marathon. So this agency chapter is not that big, but yes, we have many things to understand in this chapter, because in exam point of view, small situations come ahead, and you are tested in those circumstances whether you know agency chapter or not. Now, how do you go ahead? Now, first thing is, before going to agency chapter, make sure that you are already done with the other things. Okay. And the next point is, the agency chapter is less smaller than the bailment pledge and the indemnity and guarantee contracts. This is simply a contract which is speaking about the rules and regulations and what are the duties, what are the rights of the agent, what are the rights of the principal, how do they combine together, how does the work go on, what are the different types of agencies we have, which is going on. Okay. So for your better understanding, let's make things easier for you. Okay. So now you tell me, people, you people know. Okay. So what is called an agency contract? Anyone who can speak on this? Agency. This is what? This is a part one of the chapter of Indian Contract Act, right? Very good. Now, we have one landlord. I mean, not a landlord, but a rich man, Mr. Rich. This is Mr. Rich. Okay. This Mr. Rich has many houses. Okay. Many houses. You can say 3 to 4 houses. He's the owner of 3 to 4 houses. Now, suddenly in this 3 to 4 houses, this house, whoever was staying in this house, he has so many houses. Obviously he is having a family of 4 to 5 people in his family, but he can't distribute his family and let everyone stay in one house, right? No one does that. So what does he do is, he stays in a house that's called a palace, and other houses he has given it for to let purpose. So to let means, not toilet, to let, guys, to let, where it is on rent basis. Fine. So here what happens, this house is this house. I'm marking it so that you get a clarity. This violet color box is the house of his only, and this house he has kept it for to let purpose. But here what has happened is, one of the family used to stay due to some some transfer of their office. They are shifting from this place to another place, another state. Okay. Now obviously when you see that when they are shifting, this house is empty now. That should be now like, in to-let purpose, or it should be put on a board where you say it is on rent. Okay. Now, what happens is Mr. Rich tried to find out n number of people, those who are fit for this house and they can take care of this house properly, maintain the house as given to them, right? Without much of, making the house dirty, the washrooms dirty, and many things. Not doing that, taking care of the house. Okay. Now, Mr. Rich tried a lot of time. For 3 months, this house was empty. It was not with anyone who was fit for this house. Now he got tired and he put an agent, that is called Mr. Agent. This Mr. Agent, this is Mr. Agent who is doing what? Who is in this particular nature of work. What is the nature of work? Mr. Agent's nature of work is to get those perfect and a proper person or a family to stay in that house, right? So now Mr. Rich has given those all criterias, that the rent of the house, the rent is rupees 10,000 per month. Every third of month it should be paid. Okay. House should be clean and maintained. Okay. And there was a last point, that is the maintenance is rupees 1,500. Fine. These are the criteria of Mr. Rich for the house he is giving on rent. Now, this tenant, I mean, not the tenant, Mr. Agent tries to find out many people who are fit for this house. Why is he finding? It is his job, guys. It is his job, because he's the agent. He is working as the agent of Mr. Rich. Means Mr. Rich has appointed or employed Mr. Agent a work, some task. A task is been given for finding out a person or a tenant to stay in this house, right? And this task, when it will be completed, how it will be completed? It will be completed when Mr. Agent is getting any one family. Now comes one family. This is one family. Mr. Family. Let's take Mr. Family. Mr. Family wanted to actually go in a rent for approximately 9 to 12,000 rupees house, and wanted a good house of 2 BHK. 2 BHK. Okay. At an area where they wanted the house, Mr. Rich's house is present. Now, Mr. Agent found this and tried to explain what are the different conditions which are being given by the Mr. Rich, and explained and said rent is rupees 10,000, maintenance per month is 1,500, house clean, house should be very clean, maintained, the washroom should be neat and good. Okay. Every 2 years there will be increment for 5% increment of the rent, and so, and third month, like, not third month, third date of every month you should pay the rent. Mr. Family said, okay, I agree with all these conditions, but you should show me the house. Now the family goes to the shop to see the house, right? The family goes to see the house. After seeing the house, it decided to, like, come for rent purpose and stay in this house, and it is a good area, so they decided to come. Now, before coming, what happened was Mr. Family said the agent that because there are 2 BHK house, one room is properly painted, the other room, that's the kids room, is not painted properly. No paint is done or not painted properly. So I want the paint to be done within 15 days, and then in the next month I come and stay in this house. Okay. Agent, without clarifying it with the rich person, you're understanding? Agent, without clarifying it with the rich person, said, yes sir, it will be painted, and after 15 days I'll give you back the house with a proper paint, and fully clean house will be given to you. Now for example, after 15 days, after 15 days, after 15 days, the paint is not done, then Mr. Family is responsible to say Mr. Agent or sue Mr. Agent. So what happens here is, here there is Mr. Family, that is the third party, who is in contact with the agent and talking with the agent personally and giving its clarification whether paint is done or not done. Because Mr. Agent had promised that within 15 days the kids' room will be painted and the whole house will be properly clean and then given to you. If agent is not doing its duty, the Mr. Family has the whole right to sue the agent, as well as Mr. Rich directly or indirectly will be liable on whatever the agent has done to the third party. Got me? Even if Mr. Family and the Mr. Rich person did not ever have a contact, never had a talk, nothing, but still when an agent is doing anything or is promised something, it should be done. If the agent has not informed or not done anything which should be done to the third party, then directly or indirectly, the principal, that is the principal who will be liable or who will be responsible for this all act. I hope you understand the shell of what agency speaks about. So here comes the contract of agency. The contract of agency says there is principal, there is agent, there is third party. Three parties involved. Okay. There is a contract between the principal and the agent regarding some rent of the house or any type of work which the agent does. Okay. Hence, what happens? Employed a task or a work. Until unless the work or any deal has been fulfilled. Has been fulfilled. Any deal or any task which has been fulfilled, which has to be fulfilled because it was the instructions of whom? Of the agent and the principal. I mean, the instructions were given by the principal to the agent, right? At this scenario, there comes the contract of agency. So to make it clear, there was what? I'm just repeating it. There was Mr. Rich. Okay. Mr. Rich had houses. Out of this house was vacant. So to, to set someone in this house as a rent basis, he tried to appoint Mr. Agent, who is easily trying to get people for rent basis. Okay. And here gave the conditions. What are the conditions? The rent should be rupees 10,000 per month. Okay. Maintenance is 1,500. Then it says every third of each month it should be paid. Okay. Then every 2 years there will be increment of 5% of the rent, and these are the conditions. And the house should be very clean and neat. Okay, when these are the conditions given by Mr. Rich to the agent, saying that whoever is going to stay in this house on rent, these are some conditions of me to be fulfilled. Now, according to the conditions, Mr. Agent tries to find Mr. Family. Mr. Family knew about these conditions, and after seeing this house said yes to stay in this house, but on a condition that there should be there should be paints done and the washrooms should be clean. If this condition is not fulfilled, then directly or indirectly Mr. Rich will be liable for it. Okay. Mr. Agent has direct contact with the family, but Mr. Family has no direct contact with the Rich. Rich and Agent have contact with each other, but Rich and Family have no contact with each other. But due to Agent, there is Mr. Family, right? Due to Agent, there is Mr. Family. So anything which the agent is doing wrong or which has been promised but and has not been fulfilling, Mr. Rich has to take care of that particular job or work. Fine. This is called the contract of agency chapter. Fine. I hope you have understood. Now let's understand from book language what does the agency speak about. Okay. See here, the contract of agency is from section 182 till 238. What does the contract of agency say about? Contract of agency speaks purely about an agent, as I said, you agent who is being employed by whom? By the principal to do any act or represent the principal in some particular dealings with third party. I said you, it is being employed or is being appointed by whom? By the principal to do what? To do any particular act or to represent anyone, to represent whom? Another here means principal in dealing with third person. Here you see our example. In our example, which I said you, the principal wanted a tenant for the house. And what he did was he appointed the agent to check with one family or Mr. Family. Here what he did, he represented the principal. What is the work of the agent? Agent represented the principal in dealing with the third person. Remember? Fine. Okay. Now, what is the job of a principal? Principal is just simply a person. What happens? For whom the act, whichever the act is being done by the agent, it is the principal who is making sure the act done properly and maintained properly, right? Right. So who is a person? Principal is a person for whom the act is done by the agent or who is represented by the agent in the dealings with the third person. Fine. Okay. So how do you test that it is agency? Like you tell me what are the things which should be accepted or should be known that it is an agency contract. Okay. So first thing you have to understand is very, very simple. These are the questions which you have to clarify. So what is it? If the answer to these questions is yes, okay, then there is a relationship of the agency where a person has a capacity to create contractual relationships between the principal and the third party. Means if you see the example which I said you, that is Mr. Rich here. You have Mr. Rich and you have Mr. Agent and you have Mr. Family. Family is the third party, right? Family is the third party, right? Agent is the person who is being appointed or he who is representing Mr. Rich. Rich is the principal. Now what has happened? Is there any contractual relationships between Rich and the family? Yes, ma'am, there is contractual relationships. That is, he is the owner, he is the tenant. There comes a relationship, right? Due to the agent. It may be due to the agent, but there is a relationship which is coming. So there comes yes. The question to this is, the answer to this question is yes. Next, bind the principal by his own act. Where a person has the capacity to bind the principal to his own by his own act, means is it the principal's wish to do the act? Yes or no? It is not that it is forceful, like it is binding the principal by his own act. Okay, by this particular scenario you can understand that there can be agency and the agency can be tested in these two questions or criterias. Fine. Now, I think you have understood who is an agent. See, agent definition has not been explained in our Indian Contract Act, but to make it easier, agent is a person. Agent is a person to do any act for another or represent another with the third party, right? So we understood what is agent. Now, this particular rule, what does this rule speak about? This is Q fact parallel fact per se. Okay. Quae fact parallel fact per se. What does it say? This rule, this maxim or this Latin rule says simply that he who acts through agent is acting himself. Means what? Means what? The acts of the agent are the acts of the principal. Whatever the principal is not able to do and telling the agent to do, it means it is the act of the principal only. So here it says, quae fact per alium facti per se. Quae fact per alium fact per se. Okay. Quae fact per alium fact per se. Quae fact per alium fact per se. Speak with me. Quae fact per alium fact per se. 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 What does it say? This rule says just one thing. The act which is done by the agent are the acts of the principal. That means he who acts through agent is acting by himself. Fine. Okay, very good. What are the different, silent features of the agency? What are the different sections we have in section 183, 184, 185, and 226? We understand those, do not worry. We have simply divided it into very easy way. Now, so who may employ an agent? Obviously, when I say you, who may employ an agent? Very, very important question. Any person. There is nothing that who may employ. Any person, like, even me, even you can employ an agent. Any person. But your age should be more, more than the, attained majority. Fine. Means he should not be a not a minor. See, one thing, any person means he will be a principal, can appoint an agent. Here, principal has to be a major, but agent can also be a minor. Can also be a minor. Remember this point. This can be a question for you. MCQ can be asked. Fine. So what do you understand? Here, thus a minor or a person of unsound mind or mad, lunatic, crazy, cannot appoint an agent. Now you say me, you think that I am crazy. I have some mental, disability. I am not able to take proper decisions. I am lunatic. I am, because I am having these all things, and I am appointing some other person. Whatever I will say, that other person will do because he is an agent, right? Do you think because I am not mentally stable, can I give a proper decision to that person who is under me? That's why it is purely said that person, any person who can appoint an agent, but must have a sound mind, okay, as well as must have attained a major age as per law. Fine. So it is saying any person may employ an agent if the age of majority and is of sound mind. But one more important point which I said you, principal, that is any person is a principal here, cannot be a minor, but the agent can be a minor. Remember my words because we are going to read this here. Okay. See, very nicely it is explained here that any person can become an agent. Remember, even a minor, you can underline, or a person of unsound mind or a lunatic can become an agent. But however, such agent means the person, this person and this person. If these are the people who are agents, if this is the case, then the agent is not liable under the contract of agency. He is not liable in the contract of agency. Hence means there cannot be a contract between them, between the principal and the agent. If the agent is having two things, like if the agent is a minor or if the agent is unsound mind, there won't be a contract of agency. If there is a contract of agency, then it will be called as void ab initio. Means it will be purely void. You can understand this with an example. Okay. This is an example. You read it. I think you have understood what I have said. Okay. Now coming down. Section 185 says what? Says about whether there is any consideration required for creation of agency. It is nothing such. There is no consideration necessary to create an agency contract. If there is a contract between the principal and the agent, no consideration is necessary. It is not saying like, it is just saying that no consideration is necessary. If there is consideration, it's fine. If there is no consideration, it's absolutely fine. Okay, so it says that there should be the acceptance of the agent's work will be regarded as a sufficient consideration. Means as and when the agent is being accepted to do this work, at that time only it will be called as the sufficient consideration. Understanding? Very good. Are we going fast? I'm sure we have revised it again and again. This is the last revision. This is for just for your information and for more and a better clarity we are doing it, right? So now, is the agent, question, is the agent liable? If liable, to whom? Obviously agent is liable to principal. Okay, but here the agent who is a minor or an unsound mind is not liable to principal. Not liable to principal. Got me? Very good. Now, is the principal liable for all the acts which the agent is doing? If you would have understood this particular thing, that is this Latin word, what does it say? It says that que fac per alium fac per se, means whatever the acts done by the agent, I mean the acts of the agent are the acts of the principal, means who acts through an agent is acting for himself, means he's doing things for only for his benefit, his requirement only. Okay, coming to that only, if anything which is going wrong in this particular contract, then principal is purely liable for it. Okay, hence the principal is liable for all the acts of an agent which are lawful, and within the scope of agent's authority. Now, so for your better understanding, what I thought is I will actually show you once that how that agreement, simply a template type of thing. Let me show you so that you understand basically how things are. Okay, fine. Is it visible? I hope it's visible. See, it's just a small template for you for better understanding. What is it? It is an agency agreement. It's an agreement between whom? Between the principal and the agency. Between the principal, between the principal between the principal and the agent, right? See, here it will be an agreement where you say an effective date will be there between them, when they want the agreement to start. These all things will be written on that date, and the address will be of the principal and the parties, like a agent. Okay, see, here it is given what are the different list of services provided and their prices, means if there is agent working for this work one, then rupees 1,000, think. Okay, agent working for the second job, then rupees 2,500, and some little bit details of it. What are the different services he wants to the principal wants the agent to work for it, whether it is for brokerage service, yeah, whether it is for stock market, whether it is for the real estate, whether it is for the like book business, any different companies who put agents for whether it is for medicine, pharmacy companies, you have okay agents there. Different agents are working and they have different services. They quote different amounts for these services to be done, and so, right? So this is how they mention. And after mentioning, here there will be written about the appointment of it also. Here you see appointment. Okay, hereby the principal agrees to appoint the agent as its agent to perform the services on behalf of the principal. Then next thing, there should be a scope of authority. Like, what is a scope of authority? Means the agent is binded, like the agent's authority is binded to the principal. Whatever he is giving, like the authority is totally in restricted towards the principal's hands. Fine. So this is how the default template look likes of agency agreement. We have 2-3 pages attached to it with some more additions, with more explanation of the services and small things which they want it to be clarified within the agent and the principal, right? So this was something for your better understanding. I thought let me show you so that you understand it in a clear and a effective way. Okay, going back to our chapter. So we have is the what are the different modes of agency. Okay, now coming to different modes of creation of agency. The agency can be created in different ways. How? The first, these are the ways. The first way is express appointment. It can be through the express appointment, means it is expressed through words, or through it can be oral or it can be written. That is called express appointment. Next, it is said about implied appointment, means through the conduct of parties. Fine. Next comes, it is through necessity. That is one of the mode, like at the time when it is required, that it is the agency, the contract of agency gets created. Next comes holding out or by estoppel. The last is the agency by ratification. When you understand this and this, these are one of the most important of the chapter. Fine. Now, to make it easier, already I have said you, see, it is through the conduct of parties is implied authority. It is through oral or written. See, written. Okay. Now, so do you want me to explain it? Example you wanted, what has happened is this is Mr. A. A is residing in Delhi, but he has a house at Kolkata. Okay. Now what happens is he appoints B to take care of this house. Take care of this house. That means it is giving an express agreement. Okay. Next, it can be this same scenario. A is just telling B to take care of the house over a phone call. The first one is through written. The second one is over a phone call. So even if it is oral or written, both can be express authorities. What is implied authority? Implied authority is saying that, it is giving an implication to the third party, to think that the agent is the main part of the total contract. Right. It is given an implication to the third party to realize or analyze for it. So if here you see, if a person releases rent and gives it to the landlord, he impliedly acts for the landlord as an agent. Means what? Now you say you are staying, like here, this is the building, it has so many floors. The landlord is staying here. This is your floor, this is others floor. Now because you are very close to the landlord, the landlord treats you as a son or a daughter, and you have a very good relation with the landlord. Okay, but you are not the owner. The landlord is the owner. Okay, now what has happened is landlord is just a little bit weak or sick. So what you did, you tried to go to the other floors and ask for rent. The other people also thought that you are someone nearby or someone very much associated or family member of the landlord, or the landlord has told you to collect it. They have felt this. After feeling this and after realizing, means making them understand by the conduct of the parties. Understood, and they give them rent. And this rent realized by you is being going to the landlord. This is how the example is. See these two examples now. If you don't remember also, it's absolutely fine. They will never ask you this simple example, boys and girls. Fine. Coming. We have different forms of implied agreement. It can be by estoppel, by holding out, and by necessity. Now, coming to each individual, we will understand individually. Let's take time, but understand it properly, is my belief. What is estoppel? So we are going to understand the modes. Under this, we are understanding the implied agreement. Under the implied agreement, we have are two types. Basically, there are two types. Estoppel, that is also known as holding out, and the next one is necessity. These are the two main points. Okay. Now let's understand an example of estoppel or holding out. Then I will make you read what it is. Now what has happened is, this is principal, that is Suresh. This is Mukesh, who is an agent of Suresh. Okay. This is a third party, that is Ram's shop. Okay. Now what has happened is, Suresh has told Mukesh to go to Ram's shop and get the list of items required, and on credit basis. That means Suresh is going to pay for it, right? Yes or no? This is first scenario. Now what happened is, Mukesh went to Ram's shop, gave the list of items. He got the list of items and did a signature there in the copy you maintain in the shop, and then come back. Suresh paid this part one, paid this amount. Later, after 1 month, this is principal Suresh, this is agent Mukesh, this is third party Ram's shop. Okay. Mukesh went to Ram's shop and got 2 items and did not pay anything. Okay. But here, before coming here, Suresh decided what? Decided not to pay Ram on buying of goods by Mukesh. Decided. Now when Mukesh goes to Ram's shop and buys these 2 items and did not give the money, okay, it is implied by whom? Mr. Ram has got an implication here. What he got implied? He thought that obviously it was it was purely implied, which was explained because before Suresh paid it. So he thought later also Suresh will only pay. That is why he gave those goods to Mukesh. Okay. So here comes the example which we are saying, that is the understanding of estoppel. What does it say? It says that it is representing one party and making that other party, I mean, the agent is, there is a situation which has been created by the principal and the agent, and the third party thinks that 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 what there is an implication which has been indicated from this agreement that the principal is going to be liable for it. That is why there comes the agreement, I mean the mode of agency that is called agency of estoppel. To make you better understand, I'll give you easiest example which normally you people do in this life. Now this is let's take Rahul, let's take Divya. Rahul and Divya are boyfriend, girlfriend. Okay, they keep going to movies, they go to park, they go to, like, you know, different places, shopping, they go to pubs. While these they are roaming around the whole city, there is uncle, Rahul's uncle, who saw them, but Rahul or Divya never told them that they are boyfriend and girlfriend. But Rahul's uncle saw them going to a movie once. Now what happened? They have a conversation within themselves. Rahul took Divya once to his uncle's grocery shop. Normally, he never introduced also. That's it. Done. After 2 months, Divya herself goes to Rahul's uncle's shop and told, uncle, I need these all 10 items. Rahul's uncle gave the 10 items and also said, beta, do not pay me, I will see to it. Okay. Divya was very happy. She was having a happy smile. She came back with the list of grocery items. Now, in this scenario, if you have understood what is estoppel, you can properly say me that here whatever rupees for this 10 items will be got from whom? From Rahul. Why? Because Rahul took Divya once to the shop. Second, Rahul never knew that his uncle saw him in the movie. Right? So here it is giving an implication that there is contract of estoppel. So for your better understanding, we will understand this one. Now we go with the book language. If a person makes a representation to third party that a certain person is his agent, means here if you see, this person is Rahul, makes a representation to the third party, that is Rahul's uncle. Okay, for your better understanding, I'm writing that a certain person is his agent, means Divya, right? And the third party believing such representation, this uncle has believed this in representation to be true and enters into a contract with the pretended agent, that is Divya, right? Then the person making the representation is prevented from denying the truth of the agency. Hence, he may be held liable as the principal by such third party. You are understanding? That is, when he got this fact, he thought that this both are boyfriend girlfriend. Why I will take the money from Rahul. Then obviously Rahul is liable to pay rupees some amount for this 10 items. This example. In this example, what? When there is representation which has been made by Suresh and Mukesh, starting only, telling what? Telling Ram that whatever the things will be taken by Mukesh, it will be on credit and I will pay it. So Ram also thought so that later also it will be the same thing, because it was made him believe and it was according to the true facts. So later Suresh will be only liable. Here in this, after 1 month, Suresh will be only liable, even if he has decided not to pay Mukesh any amount or not to pay Ram shop any amount which the Mukesh is buying. Okay, hence it is saying that it is believing, making, the principal is making third party believe. Okay, so what are the different essentials? The principal must be an representation. It should be express or implied. The representation must be state that the agent of an authority to do a certain act. The principal must have induced the third person to do such representation. The third person must have believed the representation. These all points we discussed, right? I hope you understood. So if you read this example, you can understand the example of Suresh, Ram, and Mukesh. Okay. Now, coming down, what is necessity? What is the agency of necessity? As the word says, it is on the situation or on the demand or on necessary conditions. So for you, basically, what are the conditions are? What are the conditions? Before going to the condition, let's understand what is it. Now, I'll make you understand. Now, what has happened is, this is Mr. Buller. Mr. Buller is a rich man, has 10 warehouses, having rices. Okay. So what happens is he has kept for 10 warehouses, he has kept one manager, one manager, one manager, one manager, and one manager. 5 managers to take care. Because he can't do everything all together. He cannot check all the 10 houses at a day-to-day basis. So he has kept 5 managers. Now what has happened in this? Think in this warehouse, one warehouse, in this warehouse, suddenly this warehouse got fire. And the buller is not responding to the manager's call. Manager gave a call, gave a message, did WhatsApp, and wanted to inform buller that, sir, the warehouse, the half portion of the warehouse has got fire, Now, sir, what should I do? He has messaged, but because buller is very rich, right? And he was busy in some other work. He didn't see the phone, nor he responded to this manager's call. Okay. Now, obviously, it is the manager's responsibility to safeguard the warehouse. So what he does, he puts 25 laborers and removes all the rice bags. From this place to the next warehouse nearby. Why he did? Because he was a manager. That means he was being appointed as an agent. Buller is the principal. Now, if this is the scenario which comes, obviously the agent has to safeguard the whatever things he has, like in the principal has to safeguard those things. It is their responsibility. Now let's understand this now. Now, I think you have understood, under certain circumstances, a person may be compelled to act as an agent to other. Like the captain of a ship can borrow money at a port where the ship has no agent to carry out necessary repairs of the ship. This was one example. Another example was this one, which was, I said you, large farm and the Sham is a caretaker. Raja is in Canada. There was a huge fire on the farm. Just a same type of example. Sham became an agent of the necessity for Raja so to save the property from destroying by fire. Raja is liable to any expenses which has been occurred by the agent, that is Sham. Okay, because he has safeguarded the farm from destruction during the Raja's absence. Here comes the conditions of agency. What is it? There must be, first condition, there must be an actual and definite necessity for acting on behalf of the principal. It should not be anything which is created. It should not be fake. It should be real and definite. Okay. Next, the agent was not in the position to communicate with the principal. At that time, it can be this scenario, or he has communicated. I mean, he has tried to call many a times, but the principal has not responded. This can be also scenario. Third, the act may be bona fide in nature. Okay. Then fourth, the agent has exercised such reasonable care as a man of ordinary prudence, means according to the nature of human. Normally at this scenario, when there is fire on a place, what happens? Humanity counts. You go and help those people or the things, you remove it. So that is what the agent did. Next comes, the agent was done for the purpose of protecting the interest of his principal, because it was the interest, that is the rice. He has to protect that rice bags, and that is what he did. So he did these all, and these are the conditions with it. So this is an important question. Okay, very good. Going ahead. I hope you have understood till now. Okay, till now done. What we have done, we have understood what is agency, we have understood what is agent, what is principal, right? What are the modes of agency? We have understood these things, right? Yes or no? Fine. So let's take a break for just 1 to 2 minutes. Come back, and then we start with ratification. Okay, till then, revise, stay calm, stay safe. So we are now going to do is ratification. I hope you have gone through the points of the agency chapter till now. Okay, we are in the concept of ratification, which is a beautiful concept. What does that concept speak? Concept speaks about, like, what happens is the principal, there is a principal and there is an agent. Okay, I mean, it is not purely the principal and agent relationship, but it is being tented, or the situation pretends to be a pretended agent and allied principal. Okay, and the situation arises between them, and then what happens, we will understand. Okay, with this example, we'll understand. So what happens is, here we have, this is John and this is John's girlfriend. So John and John girlfriend, both, like, both of the people like each other. Okay, they have decided to get married, but have not told at their houses, and they're trying to enjoy their life, going to pubs, going to movies, and going to various places. Okay, so both are having a boyfriend and a girlfriend relationship, right? Now, one day, okay, these both had a big fight. Big fight. Now, knowing about these fight and this situation, there is friend of John who knows about John and John's relationship with that girl. This friend wants to make things lighter and wants to patch up things within them, right? Want to patch up things within them. So what he did was he decided to book movie for John and John's girlfriend. Then what he did, he gave a call to John and said, John, because you are not in a good state of mind, I know you had a big fight with your girlfriend, but just leave it and just both of you go for a movie and I have booked the tickets for you. Okay. He gave a call. Okay. Just listen properly. He gave a call to John. John said, are you crazy? Are you mad? My mind is upset. I'm not in a position to go to a movie with her again. No, not again. We don't want to get fights again and many other things. And says, what is this, man? Why did you book a date movie and so, okay? The friend tried to make him little bit lighter, but still John did not give any answer. He just kept the phone, okay? Now, but after 2 hours, John actually thought of what his friend said to make things lighter. Friend had booked a movie ticket for both of them, right? So John thought of going to the movie with whom? With his girlfriend. Now here comes the case of ratification, which says that when your friend that is an pretended agent, and here John is an allied principal, the pretended agent is trying to do something for the principal, and if the principal accepts and goes to the movie, here comes ratification. How is he accepting? He is accepting by going to the movie. First thing is, was this contract an implied contract or an express contract? So here, if you see, the friend had informed John and said that it is like he expressed through his phone. And John went to a movie, like, you know, he went to the movie and he explained that this concept of ratification exists. Now, I think you have understood that when ratification is possible, in the same way, when you are seeing the same situation, and here John is not going to movie. This is A, this is B, going to movie. That means there is no ratification. Okay. So this is case B, when ratification is possible, when ratification is not possible. So let's read once, then you understand. If a person that is a pretended agent acts on behalf of another, that is a principal, without the knowledge or consent of the allied principal, obviously, when here if you see, the friend did not ask John before buying tickets. He did it for the case or the knowledge that he wanted John to be happier, right? And here afterwards, the allied principal accepts this act. You see, when he goes, say yes, and goes to the movie, that means here the agency by ratification comes to existence. Now, only by existence the matter is not closed. Here, when he is going to the movie, when he is accepting and going to the movie, it means that it means that this John is accepting this act, and he has to compensate friend for the expenses. Got me? Here you see, simply ratification means approving the previous act or transaction, that is called section 196. Ratification simply means subsequent acceptance and adoption of an act by principal originally done by an agent without the authority. There was no authority given to John's friend, but the friend actually wanted to do something good for the principal, so he did it. Okay. So this was one example. You can also read this example. This example is more realistic. I mean, realistic in means it is more easier for you to understand the word ratification. In the law words, you can also read this. Okay, this is also simply easy example. Do not worry for it. You can just go on and read it. Okay, what can be the effects of ratification? Okay, let's see. The principal is bound by the act ratified by him, and as if such the act has been performed by his authority. Okay, is bound means is anyhow involved or is anyhow stuck by the acts ratified by him, as if he has only told his agent to do this thing. Okay, ratification relates back to the actual date, to the date it is to. Okay, once again, ratification relates back to the actual date of the act that is ratified, and not from the date when the act was ratified. It is saying ratification relates to the back to the actual date, means at the date when John took the tickets for, the friend took the tickets for John. Relates to the actual date of the act that is ratified, not from the date when the act was ratified. Okay, so there is a small thing here. I hope you are understanding. Here it says it is relating to the back to the actual date of the act that is ratified, not from the date when the act was ratified. Okay, fine. What are the different essentials for finding out that it is a valid ratification? When I said you what are the simple things which are required for making the list of ratification, first thing, it can be expressed or implied. Means it can be through an express format, that is it can be through oral or written, or it can be through the conduct of parties. Okay, next is the knowledge requisite for valid ratification. No valid ratification can be made by a person whose knowledge of the facts of the case is materially defective. Okay, materially defective. So what happens is, here we have an example. A has an authority from P. A has an authority from P to buy certain goods at a market rate. A has an authority from P, means A is the agent, P is the principal. To do what? To go to the market and buy goods. To buy certain goods at market rate. Okay. Then what happens? He buys at a higher rate, but P accepts the purchase. Now what has happened? Obviously, when you see a principal told something that you should go to the market and buy in market rate. But what did the agent do? Agent went and bought it in greater than the market rate. If this, and doing this, principal also said okay. Principal did not say anything. Afterwards, what happened? Afterwards, P comes to know that the goods purchased by A for P belonged to A himself. After this scenario, what happened? P knew the truth. What is the truth? That whatever goods he bought, no, that is for himself, not for P. He's not representing anything, but P thought that he's doing it for him. Okay. So the ratification is not binding on P. Hence, there won't be the ratification which is binding on P. Why? Because there was defective material facts. There was no proper information. The knowledge of the facts of this case is defective. In that case, there will not be valid. There will not be no ratification. Fine. Next. Whole transaction. What does this say? It says that a person ratifying any unauthorized act done on his behalf ratifies the whole of the transactions of which such act performed a part. There can be ratification of any act in entirely or its rejection in entirely. The principal cannot ratify a part of transaction or which is beneficial to him and reject the other. It means that think this is the scenario, and the principal is knowing about it, and what he says is up to this much I will ratify, and from here to here, whatever the situation will be, I am not going to ratify. If this is the case, it is not called a valid ratification. It has to be a full ratification. Partial ratification cannot be possible, okay, of the whole transaction. Next. Ratification cannot be made if it would damage the third party. If it damages the third party, then ratification is not void or not valid ratification. Okay. Next. It should be done within a reasonable period of time. Next. There should be proper communication which should be done to the third party also. Okay. The act to be ratified must be valid. I mean, it should not be void or illegal. Okay. Next comes ratification can be made only for such act which the principal had the power to do. Ratification can be made only by such person for whom the act was done. There should be a proper contractual capacity by both at the time of entering into the contract and at the time of ratification. Okay. The principal must be in existence at the time when the act was done in his name. Hence, these are the essentials. See, these are 11 essentials. What I say is you can just read 6. 6 essentials is important. How do you read the 6 essentials? First is it should be an express or imply. The knowledge, there should be a proper knowledge. I mean, the information must be properly given. If information is defective, then there won't be a ratification. Next, it should be within a reasonable time. The whole transaction should be ratified, or the whole transaction will not be ratified. It cannot be partial, right? No damage to the third party. If there is any damage to the third party, then there won't be a valid ratification. Then the communication must be made to the third party so as to bind him. These are some points which you should remember, right? Okay. Now we understand what is the extent of agent's authority in normal circumstances. what is the extent of agent's authority? How much is the authority of the agent? Okay, the authority of an agent means his capacity to bind the principal to third parties. Okay, the agent can bind the principal only if he acts within the scope of his authority. What he does, I said, there will be a scope which will be given about what services he should, how he should, what are the different ways he should be within the scope only. Okay, it can be expressed, it can be implied. The nature of the act or the business, he is appointed to things which are incidental to the business and through trade or business. Okay, not much important, but yes, you should know. Next, what can be the two principles of agent's authority? Principles of agent's authority. So the first principle is normal in this normal circumstances, and next is the emergency circumstances. And the emergency circumstances, I think you know that it is said when it is by agency by necessity, right? The same conditions which we have, circumstances are the same conditions, you have to see almost the same. You can just check it out. Okay, next is when it is normal circumstances. Normal circumstances means what? Any agent having an authority to do an act has the authority to do everything lawful. The agent has to having an authority to carry a business, has the authority to do everything lawful for a specific purpose. It should be done, and in a proper way it should be conducted. That is what is normal circumstances. Easy. Now, like, do you think the agent can delegate, and like whether it can delegate or not? So there are some situations where you can know that the agent cannot delegate. What are the situations? An agent cannot lawfully delegate. An agent cannot lawfully delegate. The agent cannot lawfully delegate, lawfully employ another to perform acts which he has expressly or impliedly undertaken to perform personally, unless by the ordinary customs of trade a sub-agent may, or from the nature of agency, a sub-agent must be employed. Okay, so it is saying that in a lawful manner, agent cannot employ. But in the scenario of trade or customs or trade or commerce, in that scenario, a sub-agent may be employed. Okay, so who is in sub-agent now? Who is a sub-agent? So boys and girls, who is a sub-agent? Obviously, you can see here, I have written something for you. Sub-agent is one person who is appointed or employed under an original agent. Okay. Next is here, there are two ways if properly appointed. Properly appointed. If not properly appointed. Now, let's discuss a little bit of it. If properly appointed, okay, then what? Then principal would be bound to the third party. Principal, okay, clearly understand. The principal will be bound to the third parties. Agent is responsible to the principal for the acts of the sub-agent. Remember the points which I'm saying. First point is the principal is bound to the third party. Second, the agent is purely responsible to the principal for the acts of the sub-agent. Whatever the sub-agent is doing, the agent is responsible to it. And here the agent is responsible to the principal. Like he is answerable to the principal for whatever the acts the junior is doing, that is the sub-agent. The sub-agent is responsible to the agent for his act. Okay. Next point is the sub-agent is not responsible to the principal. Is not responsible to the principal. Why? For the sub-agent, the principal is agent. Okay. Hence, the sub-agent is not responsible to the principal except in case of fraud. In case of any fraud which has happened, then the sub-agent will be responsible to the principal. These are the points which you should understand or remember when the sub-agent is being properly appointed. In case the sub-agent is not properly appointed, then what? Then it's almost a little bit similar, little bit changes are there. Okay, first point, principal is not bound to the third parties. You understand the first scenario which I said, in properly appointed, when I said you principal would be bound to the third parties. Here I'm saying the principal is not bound to the third parties. Next point is the agent is responsible to the principal and the third parties for the acts of the sub-agent. Okay. Next point is the sub-agent is purely responsible to the agent for the acts done by him. Last point, the sub-agent is not responsible to the principal. Okay, not responsible to the principal, even if it is in the case of fraud. Fine, understood. Next point we will understand is substituted agents. What is substituted agents? Write it here if you are writing. Substituted agents. Who are these? Substituted agents are who? These, the person appointed by agent. These are the people who are appointed by the agent to do what? To do an act as agent for principal. As the name suggests, they are substituting the work of the agent. On behalf, if for example, the agent is not well, it is going to do the same work like an agent. The due care by the agent in selecting such person, it is the care of the agent who has to select the substitute for the work for the principal. So this was an easy concept which says about what is sub-agent, what is agent. Okay, this and this is done. I think we understood this thing. There is a Latin principle which says what? Delegatus non protest delegare. Delegatus non protest delegare means the contract of agency is a fiduciary character and it is based on a confidence reposed by the principal in the agent, and that is why the delegatee cannot further delegate. It is just saying that when the principal is delegating some work to agent, the agent cannot further delegate it to the sub-agent. But in case of emergency or in case of trade or customs or business, it can also employ or appoint the sub-agent and make them work about it, right? So, see, in case of customs, trade, and in course of agent's employment and unforeseen emergencies, this can be possible. Okay, there can be appointment of a sub-agent which can be valid. So this is important. See, we read this section 194, which says about substituted agent. So there is a difference between substituted agent and sub agent. It's easy. Let's go ahead with it. Sub agent does his work under control and directions of an agent, but substituted does like agent works under the instructions of the principal. Remember, the agent not only appoints a sub agent but also delegates him for the part of his duties, but agent does not delegate. Here there is no pivot of contract between the principal and agent. There should be established pivot of contract between the principal and the substituted agent. Here the sub agent is responsible to the agent alone, is responsible to the principal, not to the original agent. The agent is responsible to the principal for the acts. The agent is not responsible for it. The sub-agent has the right of action against the principal for the remuneration due to him. Substituted agent can sue the principal for remuneration due to him. Sub-agents may be improperly appointed. It can be improperly appointed. There is no basic way of appointment. Substituted agents can never be improperly appointed. They should have a proper appointment way. Okay. Then the agent remains liable for the act of the sub-agents as long as the sub-agency continues. The agent's duty ends once he has named the substituted agent. Fine. Now we are going to do is the different duties of the agent. Going ahead with the duties of the agent, there are some 10 duties of the agent. The first duty is to duty to execute mandate, means to give the execute whatever the work which has been given by the principal. He has to carry on, he should perform the work and he has to carry on which he has been appointed to do so. Okay, so that was the thing. First is done. Second is duty to follow instructions. The agent has the whole duty and the right to do what has the duty and is bound to conduct the business of his principal according to the directions given by the principal, or in the absence of any such directions according to the customs prevailing in doing the business. Okay. Next comes duty of reasonable care and skill. In case the principal is not there and he is not picking up the call, and the agent feels that that particular business should be secured enough, he can take reasonable care and he can use his proper skills on it and then do the possible things, right? Next is coming is the agent's duty to communicate with the principal. It is the duty of the agent in any difficulty. It can be in case of difficulties, it use all the reasonable diligence in communicating with the principal and seeking the obtains of his instructions. Next, duty to avoid conflict of interest, means duty not to deal on his own accounts, means the right of the principal when the agent deals on his own account in the business of agency without principal's consent. According to the section 215 says what? It says that if the agent deals on his own account in the business of the agency without obtaining the consent of the principal and acquainting him with all the material information which have come to his best of the knowledge, the principal may repudiate the transaction, means it can cancel the transaction. And if the case shows either that any material fact has been dishonestly concealed by him, means any changes has been done in the giving the fact by the agent to the principal, at that time also it can also repudiate the transaction, right? Next, duty not to make secret profits. It is the duty of the agent not to like secretly make profit on the business of the agency which has been given by the principal, and to take care of that particular business he cannot make any secret profits over it. Okay, secret profits means any advantage obtained by the agent over and above the agreed remuneration. Means you have been told that rupees 2000 will be given for this service, but you are getting like you are getting an additional profit of 500. This is secret profit. Okay. Next comes the duty to render proper accounts. The agent has to give the proper list of the accounts, when what has been done, which expenses has been done, if there is any advance, what has been done in that business. Everything should be supported, and it should be properly given, and it should be properly listed. Next, duty not to delegate. The agent cannot lawfully delegate, as I said you, but in case two scenarios when there is a requirement, like in case of trade or commerce, or in that scenario, or in the case of nature of agencies, the sub agent can be also appointed. Then you have the last two. The ninth point is the agent's duty to pay sum received for the principal. The last point is duty not to use confidential information received in the course of agency. Received in the course of agency against the principal. Fine. These were some points. Out of 10, I think I request that minimum 7 points should be recalled, because the first 5 to 6 points are very necessary for you to understand. I gave you just a brief of it. If you go into the depth of it, I think whatever brief I said, you will understand, because you have already read. Only when already read people can understand more better. Now, what are the different rights of an agent? The first right of an agent is the right to retain out the sums received on the principal's amount. Okay. So here what happens is retain money out of the sums received in agency for advance made or expenses incurred and remuneration. Okay, means the agent can keep that particular amount for whatever expenses he has done in the business, or he can also keep the particular amount with him because he has not got the remuneration before. Okay, so that can be the case. Second is to receive agreed remuneration. If not agreed, usual and customary remuneration must be entitled. Okay, and next is next point is lien on principal's goods, property, papers until remuneration received. Agent can retain, can keep or can make a lien. You know what is lien? Keeping the goods with him until there is some particular amount which has payment or amount or remuneration which has been done. So the agent has the right to keep the lien on principal's goods, whichever property he is taking care of it, or the papers or the documents until the principal is giving or releasing the remuneration. Okay. Next is to claim compensation for injury caused because the principal's neglect or want of skill. Okay, so what happens is sometime the principal is not aware of some things which are happening in different warehouses, and then suddenly due to some natural calamity one warehouse got fire, and so with the use of the skill and the faster response, the agent tried to switch that warehouse from one place to another. So with the use of the skill. Okay, so whatever expenses he had occurred for it, or if he had anything which has caused to him, okay, any loss which has caused to him, the principal has to compensate for him. Next, it has the right to be indemnified by the principal. First case is against the consequences of the lawful act done in authority. Next is due to any acts done in good faith, that caused injury to the third person. If act is criminal, the principal not liable to the agent. If it is criminal or fraud or misrepresentation, it is not liable to the agent. We have done with these all things now. Okay. Now we are going to do is this question, that is, what are the principal liability to the third parties? The principal's liability for the acts of an agent. There are some 4 to 5 principal's liability. Means the principal is liability for the acts of an agent. Means whatever the acts of the agent, it is, as you remember the Latin principle which we read, the first principle, the same principle here. Agent is acting, and whatever the agent is acting, it is on behalf of the principal. That means the principal is also acting. Got me? Okay. Next point is the principal liability when the agent exceeds authority. When an agent does more than what he is authorized to do, and when the part of what he does, which is within his authority scope, can be separated from the part which is beyond his authority. So, so much only of that he does his within his authority and is binding within him and the principal. Okay, like as I said you, if he's doing anything for the security of the goods and he's incurring some cost on it, then the principal is liable for that particular extra effect. Okay. Next, consequences of notice given to the agent. Any notice given to or information obtained by the agent, provided that it is given or obtained in the course of the business transacted by him for principal. It should be everything which has been in the business transactions, and it should be something which has been told by the principal to do. Okay, and shall be between the principal and the third parties, and have an legal consequences as if he had been given or obtained by the principal. Principal's liability for the agent's fraud, misrepresentation, or torts. Means if there is any fraud or misrepresentation or torts which has been done, then what? Then obviously the principal is liable for it. So that were some important points. What are the different rights of third party? There are basically 4 rights of the third party. The first right is the third party does not know about the principal. First one, if as this point explains, it says that still the third party has the right against the principal. Why? Because and also may refuse the contract on knowing about the principal. Means, as I said you, that if the third party doesn't know the principal but still has the right to refuse the contract after talking to principal even. Okay. Second point, where the agent personally is liable, the third party may make an agent or principal liable, can make the principal liable or the agent also liable. Next comes the third party does not know about principal. When the third party does not know about the principal wants performance subject to the rights and the duties between the agent and the third party. There will be some duties or the rights between the agent and the third party, subject to that the principal need to work on it. The last right is the right of the third party is limited right if the third party induced agent or the principals to act on behalf of the principal or agent and will be exclusively liable for it. Will be exclusively liable for it. Then comes termination of agency. Okay, termination of agency means what? Closure of agency or putting an end to the agency contract. The termination of agency can be done in various ways, as you see in this particular format. What it says, the first, it can be done by the act of the parties. By the act of parties, it's very easy. If it is done by an agreement, by the agreement means by both the people. By revocation of the principal, by revocation by the agent, means principal is only revocating, agent is here revocating. The second case, this is case 2, scenarios when there can be termination of agency. First, when it is performance of a contract. Second, when it is expiry time period is expired. When there is death of any partner. When there is insolvency, means you are not able to pay back. When there is destruction to the subject matter, means there is destruction made. Then comes the principal becoming an alien enemy. Then when there is termination of the sub-agent's authority, this scenario, there is termination of agency. Okay. So, important, by revocation, I'll tell you. Okay. By revocation, I'll tell you. The authority may be revoked any time before the authority exercised by principal. It may be expressed or it may be implied. Fine. It can be expressed or it can be implied. What does it say? An agency may be terminated by principal revoking the authority of the agent. Means principal itself is saying that the authority of the agent is closed. It's done. Okay. So here it says, very important point, it says the principal may revoke the authority given to the agent at any time before the authority has been exercised. But if the authority has been exercised, he cannot revoke again. Got me? The principal cannot revoke the authority given to the agent after the authority has been partly exercised or fully exercised. Remember this point. Okay. So, as I said, you revocation and renunciation may be expressed or implied. There should be a notice of revocation. There should be proper notice given to the revocation. Compensation for revocation means if there is premature revocation, means if time period is given 12 months, but you're doing before that in 6 months, then whatever premature revocation is done, whatever a principal must be compensating the agent for this revocation. Okay. What is renunciation? Renunciation by agents. Renunciation means an agent may renounce the business of agency in the same manner in which the principal has the right of revocation. Okay. It is saying that when principal terminates, it is called revocation. When agent terminates, it is called renunciation. Remember. So it can be done in 1, 2 situations and 3 situations. First, in the first place, if the agency is for the fixed period, and agent would have to compensate, the principal for the premature renunciation without sufficient cause. At that case, it can be renunciation done by agent. Second, by a reasonable notice of renunciation is necessary if A reasonable notice of renunciation is necessary, and the length of the notice must be properly defined, and it must be determined by the principles which apply to the renunciation by the principal. I mean revocation by the principal. Next, if the agent renounces or announces without proper notice, I mean terminates without proper notice, he shall make good any damage resulting to the principal. Means without notice, if he goes out, then whatever damage which will be caused to the principal, then the agent will be fulfilling it. Got me? So I think death, you know, when there is death and insanity of the agent or the principal. Insolvency means when it is insolvent. On the expiry of time means a period of time is being fixed and it has been expired. That is what. Then is destruction of subject matter means when which an agency which has been created to a deal, means for a particular purpose with a certain subject, comes to an end. It means it is already closed by destruction of the subject matter. By some or the other way, it is being destroyed. At that time, obviously, you don't have to enter into, there won't be an agency contract, right? Next, when there is some other person, some alien coming into the contract and disturbing the contract, that is, in that case also, it will be not be agency contract, it will be termination. Next, in case of termination of the sub-agent's authority, the termination of the agent's authority puts an end to the sub-agent's authority. MCQ, everyone. As and when agent is going, the sub-agent is also going. Fine. Getting me? When the agent is personally, like when the agency is irrevocable, okay, where the agent has himself an interest in the property which the forms of the subject matter of the agency, when he has got any interest in some property, and the agency cannot, in the absence of express contract, be terminated in the prejudice of such interest. Personally interested in the subject matter of the agency. So I think you have understood the most important points. Almost 80% I have covered in our agency chapter. 75 to 80% totally covered. Examples I have given. You please read the examples also once again. Okay. Before exam, if you see this video, you can happily work on it and you can study well. Okay. The next chapter we'll think of what has to be done for you. The summary chart is easier way of understanding, like grasping power will be easier. Okay. Till then, please revise, rewind, and refresh. Okay. Take care. So we are in the new chapter now, doing the marathon for the Negotiable Instruments Act 1881. Boys and girls, let's cheer up, let's gear up, let's go and complete the Negotiable Instrument Act 1881, which is a very, very, very necessary and an important chapter to cover. This is coverage is of 10 to 12 marks in our exam. And like within this, there can be an question for MCQ, that is some 2 to 5 marks can be asked for MCQ portions. Okay, so if you see that every chapter is necessary, but this chapter is more important. Why? Because there are things which can be asked for you, and they have focused, the CA people have focused on this chapter to be more interesting and to be asked to the students, so that students keep reading this chapter number of times. Okay, so this is how it is. What is negotiable? Okay. Now, what is negotiable? Anyone can tell me what is negotiable? Don't tell me that, ma'am, negotiable means giving and taking. I give you my phone and you give me a book. No, no, it's not that. It's, it's something which speaks about, it is not about that negotiation. It is not about negotiation which you do in market or in any place you go for business, or when you go to clothes store you go and ask for the negotiation, like, 100 rupees. If that product is there, you say, bhaiya, 80 rupees you can give me off. No, not that. Negotiable here purely says about transferability. Transferability. Ma'am, what does this say? This is what it is speaking to us, saying that there are n number of instruments, or there are n number of documents doing what? They are coming forward and making our way of doing work or business or trade or transaction easier and effective. Why is this chapter there? This chapter is there for better economic conditions, to increase the credit facility in the country, okay, to involve the different instruments to make the transferability easier, and many more are there in our mat. Okay. Now, you must be thinking, ma'am, instrument means what? Instrument is not that instrument you see, piano or violin, and then you have trumpet, and then you have flute. No, no, not those instruments, not musical instruments. Instrument here is the document. So one question here comes that I just want to ask, that you people know what is document? You know what are documents? A piece of paper can be a document. What else can be a document? A PDF is a document. A Word is a document. E-word is what? Is also a document. Can you please say me any other documents? Bank notes are documents. Debit card, credit card, then you have, promissory note, you have bill of exchange, you have checks. These are what? These are the different documents. Means these are the different instruments. These are the different instruments which we are going to study in our chapter. Some of the instruments we are going to study in our chapter. Now, all those who have taken my, regular course, or they have completed the whole syllabus of other laws, and they have already completed this Negotiable Instrument Act, you must have known that I have approximately covered this in 12, 10 to 12 or 13 hours. Right, approximately, I'm just saying, okay, in approx. It can be a bit less, it can be a bit more, fine. Don't fight for it that ma'am has not given a clear review on it. But now, because it's a marathon, we are going to cover it within 2 to 3 hours max. Almost there will be 75 to 80% of the coverage of this chapter. Every important and to be studied, to be worked on, to be recalled, to be revised will be covered. Okay. So now question to you, are all documents instruments? Think, are all documents instruments? A big no comes here. Answer is a big no. Why? Because a PDF cannot be an instrument. A Word file cannot be an instrument. Okay. A book, like, different pages in that book are called documents, but they are not instrument. Here, purely instruments are those documents which are helpful in transferability. Means those instruments which are negotiable in nature are the document. I mean, those documents which are negotiable in nature are called instruments. So, one very nice question you can answer here: are all instruments documents? Yes. So I think you have got an answer to one question, that is, all instruments are documents, but all documents are not instruments. Okay. Now, here comes the concept of negotiable instrument. What it says about a document which is being transferred from one person to another is called a simple language. I'm just saying for a simple understanding, I'm saying what is negotiable instrument. A document or any document which is being transferred from one person to another, okay, for trade, commerce, business, economic condition, or for more credit facility in the country. Okay, this is why the Negotiable Instrument Act has been brought forward for us. Now, maybe thinking that, ma'am, this was in year 1881. Why are we studying here now? Okay, to make us aware of what is negotiable instruments. Are these negotiable instruments working till date? Yes, it is working till date. Checks are working till date. There is negotiable instrument, that is promissory note, which works in the business grounds. Okay. There is bills of exchange which works with the business or traders also. Okay. So these check, promissory note, and bills of exchange are the most important three negotiable instruments of our chapter. Okay. See, now one thing. In 1881, in 1881, year 1881, when they thought of making this particular act and giving us the details of this act, that time they thought that they can only put these three things, that is check, I mean, it will be promissory note and bills of exchange. Okay. So at that time, why? Because at that time, the trade, commerce, business, and in economic condition, they thought they can put on these instruments to make things easier and faster, and in more better approach can be got of those instruments. Now with these instruments, recently in these 10 years, there are banknotes, there are different debit card, credit card, you have debit plus credit card, and many other plastic cards. These plastic cards, once from one person to another person, can be transferable. All the instruments which can, all the documents which are being transferred from one person to another, okay, and being used for this purpose are called negotiable instruments. I hope you have understood. Okay. Now, this was the act which was made in 1881. The act was purely made in 1881, but it came into force in the year 18 1882. Okay, I think you have understood the concept that act is made, like I know there will be a bill draft will goes to the two houses, lower house, upper house. The both the houses say yes, and then it goes to the president. As and when the president says yes to it, gives its consent and assent on it, from that day it will come into force. Okay, it will be applicable, but at sometimes it will be given a date to be declared to the public, and at official gazette it will be declared. So sometimes that act will be on such date enforced to the public. So here in the same way, the act was made in 1881. It was assented and consent was given on 1881, but came into force in the year 1882. So that was a short brief about what is act and how this act becomes will. Here, after the assent of the consent of the president, this draft bill becomes the act. Fine, clear? Okay. Now, let's read a bit of it and then we understand some things which we have read. Okay. Negotiability means transferability, as I said you. Okay, I will go to the detail of transferability can be of two ways. It can be through mere delivery, it can be through sign and delivery. What is sign and delivery? What is mere delivery? Mere delivery simply says that you have a 10 rupees note, rupees 10 note, and you have given to some person. This person has given this 10 rupees note to this person. Okay, means you have done a mere delivery of that note, right? Hence, this instrument, I mean, this position is called bearer instrument. The other words of mere delivery is bearer instrument. You can make a note there if you don't know. Next here is when the negotiability can be through sign and delivery, means you have a check. You people know you have a check and you do a signature, you give to, then you write the amount and all the details are given. Means what? You are declaring that this check is to be given to this person only. Means you have ordered it. I mean, you are giving an order instrument. You're giving an order instrument, or it is also known as, this sign and delivery can also be called as endorsement. As endorsement. Fine. Okay. Now, what is instrument? Instrument, as I said you, is a document created for a right of a person and can be transferred from one person to another, as I said you already. Okay. Now, what is the main objective of the act? It is to legalize the system and, like, could pass the hand to hand by negotiation by like any other goods. Fine. Here, very important, this act is applicable to whole of India, including Jammu and Kashmir. Including Jammu and Kashmir. As I said you, this act came into force in March 1882. 1st March 1882. Okay. This act is also applicable to the hundis, means in the local markets, in the local areas. This hundis are used in the olden days, they were using it. So it is also usage in this act is also applicable. The things of the rules or whatever things which we have in this act are applicable to the hundis. Okay. There are other instruments like treasury bill, bearer debentures, which are considered as negotiable instruments either by the mercantile custom or by other acts. Okay. Now, what has happened is this Act 1881, Negotiable Instrument Act 1881, there was new amendments to this act which has been added, and they have been informed us that those amendments are important. Okay, section 143A is important, 148 is important. We will read about it. It is just speaking about the uh, a criminal complaint or criminal appeal or interim compensation during the criminal complaint. How things are, we'll go ahead and see. It's almost in the end of the chapter. We'll understand it. Do not worry. So these, I think these were the simple and basic concepts you should understand before you go ahead and go into the depth of the chapter, directly going and understanding what is promissory note, what is bill of exchange, what is check. I wanted you to spend like 15 minutes, 20 minutes of time understanding the depth of what is negotiable, what is negotiability, what is the concept of, instrument, and how do you go ahead. Okay, now as I said you, the negotiable instrument is like, the act is not defined, it is not given clearly about what is negotiable instrument, but section 13 has speaking about what is negotiable instrument. As I said you, negotiable instrument is an instrument, means an instrument where the property in which is acquired by anyone who takes its bona fide and for value, notwithstanding any defect in the person from whom he took. Okay, it is saying it is acquired by any person who takes it in good faith, must be for a value or consideration, notwithstanding any defect in the person from whom he took. Okay, so what are the bills of exchange? Bills, what are the different instruments? Bill of exchange, promissory note, and checks, which checks can be, which can be either by order or by bearer, as I already explained. Now, there is a maxim here which has been given. I mean, what is the maxim is nemo that quaed non habet. What does it say? It says that the principle of relating the transfer of property, means this thing was there in Sales of Goods Act in the, which has been, which is studied here. What has happened is that no one can pass a better title than he himself. It is saying no one can pass a better title than he himself. Okay, so here it is saying that this is an exception to this general rule is being used in the negotiable instrument. That means then this maxim is not applicable to the negotiable instrument. MCQ can be asked that nemo that quaed habet is applicable on negotiable instrument or not. You have to say no. Okay. Okay. So basically, when we go forward and understand bill of exchange, promissory note, and check, we have some particulars, 4 to 5 features which are required. I mean, the characteristics of a negotiable instrument should be understood. So as I told you that negotiable instrument is a document. Okay. Bill of exchange is a document. Promissory note is a document. Check is a document. So what happens is when it is a document, obviously it should be in written format. Second, as I said you, it should be freely transferable. Okay. When it is a written document, it should be properly signed and there should be a stamp on it, at least a stamp on it. Okay. Next, the negotiable instrument may have more than one payee. Okay, it can be one or the more people who can pay jointly or alternatively. Okay, it can be made or drawn for a value or for consideration. Okay, Next, there is a person here involved in this negotiable instruments. When you come across what is a pure concept of negotiable instrument, I'll explain you with an example. You will understand that it will be like, there will be a holder in due course, there will be a maker, there will be a signer, and many other people. There will be a drawer, there will be a drawee, there will be a holder in due course, there will be a bearer, there will be a, like, there are many people at many stages come. Okay, so there will be a holder, or there will be a holder in due course who gets a good title to the negotiable instrument, even though the title of the transferor is defective. Even though the title of the transferor is defective. Okay, then is there are some more points which says every negotiable instrument must contain an unconditional promise, or the order to pay money, order to pay money. These are very important necessary points which I said you. Okay, so there are some assumptions which should be, like, followed. Okay, what are the assumptions are, there are some things which should be like, the negotiable instrument must have a date, it should be like properly signed, it should be having a stamp, it should be endorsed by a person, then like, it should be transferred before maturity, then the holder of the negotiable instrument means the person who is holder is also the holder in due course. These all things are the presumptions. Okay, so before we go ahead, there are different classifications of the negotiable instruments. There are n number of negotiable instrument classifications. It can be done through a transfer, it can be through a location, through payment, and many other ways. Okay, so the first one we have already done is the bearer instrument, order instrument. I think bearer instrument you have done, you have understood. It's saying about what? It's saying about purely mere delivery. Order is sign plus delivery, right? Or endorsement. Fine, this one I think we have completed. Let's see, based on location, it says about inland instrument and foreign instrument means there is some conditions when it will be called as an inside India, when it will be called outside India instrument. Okay, so inland instrument is section 11, which speaks what it says. These are the conditions which should be followed. Example is a promissory note made in Calcutta and payable in Mumbai is a inland instrument. Okay, a bill drawn in Varanasi on a person resident in Jodhpur. Okay, it is a inland instrument. Okay, so what are the conditions? It should be drawn or made in India and payable in India, or any one condition satisfy, or drawn or made in India, drawn upon a resident in India. What is foreign condition? Foreign instrument is that when, like, bills drawn outside India when on a resident in or outside India plus made payable in India, or on a person residing outside India plus payable in India or outside India, or on a person residing in or outside India plus payable outside India. These are called foreign bills. Okay, this can be a question, MCQ can be asked. This can be also an MCQ can be asked. So this is something which is necessary for you to read. If you read this, this is done. What is it? It is saying that inland instrument, when, like, inland instrument when it is a bills of exchange or a promissory note or a check, then drawn or made in India or made payable in India, drawn upon a resident in India, at that point it will be called as inland instrument. Foreign instrument, when bill of exchange, promissory note, or check is not drawn in India, made in India, or made payable in India. These three things, remember: drawn, made, or made in India, drawn in India, or made payable in India. If this is the case, then it will not be called as foreign instrument. Any other cases, it will be called as foreign instrument. Okay, fine. What is ambiguous instrument? Ambiguous instrument means it is ambiguous in nature, or it is not clearly explained. Okay, now what happens is where an instrument may be construed either a promissory note or a bill of exchange, the holder may at his opinion treat it either the instrument shall be henceforth treated accordingly. It is the holder's wish to treat this instrument or not. Hence, an ambiguous instrument can be a promissory note or a bill of exchange and cannot be treated differently afterwards. Okay, MCQ. Next, when it can be an ambiguous instrument, where the amount stated differently in figures and words. Like for example, in the check, no, you have written rupees 1000 here, but in words you have written rupees 100, like in words. If this is not matching, it is called, it is an ambiguous instrument, right? So what happens is you have to take the amount stated in words shall be the amount undertaken or ordered to be paid. Means whatever you have written in words should be accepted. Fine. What is inchoate instrument? Inchoate instrument has to follow some conditions. What are the conditions? The first condition is the person signs a negotiable instrument. Second, the negotiable instrument must be signed, stamped. Then the negotiable instrument is wholly blank or partially blank. It should be half blank or fully blank. Then the person signing such negotiable instrument delivers it to another person. At this point, it can be called as inchoate instrument. Means what? Obviously, when you see, it is saying that there are some details which are incomplete. Hence, it is called inchoate. C is silent. Instrument. Inchoate instrument. Okay, fine. Now, at what situation it will be called at sight, on presentment, and after sight? It is very easily given that a promissory note or a bill of exchange at sight, on presentment, will be called on demand. It will be on demand. When required, it will be called off. But after sight is means it will be only on a promissory note. After sight means in a promissory note means after sight explanation in the promissory note is after presentment. At sight means you have presented this check to the place where it is required. At that time, after sight is used. In bill of exchange, after sight is after acceptance or after or noting for non-acceptance or protest for non-acceptance. Protest for non-acceptance. Coming ahead, let's understand the concept of noting and protest. Yes. So here, what is noting? It's required for you to know what is noting because later you will be listening to this word regularly. Okay. Regularly you'll be listening. So let's understand this word. So what is noting? Noting purely says about recording the fact of dishonor of a negotiable instrument on the negotiable instrument. And it is a convenient mode of authenticating the fact that the bill or a note has been dishonored. Okay. Now what has happened is this is a bill. Okay. It has to go to the, for payment. But suddenly what happens is it is got dishonored. So when it is got dishonored, it has to be noted down by the authorities. Okay, so there are some teams, some people who are working on it, and they study about what is noting, what is protest, and they actually clear the exam of the notary, like notary public exam of the noting and protest, and then they give a note on that particular bill saying about a convenient way of authenticating the fact, saying that this bill has been dishonored. Okay, so when a note or a bill has been dishonored by non-acceptance or non-payment, the holder in such cases, holder causes such dishonor to be noted as notary public. Hence, what is noting? Noting is just a convenient method of authenticating the fact. Now, what is protest? Protest is just an additional thing. What happens is, to a promissory note or a bill of exchange, when the check or the bill has been not accepted or not paid, the holder in the reasonable time can go and tell the protest person or the certified by the notary public to note it and clearly certify the reason what has happened. Okay, when this is done, the later when that other party is saying that they have done the bill or they have done a payment, at that a point of time, this authentication of facts can be a necessary, okay, for you to come out of that case. Got me? So this was about what is noting. So presenting for to you, there are some notes which are not in our book. Okay, so I have made a note of it, and I want you people to write down if you want, or else listen to it. There are some points which actually basically it's required for us to understand before we go ahead into the depth of the chapter. We are going to understand maturity and many other things. Before we go to that, let's just revise once again what is instrument. Instrument, any document through which a right is being created and can be transferred to any other person. Negotiable means transferability. It can be two ways. It can be by bearer, by order, right? Section 13 explains what is negotiable instrument. Section 13 says negotiable instrument includes the check, bill of exchange, promissory note, as well as the hundis. The enactment date is 1881, but the commencement date is 1882. Okay. Then we have is it is applicable to whole of India, including Jammu and Kashmir. What is the purpose? To substitute money, to grant credit, to avoid the movement of cash for safety purpose, to involve more trade and commerce in the system, right? There are basically some basic important concepts before we go to the NI, depth of the NI. The first one is the negotiation chain. What does this negotiation chain speak about? This negotiation chain speaks about a chain, which I mean a negotiable instrument which is being negotiated continuously up to the infinity number of times. Means there is being negotiable instrument which has been transferred from A to B, B to C, C to D, D to E, E to F, F to G, G, H, I, J, K, and n number of people it is being gone. So this chain is called negotiation chain, and it is an infinity process. There is no definite portion that it should be closed there. Okay, what is called a negotiation back or negotiation loop? So for your better understanding, what is negotiation back? So now I'll tell you something. Think this is a negotiable instrument. Think, for example, this is a negotiable instrument. Think this is a check. Example, boys and girls, this is an example. So now what has happened? This check, I am giving it to you. Again, you are giving it to your mom. Then again it is going to your grandfather. Grandfather is giving back to you. Means when in the negotiation, in the chain of negotiation, when you are again getting back, or the same person who has given you the negotiation or the negotiability instrument, or the negotiable instrument has got back the negotiable instrument again through some other person, is called the negotiation back or the negotiation loop. Okay, it can happen a number of times in any type of negotiation. Next we have understood is there is a Latin maxim which is called nemo that quod habet, which is a general principle which is purely not used in NI Act. It is used in the Sales of Goods Act or the Property Act. What does it say? Let's understand that with a proper example. See here, if you see, we have okay, we have A, this is B. Okay, now what has happened? This is a negotiable instrument. This is a negotiable instrument A, this is A, and you are B. I am giving this negotiable instrument to B. Okay, and this is being transferred. Okay, now what happens is you are having this check or the negotiable instrument. Now from you there is someone else, that is X or C. Let's take C because in this example it's given C. The C has stolen it from you. Stolen what? This check. Okay, this document, this instrument has been stolen from you by another person, that is C. When the C is stealing this negotiable instrument and this check, that means C is a defective title or defective owner of this goods, right? Yes or no? Right? So he is not valid of a title of the goods. Obviously, when it is defective means he is not valid, right? Now what happens is C is trying to give it to someone else in some consideration, in some value. Okay, in some value or some consideration. In some consideration or in some value, E. Think E. Okay, this is E. E, right? Now, E is the person who has this check, Okay. As and when this check is received by E and E is giving some value or some consideration for receiving this check. Okay. At this point of time, the E is called the owner of good title. Means he is a bona fide owner. Means he is also known as holder in due course. Holder in due course. You're seeing this? Holder in due course. It can be, some teachers explain it as HDC. Some teachers explain it as HIDC. Okay. Now, how E can be called as holder in due course? There are three categories to be confirmed by, then only it can be called as holder in due course. What are the categories? The first category is what? He should be in good faith. Second category is there should be some value, or this negotiable instrument should be got by some consideration. Okay. Next, it should be, these all things should be done before maturity of the negotiable instrument. Now you tell me, if in this check here there is a date given and E gets the negotiable instrument after the date given here, that means it is of no use. Means it is after maturity, right? It's of no use. Then keeping the negotiable instrument is also fully waste. So he should know this, that it should be before maturity. Got me? Here, one very important thing. Here, why are we reading this scenario is important. Okay, we are reading this scenario. Here it says that in the Sales of Goods Act or in any other act, what happens is, if the title, there is a defective title, if the goods are with the defective title or the defective person, and then the goods are shifting to another person, then the other person will also be treated as defective title. It is not in negotiable instrument. Negotiable instrument doesn't say this. Some other act says this. Okay. Hence, it is just saying that the principle here, nemo that quid habit, principle is not applicable or not valid in our NI Act. Fine. Everyone understood? Very good. Now, we have there is a rule. The rule of PVT of contract does not apply in the Negotiable Instrument Act. What does it say? It says that, what is PVT of contract? PVT of contract means the contract between two parties, right? So here it is specifying one thing, telling what? It is saying that when this negotiable instrument, that is check, is being transferred to B. A is transferring the negotiable instrument A is transferring the negotiable instrument to whom? To B. Okay, to B, that is check, that is this one. Okay, here what happens when he transfers this check to B? Okay, transfers this check to B. B has to give, the check will be transferred to B only when the goods has been got from B to A of amount is 10 lakhs as given in our example, right? Now what happens? This negotiable instrument is being shifting from B to C, C to D, D to E, E to F. Okay. Now, those people who are in between this and the last person, those people, that is C, D, and E, are called as holder in due course. Okay. And this is in the concept of negotiation chain. This is also called a concept of negotiation chain, where the check is being transferred from one person to another and the other and the other. The last is this person, okay, is doing what? Is going to the bank and putting the check here. Now, before he puts this check into the bank, what has happened is A has told that because I have got goods less than 10 lakhs, I am going to restrict this check and you are not going to get any money from it. So here F goes to bank, and here what happens is check got dishonored. Check got dishonored. Okay. Now, when the check got dishonored, is it the right of F? Is it the right of F to sue any person here in the negotiation chain? Yes or no? Yes. The F has the whole right to sue any person. It can sue F, E, it can sue D, it can sue C, it can sue D, B, and it can also ask A for what is the reason for this check to be dishonored. Fine. Hence, it is saying the PVT of contract does not apply in the Negotiable Instrument Act. Got me? Okay. The next concept, noting and protesting, I think we have already understood section 99 and section 100. But before, what happened was, this was a concept which we had in our material. Now they have not having it in the material. I have added it for more information. Okay. Now, the next point is, some people do not have a clarity that dishonor can be of two ways. It can be by non-payment. It can be by non-acceptance also. Means the other party is not accepting the negotiable instrument. At that time also it can be dishonor, and when you are not paying it, it can be also dishonor. Fine. Now coming to the main concept which I want to speak is the maturity concept. This concept, we have 1-2 questions which comes in our exam point of view, so make sure you read it. Okay, what does maturity concept speak about? What is maturity? First thing, in our bill of exchange and the promissory note, there is a fixed date. There will be a date given or a period given, right? So where a bill of exchange or a promissory note is payable at a fixed period after sight means, I have already explained to you in section 21, just 20 minutes before we had that in that question done, right? Where what happened, the question of maturity becomes important. Here there is a small concept, that is 3 grace periods will be added when it is on demand. Okay, so let's understand. For you I made an example. Let's understand this example. This is the section 21 is example. The first example we are reading is at site. Okay, the first one is, you can just make a note, is this question. This is the question which we have. What it's saying, it is saying that there is a bill of exchange which has been drawn on 20th December 2021. Okay, 2021. Now, this bill of exchange will be matured in 3 months. That is what is given. In 3 months. It is in specified. Means what? Drawn 20th December plus 3 months means Jan, Feb and March. That means 20th March 2022 is the maturity date, right? Here it is said that whatever the maturity date you have calculated, you have to add more 3 days to it. That is the grace 3 days. And then you get a date that is 23rd March 2022. Got me? This is at site. At site means at the place, at the place where your bill of exchange or the promissory note is being presented or is being drawn. Right? Now we are going to understand a scenario which is saying about after site. What is after site? Question, after site means after acceptance. Okay. Now what has happened here? Same thing. There is a bill of exchange which is drawn on 20th 20th December 2021. Okay. And here it is given that it will mature in 3 months. It is properly mentioned. Now what has happened is, you after presentment and after acceptance, it will be what and what date it will be? That is 20th December 2021 plus 3 months. Okay, that means 25th one minute. Here it is given the mature in 3 months. Okay, that's it. Next it is given after presentment and accepted on this date. This date. It is accepted on this date. Now what he has to do? You have to take this date or this date. Now you tell me which date has to be taken for calculation. Now boys and girls, very, very important is when it is after sight. When it is after sight and it is after acceptance, you have to always take the date after acceptance only. You cannot take the date of drawn bill. So you are taking this one, and from there you add 3 months. You add 3 months, and then what you get is this answer, 25th March 2022 you get from this date, not this date. Got me? There you add 3 days grace period. Grace period will be added and you get a calculation, and 20th March 2022 is the answer you have to write. Got me? So what are the different scenarios we read now is at site and after site. Important, boys and girls, it's very, very important for you to understand. Now we are going to read this is done. There are some questions related to it, examples. You can go ahead with the examples, that not to worry, it's very easy. Now, very important point. When the day of maturity is a holiday, then what will happen? Then it will be happening in the next preceding business day. It will be happening in the next preceding business day. Okay. Next, let's understand who is a holder and holder in due course. Okay. Now, holder is what? Holder is the same person. Holder is the person holder for consideration. Okay. Meaning holder with an example. Okay. Let's understand what is it. Who is an holder? Holder is a person who is entitled to the possession of negotiable instrument in his own name. And next, he is the person who is entitled to receive or recover. Remember this point. Receive or recover the amount due on negotiable instrument from the parties liable on negotiable instrument. He must be, first thing, he must be entitled to the possession of the goods in his own name. Next, he must be also entitled to recover and receive the amount due on negotiable instrument from the parties liable on negotiable instrument. Now, who is a holder for value? Holder for value means regards as all the parties prior to himself, means before himself, like it is A, B, C and D. This and this are holder for value. Okay, where it says holder of an instrument for which value has at any time been given. There is a value given for this check some or the other time. At that time it will be called as holder for value. Got me? See, for better understanding, we have this example. What does it say? It says it says that there is a person, that is Mr. Holder. Okay, Mr. Holder means he is having the negotiable instrument, that is check. He is the holder. Now, how can he be a holder? First thing, there are three conditions. First thing, he should have the, it should be in his own name. Second, he should have the possession of goods, means he should have that goods. Third point, he should be entitled to recover and receive. Fine. Now, what has happened? This negotiable instrument has been shifted to C. Then C transferring to D, D transferring to E transferring to the Mr. Bearer or Mr. Order. Okay. Now, these people who I said you negotiation chain, I made you understand, remember, where C, D, E are called holder in due course or called HDC. And here, as I said you, this HDC are saying about good faith, should be for a value or consideration. It should be for before maturity. Here, negotiable instrument can be bill of exchange, promissory note, and check. The holder can be any person. Remember this point. Can be any person. Fine. I hope you are understanding. Then a negotiable instrument, very, very important here. I say you, very, very important. It's saying what? A negotiable instrument made, drawn, accepted, endorsed, or transferred without consideration or for consideration, which fails to create obligation of payment of parties to the transaction. But if such party has transferred the instrument with or without endorsement to the holder for consideration, such holder and a subsequent holder entitling this title from him may recover the amount due such instrument from the transferor or for consideration or prior party thereto. Okay. Next. Who is holder in due course? Already explained. See here. X steals a check. X steals a check. If it is yes for a holder, yes, obviously X steals a check, may holder will be yes. Holder for value will be no because it's a defective title. Then again holder in due course will be also no. Okay. Next, X gets a check for consideration but after maturity. Then it will be yes. Holder for value, it will be yes. Holder in due course, it will be no. Why? Because it is after maturity. Remember. Now, in the same scenario, if it is before maturity, it will be yes, yes, yes. So, important point is this scenario. MCQ can be asked for this particular table. Okay. Is it fine? Understood, everyone? Now, what do you understand what do you mean by payment in due course? Payment in due course. Payment in due course means in a tenure. I mean in a period where a payment is to be done of an instrument in good faith without negligence to any person in possession thereof under the circumstances which do not afford a reasonable ground for believing that he is not the title to receive payment of amount therein mentioned. So in payment in due course is just simply saying that there is a payment in accordance with a apparent tenure, means there is a tenure given to you. According to that tenure, if the instrument is in good faith and without any negligence, without any negligence, then it can be transferred to any person who is in possession of that goods for that particular circumstances. After transferring, he can just do one thing to the negotiable instrument. He can mention that it was done in payment in due course and then give a sign, or he can just directly cancel the negotiable instrument. I'll tell you one example. One example of this payment in due course, just make a note. You can write a banker paid check. Okay. See, now what happened is a banker paid a check dated 31st August 2021. Okay. On 17th August 2021. Now you tell me that is it a payment in due course? Okay. Tell me. It is not a payment in due course because the payment of post dated check is not within the apparent tenure. Okay. It is not within the tenure given, so hence it is not a payment in due course. Another example I tell you is a banker a banker paid a check. Okay, just make a note. A banker paid a check that was clearly forged. Forged, you have signed it. It is not your check of your name. You've signed it. You've stolen it and signed it on someone's behalf. Okay, clearly forged to defraud the account holder in collusion with the payee. Do you think this is payment in due course? No, it is not a payment in due course because the payment was not in good faith. Why? Because it was forged, and it was forged to defraud another account holder. So these are some examples where you can say it is not a payment in due course, and you can get some small scenarios asking about when it cannot be a payment in due course. Okay. So I hope you have understood the 3 points which is required. The payment in due course is possible in a proper valid payment is done when the payment is in accordance with the particular period of time, the period of time and date. Tenor means the period of time and date of the instrument, must be in good faith and must be in good faith without any negligence. Okay, to be paid to any other person who is in possession of that circumstances which do not afford a reasonable ground of believing that he is not a person to receive payment of the amount therein mentioned. Okay, fine. I hope you understood. Now coming down, now we are going to read is the kinds and the types of negotiable instruments. As you people know, there are 3 kinds of negotiable instruments, which I said you, that is bill of exchange, promissory note, and check. Right. So when we read, these things are the important points of our chapter. Right. So we have to understand basically how a promissory note, how a check, and how a bill of exchange works, and what are the different conditions required, what are the features for it, what are the parties involved in it, and many other things, right? So if you see this specimen or a specimen copy of a promissory note, like how a promissory note looks like. So if you are able to see this, so it is saying about whom, about this particular place where it is being signed by a maker of the promissory note. Maker of the promissory note means the person who has made the promissory note. Okay. Then here there is place, there is date, the rupees, whatever the amount of promissory note should be is rupees is given. There is here totally given that I promise to pay dash or bearer or order the sum of rupees for a value received in the interest at the rate some percentage within the address, and to address will be also given. So if you are able to understand what is promissory note, obviously promissory note is an instrument. Which type of instrument? It is a negotiable instrument. What it is in writing. It must be stamped and signed by the maker. Okay, fine. There should be proper place, date mentioned. The to address must be also specified. There should be this promissory note should be signed by the maker to pay a certain amount of money to whom? To a certain person or the order of certain person or the bearer of instrument. Okay, it is saying this is being signed by the maker to pay a certain sum of money only to one. It can be a certain person, or it is given on order to be paid to a order of a certain person. It is an order of a certain person, or it is a bearer instrument. I think you are understanding. It can be an order, it can be a bearer instrument, right? So here, small things which are required. What are the parties involved? This is a party, this is a party. Fine. Who is a maker? As I said, you here, maker, this one, this person. Maker is a person who makes the promissory note. As the name suggests, who makes the promissory note is called a maker. And one very important thing, the promissory note is primary and unconditional. You people know what is unconditional? Normally, when, just a simple real type example, when you are in love with someone, then what happens is you unconditionally try to love and do everything for the other person. Unconditions means it is not having any certain conditions. It is unconditional. Okay. In the same way, his liability is primary and unconditional. Whose liability? The maker's liability. Next, the other party here is the payee. The other party here is the payee. What he is doing? He is a person to whom money is to be paid, named in the promissory note. It means that there is drawer, there is drawee, okay, and there is another party who is going to receive the amount. Now what happens? The maker of the instrument, that is also known as a debtor, that is also known as the payer, is doing what? Is issuing or making a promissory note. While making a promissory note, his liability is primary, means his liability is first, and then it is an unconditional situation. Okay. Now what happens is he issues this promissory note to the bearer or the creditor or the payee, or it is also known as the drawee. Okay. So in short, you can say that the customer, this is a customer who is giving the promissory note, issuing a promissory note to the supplier, As and when the supplier receives this promissory note, there is supply of goods and services to the customer. Fine. So mainly there are two parties involved, which is the maker and the pay. So what I said you, what is essentials? The first, it is in writing. An oral promise to pay is not sufficient. It should be an express, and in express it should be in written format. Not in over phone you say, or over over just a word you say. No, it won't be valid. It should be purely in written format. Next, it should express the promise to pay. See here, if you see this promissory note, it is expressing that it is promising to pay, right? When it is expressing, it is saying that it is one of the essential of promissory note. Fine. Next, it can be definite and unconditional promise. If a promise to pay is dependent on an event which is certain to happen, although the time of its happening is uncertain, the promise to pay is always unconditional. Okay. Now, for example, what happens is I have promised to pay you rupees 500 only when you attend my sister's marriage. That means I am putting a condition, and until unless that condition, that happening of the event is not done, I can't pay you rupees 500. Fine. So That is what it is, definite and unconditional promise. Now, it should be signed by the maker. Maker means the person who makes the promissory note. The promissory note must be signed by the maker as well as the promise to pay a certain sum. There should be a promise to be paid for a particular amount. Okay. Next, the promise to pay money only, not any other things. It should be purely money. The pay must be certain. The name of the pay must be specified, means it should be mentioned in the promissory note. Otherwise, it will be invalid. Pay means this one. Okay. Then comes, it should be stamped. As I said you, these are the features which are required for a promissory note. Now there's some examples. Let's read it. I promise to pay B or order rupees 500 on 1st January 2020. Yes, it is a promissory note. Here, I acknowledge myself to be indebted to B and in rupees 1000 to be paid in demand. No, because here I promise to pay is not mentioned. Okay, I promise to pay. Whenever you see I promise to pay, then you read other things. If everything is related, fine, then you give yes or no, right? Next, let's understand what is bill of exchange. So let's understand the pro forma of bills of exchange. How it is. Bill of exchange is there. This is the pro forma of bill of exchange. Just imagine this is the pro forma of bill of exchange. How does it work? Now, there are, the first thing it happens is there is drawer. Okay, drawer means a person who has signed or made the bill of exchange. Okay, here there will be two details. Here, details of the drawee. Okay, here it will be pay Mr. Payee rupees 10,000. Date will be given here and many other details will be given. Okay. Now what happens here is the situation here I'm saying. Now this is a Mr. Drawer. There is Mr. Drawer. This is Mr. Drawer. Mr. Drawer has made this bill of exchange telling the drawee to pay Mr. Pay rupees 10,000 on behalf of the drawer. Getting it? In this also, what happens? The bill of exchange must be in writing. It must contain an unconditional order. Second, it should be signed by the maker or the drawer. It should direct. Here you're saying it is giving directions. To whom? To the drawer. To do what? To pay. To pay Mr. Pay rupees 10,000. Okay, it can be Mr. Pay or it can be an order or it can be bearer instrument. I hope you understood. So what are the parties involved? The parties are, ma'am, it is a drawer, it is a drawee, and it is a payee. Understood simply? Now, what does a drawer do? As I said you, drawer draws the bill and makes the bill is called a drawer. His liability is secondary and conditional. Here, his liability is conditional and secondary. Who is drawing? The person on whom the bill is drawn. On whom the bill is drawn, this one. On acceptance of the bill, he is called the acceptor. As in when the bill is accepted, the drawee is becoming an acceptor. This can be an MCQ. He becomes liable for the payment of the bill. and this is the primary liability and unconditional. Remember, in our promissory note, the drawer or the maker had primary and unconditional liability. Okay, this is promissory note. Under bill of exchange, the drawer has secondary and conditional liability, but here the drawer has primary and unconditional liability. Remember this difference. Who is a pay? Who is a pay? A pay is a person to whom the money is to be paid and is named in the bill is called pay. Easy? Got me? Fine. What are the essentials? It should be in writing. It should express that it is promising to pay. It should definite and conditional promise should be there. It should be signed. It should have a sum in the order and must be certain. The order to pay only money. It should be only money. The drawer, and the pay. The three parties must be certain. Next, it should be stamped. Almost 6-7 essentials are same in all. The other 3-4 can be just changed. Okay. Now, I think you understand what is the proper difference between a promissory note and a bill of exchange. Okay. A promissory note and so what is a promissory note doing? A promissory note is an instrument in writing, ma'am. It is the drawer is having, there are two parties involved, the drawer and the drawer. It is unconditional and it should be signed by the maker and many other essentials also required. Okay, there should be certain amount. It should be only money, it should be only the sum of money. It should have a certain person and that's how it is called promissory note. What is bill of exchange? Bill of exchange is an instrument. It should be in writing. It is unconditional order. It should be signed by the maker. There are three parties involved: the drawer, and the pay. How it works is the drawer makes the bill of exchange, instructs or give instructions to the drawer, and then the drawer pays it to the pay or the person or a certain person, or it can be a bearer instrument. Okay, so that's how already discussed this thing. I think, yeah, the bill of exchange needs acceptance from drawer. Here it does not require any acceptance. It is payable to the, it cannot be payable to the bearer, but it cannot be payable to the bearer on demand. Okay, a bill of exchange can be drawn payable to the bearer. Okay, important difference. Fine. Now let's understand what is check. Okay, now basically you must have seen how the check looks, right? Right, I think so. You have seen how a check looks, right? This is the way how a check looks like. This is the way how a check looks like. Okay, almost the same way. Now little bit with the technology, little bit changes are there. Okay, but this is the main pro forma. So what happens is, whoever the check is, that particular person needs to sign here. Okay, this is the check number which we have with the serial numbers. We have to mention the date here. Okay, you have to write to whom, if it is a company, ABC company, or to a person, it is Amit or so. Okay, you have to write rupees 10,000 or so. It should be in words, and here the amount should be written in 10,000 in letters, digits. Here this is the bank details which is there, the bank details, ABC bank, and the address is mentioned, and as well as the account number is mentioned, okay, of yours, so that you put a sign and give it to the person. From your account, it goes to the account of that particular person whose name is written or the company's name is written, and then it gets cleared in his bank, and so many things happen. and then you get it credited in your account. Got it? Understood? So what is check? Check is also one of the important type of negotiable instrument, where what happens, a check is just like a bill of exchange drawn on a specified banker and not expressed to be payable otherwise on demand, and it includes the electronic image of a truncated check and a check in an electronic form. Okay. So here what happens, it's the same, it's the part or the type of bill of exchange where what happens, you have seen there is drawer instructing the instructions to the drawer to pay to the pay, right? In the same way here, the drawee is a special bank. Okay, now what has happened, this is drawer who has made a check and signed and written, like, given it to the payee's name. Okay, now obviously this drawer is having an account in SBI and the pay is having an account in ICICI. Now, obviously, from SBI ICICI account, it will not be, the check will not be cleared, and it will, the fund will be not be transferred so easily. So what happens? The drawer is requesting the SBI. Okay, that is SBI to do what? To release the payment, release the payment, and give, okay, and give instructions to the ICICI bank. Okay, whenever the pay is requesting on demand, it will be getting the amount in their account. Fine. So here what happens, this is check, it is a type of bill of exchange. The bill of exchange is drawn on a specified bank and then it is payable on demand. Simple and easy, right? So here the three parties, drawer, drawee, and the payee involved, which I already said you. Fine. Here, one small important point is the payee can be a drawer itself or it can be the third party. It can be Mr. XYZ. It can be self also. Sometimes you do a check self, you write, means you're doing for yourself in different bank, right? You do it, right? Sometimes, hence at that time the pay can also be the drawer sometimes, and at sometimes the pay can be a third party or XYZ. So what are the different types of checks? There are two types of checks, which are electronic check and truncated check. What is electronic check? Electronic check is a check which contains an exact mirror image of the paper check. Whatever is there, it is of a electronic format. It's the same ditto types, okay? Types, and is generated, which is written, which is signed in a secure system, and it is used by a digital signature, DSC. Okay, so that the security is there and it is very safe. What is truncated check? Check which is truncated during the course of clearing cycle, either by the clearing house or by the bank, whether paying or receiving the payment immediately on generation of the electronic image of the transmission, substitution, and further movement of physics check in writing. Fine. Okay. So what is truncation? Truncation is a process of stopping the flow of physical check issued by the drawer at some point of time by the presentation by presenting it in the bank. Okay, so what does it say? It says that it is stopping the flow of money to be going from one party to the from the payer banker to the collection banker. So the essentials, as I said, it should be written, it should be expressed, that it should be promising to pay, it should be definite and unconditional, it should be signed by the maker, there should be a certain sum which should be there, it should be written, then it should be money only, the draw and the pay must be certain, it should be on demand. It is on demand, very important. The drawer upon the drawn upon a specified bank, which I said you, it will be drawn on a specified bank. Fine. Okay. So what is the difference between the check and the bill of exchange? You must have seen the very important difference is in check, it is the drawer is the drawer is a person. The pay can be a drawer itself, or else it can be a third party. The drawee is the bank. Okay, and then it should be drawn on a specified bank only, upon a specified banker or a bank. Okay, and here a bill of exchange doesn't have these all things. In both the things there are three parties which are involved, and in bill of exchange very important is the grace period given for maturity is 3 grace periods. Okay, 3 extra grace periods which are given. A bill cannot be crossed, but a check can be crossed. A check does not require stamping, but a bill requires stamping. Both of them require signature. Both of them require a maker or a drawer. And so, okay, fine. Okay, I think we have understood what is noting now. We're going ahead with what are the different ways, what is crossing of check, what are the different ways of crossing of check, how crossing of check can be done, who may cross the check, types of crossing, and many other things. Fine. So let's understand what is crossing. Okay, now there is a check, and you must have seen in check this crossing is done on the check. This means there is crossing of check. What happens when this crossing is done? It means it is giving an instruction to whom? To the drawee, means to the paying bank. Paying bank means the bank who is paying the amount. Okay, the paying bank, that the payment is not to be made at the counter, but it should be made through a bank. Means it is saying, now I'll tell you a very easy and a good example. Now what has happened is, this is me, I have signed a check, this is my SBI account number, this is the check number, this I have done double cross, and here I have written paid to Mr. SRK. Okay, and this date will be given and many other things will be given. Other things are default. Okay, that will be there. When I'm writing this in important thing and giving a, like, crossing the check, I am instructing my bank, that is the paying bank. Okay, what am I instructing? I'm instructing the drawee, that is the paying bank, not to give rupees 5,000 when SRK comes to the bank and asks. Okay, not over the counter. It has to go to the bank account. Important point, bank account. It cannot be withdrawn on the counter. Got me? Understanding? Okay. Now, the check is either an open or a cross check. It can be open or a cross check. What is crossing here? Simply crossing means it is giving a direction to whom? To the drawee bank. Not to pay the check at the counter of the bank, but to pay it to a person who presents it through a banker. Means you understood? In this scenario, what is happening, why crossing is required? And normally in many business, like business or trade or commerce, they use crossing of check. Why? Because it will be properly traced. The account, from one account to another account, it will be going. It can trace the person to whom the payment is done. Got me? Why? How it can be traced? By depositing that amount in that person's account. If SRK is coming and taking it on the counter, it doesn't mean it is a SRK or any other person. You do not know. So to keep the check safe and to have a proper control or a security system over the business, normally they use the crossing of check. Boys and girls, important point discussed. Okay, now an open check can be presented by pay to the paying banker and is paid over the counter. What is open check? Open check can be presented by the payee, to the paying banker. When there is a open check, if it is think it is a open check, okay, this can be presented by whom? Mr. Pay to pays banker, pays to the paying banker and is paid over the counter, and then as you present it, you get the money over the counter. Okay, fine. What is the object of crossing? As I said you, crossing is a warning to the bank not to make a payment of the cross check over the counter, to trace the check is safe or not, to have to caution, give a caution to the paying banker. Got me? So these are some points, 3 points which are remember, it's very necessary why crossing is required. So the first one is crossing affects the mode of payment of check. Okay, an open or uncrossed check is payable at the payee or a holder at the counter of the bank. Okay, open check is done in the counter of the bank. In such case, if a wrong person takes away the payment of the check, it is difficult to trace. You are able to understand why crossing required. Now you're understanding essence of why crossing, essence of this chapter, essence of negotiable instrument. Okay, hence it is always taken care to take care to trace the person and to see whether that person is having a proper account or not. There the payment, the check must be properly crossed if it is done for trade, commerce or business purpose. Okay, now, the crossing does not affect the transferability or negotiability of a check. It does not affect the transferability or negotiability of the check. A crossed check can be negotiated just the same way as the open check. It can be in the same way as it is in the open check. Here what happens, a person acquiring a cross check in good faith becomes the holder in due course as in case of open check. As I said you, if a person having a cross check in good faith becomes HDC just in case of open check. The crossing is a material alteration, but crossing of check by a holder does not in any way affect his rights in the respect of check. It is just a material alteration to keep the check safe and to trace the person. It is required, not for any other, like not affecting the rights of the check. Okay, who may cross? Who may cross? It can be the drawer itself, it can be the holder, it can be the banker. Who may cross? The drawer, this is the drawer, the drawer or the person who is holding the check or the banker, okay, can cross the check. Fine. Now we have are the what are the different types of crossing. There are 1, 2, 3, 4 types of crossing, and very interesting, boys and girls, very interesting. The first one is the general crossing. As you see the specimen of the general crossing, to clear your mindset, you should know how a general crossing is done. In general crossing, it is just saying the check bears across its face on addition and the words and company or any abbreviations thereon between the parallel two lines. See, it can be a two lines, it can be and company, it can be account pay, it can be non-negotiable, any words which is abbreviating what it is wanting to do with that check can be mentioned. Okay, where a check is generally crossed generally, the banker on whom it is drawn shall not pay it otherwise than to the banker. Okay. Next, special crossing. Special crossing means it is specifying the check here specifies within those two parallel lines, it specifies the name of the banker. Okay, it is saying it bears across its face on the entry of the name of the banker, either with or without the words non-negotiable. Sometimes it is written non-negotiable like this. Sometimes it's not written like this. Okay. Here, the check is considered to have been crossed specially to that banker. Means when you go and present this check, it should be presented to that bank only. If you present it to the Bank of Baroda as mentioned here, then only it will be cleared. If you present it someone else, it will not be cleared. See, it is given. In case of special crossing, the addition of two parallel lines is not essential through though generally the name of the banker to which the check is crossed specially is written between the parallel lines. Means when you are doing parallel lines and writing it, there is no additional again writing the parallel lines. Got me? Okay. Now, what is restrictive account pay? A restrictive account pay check. What is this type? This type of crossing, the purpose of this type of crossing where it is written account pay only, or that particular pay, the bank's name, only. It can be negotiable, it can be written the word negotiable or not. Okay, so what happens, it is helpful for what? This is helpful for what? In order to restrict the risk to go to a wrong person's profile. Means for example, this is a check, okay, and there are many people working in an office. They go to the manager's room and they see this is the check like put on the table. Okay, if in the check it is been restrictive account pays name is written or the bank's name is written, the pays bank name is written, then it will be credited to that bank only. Okay, if any other person is going and taking it, it will find out that wrong person, and from this case you can understand that it will obviate the risk of a wrong person obtaining the payment of the check. Okay, then the last one is what is non-negotiable crossing, where it is properly mentioned that here a person taking a check crossed generally or specially, bearing in either case, it can be any case, the words non-negotiable shall not have or shall not be able to give a better title to the check than the title the person from whom he took. Okay, in consequence, if the title of the transferor is defective, the title of the transferee would be vitiated by the defect. But in case the bill negotiated in an ordinary way, the title of the holder in due course would not be affected by the defect. You are understanding? I said you that if this X is giving the negotiable instrument to Y, and Y is like, Y, from Y it is being stolen by thief. Okay, from thief it is been going to S. This is holder in due course. This is defective title. The defective title will not be going to the SY, because he has to clarify 3 points. It should be before maturity, it should be good faith, and it should be in value or consideration. Okay, hence it is said that check crossed is non-negotiable, does not affect the transferability of the negotiable instrument in any way. Necessary, this is a MCQ point to be discussed. Fine. So now we are going to understand is the concept which is very necessary for us to understand, and I feel it's very, very important from exam point of view, as well as from your concept clarity. The main words which you see is the paying banker and the collecting banker. We are going to understand who is the paying bank and who is the collecting bank. If you would have understood properly what is checks, what is crossing of checks, and so now you can only clarify and tell me that how a check looks like. You people know how a check looks like. This is a check. Now I have crossed the check, and this is the signature thing. This is V, who is the drawer. This is SBI, who is the drawee, and this is Mr. P, who is the pay. Fine. Now, when it comes to the scenario of check which has been crossed, here it is purely saying that what the drawer is giving instructions to whom? To the drawee, telling what? To not to give the payee, Mr. P, the check over the counter. Okay, it has to restrict payee to get the rupees in cash. So here check, here crossing, I mean while crossing, it speaks purely that from the drawer's account, it should go to the drawee's account. It should not be withdrawn by cash. If this is the scenario, now you can understand, like, you have read which is debit, which is credit, like, in accounts you have read, right? Now you people imagine and tell me that which will be a debit, from which account it will be debit, and which account it will be credit. Ma'am, it will be V account debit to P account credit, rupees 1000. Okay, rupees 1000. If this is the scenario, if this is the case, okay, do you think that from directly V account it will go to P account? No, there is so much things to be done in this particular red color I have written. I mean this particular portion, how it is. Now the V account is in SBI Bank. P account is in UBI, Union Bank of India. Okay, because these both the banks are different. Okay, both the banks are different. Now from the drawer's bank, that is SBI, the amount will go to the pays bank, that is UBI, and then later it will be credited to the P's account in the UBI. Okay, this is how the process of clearing of check is done. That is why when you do clearing, you must have heard from elders that when you have given a check, or a business person has given you a check, and when you go and deposit the check in your bank, it takes some time, 5 days, 6 days, or 7 days. Sometimes it's very easy. Why? Because this is a process which goes from one bank to other, and there is things which is cleared off, and then it comes to your account. Directly doesn't come. You feel that this is the only thing which happens as journal entry, but no, inside there are so many entries which is done. How it will be? Like you have V account, from V account it will be SBI's account, it will go from SBI, it will go to UBI account, and then it will go reach the P account. This is how clearing of check is possible. Maybe some people don't know. That's why I'm saying you. Now, in this clearing process, can you people explain me which one is a paying banker and which one is a collecting banker? Because I think you got a concept clarity. Now you can tell me that paying banker is this. This is paying bank, and this one is the collecting bank. Means the UBI is going to receive money from SBI, and here this SBI is going to pay money to UBI. This is how they are called as collecting banker as well as paying banker. Got me? Understood the concept, everyone? Okay. To make it clarify and easy for you, I'm making it easier. Okay. Now this is Mr. X. Mr. X. Mr. X has an account in SBI. Hence, this is the paying bank. Now, Mr. X tries to issue check to Mr. Y. Mr. Y. And Mr. Y has an account in Union Bank of India. Now, this Union Bank of India is the collection bank. Okay, so the check is being issued by X, that is the drawer. SBI is the mediator, that is the drawee. Mr. Y is the payee, who is receiving the amount as when presented in his bank. Understood? Okay. Now, when you are understanding paying banker and collecting banker, or collection banker or paying banker concept, there are some things which we need to understand, that how there can be a protection to be given to the paying banker, and how there can be a protection given to the collecting banker. Okay, how there can be protection of liability when there arises many situations where there can be risk or liability, and how there can be a protection given. What are the cases where there can be protection given to the paying banker and the collecting banker? So for that, what I suggest is you people make a small table so that it's easy for you to understand. Okay, so the first concept we'll read is protection to the paying banker. Okay, just make a table, and there what you do is I'm writing it. Okay, I'm making it for you, don't worry. We are reading is negotiable instrument Act 1881. Okay, in this we are reading is concept protection against liability to paying bank, banks or banker. Okay, so in that we have let's make a table. In that, let's do this nature of check. There are different types of check. We are going to understand the scenario when there are different types of check and how you are going to do a protection against the liability which is going to be occurred in this type of checks. Conditions. Conditions subject to which protection is available to paying banker. Okay, so the first one is check payable to order. Order means what? It will be check given to a particular person. Example, check given to a person like A, or order. It will be on order basis. Okay, here what you have to do, if this is the nature of the check, what has to be done? First thing is you have to check the conditions. Okay, first is the payment is made in due course. Section 10, which we read just some time before. Next, you have to check is the protection shall be available. It shall be available even if it is subsequently found to be signed and delivered or endorsed through a forgery or through agent of pay. If this is the scenario, you have to protect whom? The true owner. Fine. Second, check originally payable to bearer. Okay, then what? Shit. Bearer. Then what? That should be the first scenario should be the same. The first scenario should be same, that is payment in due course. Next is the payment is made to the bearer of the check. As I said you, it should be bearer of the check. That means it can be any person. There is no name written, right? Next is the protection shall be available even if, remember, the protection should be available even even if it is subsequently found that any endorsement or sign and delivery on the check has been forged. In this case also it's the same, the above one, same thing, it's the same one. Okay, so I'm not writing. The third one is checks crossed generally. When the checks are crossed generally in general scenario, then what you have to check the condition is it should be payment should be done in due course. Second, you have to check is the payment is made to any banker. Then the fourth scenario is check crossed specially, means in special scenarios only, means where it is been given properly that the payment is made to the banker to whom the check is crossed, to whom the check is crossed. Next, no protection in the case of forged signature of drawer. There is no protection in the case of signature of forged drawer, because obviously you can't know according to the paying banker. Accordingly, the paying banker has to verify the signature of his customer and is liable in case the signature of the drawer's signature is forged. Okay, this is the thing he has to do. Now, next you have to think is protection to the collecting banker. So what you have to do is a collecting banker will be protected subject to some following conditions. What are the conditions? There are some 3-4 conditions. If the title of the instrument in the hands of the customer is defective, I said you that if the title of the instrument, okay, if the title of the instrument is in the hands of the customer and is found defective, okay, then there are 4 conditions which are important. The first, the collecting banker shall act as an agent for the collection on behalf of the customer. On behalf of the customer, keywords I'm saying you. Second, the collecting banker, here collecting banker the collecting banker receives a payment for a customer and the check is crossed at this scenario. Next, the check must be crossed before it gets into the hands of the collecting banker. Next, the collecting banker must have been acted in good faith and without negligence. As you see, the points are given here. Means it is saying that the banker needs to prove these things. Only when he proves these things, then it will be protecting against the liability of the collecting banker. Understood, everyone? It's very simple, very simple. Okay. Now, let's understand what is the concept of acceptor and acceptor for honor. Okay. So simply what does it say is, as I already have told you, that after a drawee of a bill has signed his assent upon the bill, after the drawee of the bill has signed the assent, means his confirmation upon the bill, or if there are more parts thereon, upon one of which part delivered the same or given notice by signing to the holder or to some person on behalf, he is called the acceptor. Thus, who is an acceptor? Who is an acceptor? So an acceptor of a drawee who has signed his assent upon the bill and is delivered it to the holder is called the acceptor. Got me? Hence, what is the meaning of acceptance? The drawee signs the bill. Okay, drawee. There is drawee who signs the bill. After signing the bill, the drawee delivers it to the holder of the bill. Whoever is the holder of the bill, he delivers it. Or whether on the face or the back of the bill, signs without the word accepted or with the word accepted is also valid. After signing on the bill, what he does is he delivers or intimates the holder that the bill has been accepted. So what happens is, this is a concept. What I'm saying is, think this is a bill. Okay, bill. This is the drawer. Okay, this is the pay. This is think to Mr. Y is the drawing. Now, in one scenario, in some cases, what happens is, in this bill, no, the drawee gives his assent or concern over this bill. It can be on the face of the bill or in the back side of the bill by just doing accepted or just signing on the bill. When he does so, he is going to be called as acceptor. Okay, hence there comes the situation called acceptance. What are the different types of acceptance? It can be a general or a qualified acceptance. As you know, general is without qualifications and acceptance bill is subject to some qualifications. Okay, means qualifications means happening of an event. Means if, for example, X will say that I will give you rupees 500 only when you get married to my daughter. Okay, so it is that you have, Y will only receive 500 when this event is getting completed. This is how they are saying there is some qualification, and qualification here means happening of an event. Okay, now there is, what is the effect of qualified acceptance? Okay, then what happens is, the holder may object to qualified acceptance. In such case, it shall be treated as the bill is dishonored or due to non-acceptance. How it will be called dishonor? Due to non-acceptance of the bill. He may also give an consent to the qualified acceptance. In such case, all the previous parties not consenting to it are discharged. Hence, it is called as effect of qualified acceptance. Okay. When can a bill be called as a fictitious, on the name of a fictitious? A bill, acceptance of a bill in fictitious names means which is not having a proper name. Okay. And an acceptor of the bill of exchange drawn in a fictitious name and payable in a drawer's order is not by reason of such name is fictitious. Relieved from the liability of any holder in due course, claiming under an endorsement by the same hand as the drawee signature, that is through forgery, and purporting to be made by the drawer, At that time, it will be called as section 42, which speaks about the acceptance of bill in fictitious name. Now, this is very important example. What is it? I'm reading it for you. X draws a bill on Y. X draws a bill on Y. But it is in the fictitious name of Z. It is in the fictitious name of Z. Now, the bill is payable to the order of Z. To the order of Z. The bill is duly accepted by Y. M obtains the bill from X, thus becoming in holder in due course. Okay. Can Y avoid payment of the bill? Decide and give the solution. Here we have solution. Bill drawn in the fictitious name. Here you see it is fictitious number Z. Okay, is the situation. Here what happens is the bill of exchange is drawn payable to the drawer's order. Payable to the drawer's order in a fictitious name, that is Z, and is endorsed by the same hand as the drawer's signature, that is done forgery. Okay. It is not permissible for the accepted to allege as against the holder in due course that such name is fictitious. Hence here in the instance case, what happens? Y cannot avoid the payment by raising a plea that the drawer is fictitious. The only condition is that the signature of Z as a drawer and as endorser must be the same handwriting. If it is having the same handwriting, same signature, then it will accept and it will not avoid the payment. It will give the payment. Got me? So what is acceptance for honor? What can be the conditions for acceptance for honor? I have already said that when a bill of exchange or BOE has been dishonored by non-acceptance and any person accepts it for honor of the drawer or by any endorsee, such person is called acceptor for honor. There won't be any question as such, but there will be case studies asked on it. Like this type of case study can be asked. Okay. These are the essentials for a valid acceptance for honor. The same thing, it must be writing the whole amount or whole amount due on the bill. It should be whole amount. The acceptance for must be liable on the bill. The acceptance for honor must be before bill overdue. It should be noted and protested for the non-acceptance for better security. Okay, those are the things which I said. Okay. What is the right of acceptor for honor? The right of acceptor for honor is entitled to what? To recover. To recover the amount paid by him. To recover the amount paid by him from the parties for whose honor of the bill was accepted and from all parties prior to such party. Okay. So this was about acceptance and acceptor. Okay. Now coming to the concept of negotiation. This negotiation is an important section that is saying about section 14. There are small things which are like, you know, what are the different modes of negotiation? What is the duration of negotiation? Then you have is negotiation by delivery, negotiation, what are the types of delivery, then How, if delivery done, how much time it will be done, negotiation by endorsement and delivery. What is endorsement? What are the different types of endorsement, like, you know, classes of endorsement? So these are the things which we will learn. Okay. So coming to what is negotiation, negotiation simply says about the same thing, transferability. Transferability. What does it say? It is transferring of the negotiable instrument to one person as so as to constitute that the person is the holder of the negotiable instrument. Okay. Whoever is who, like, you know, negotiation means the transfer of negotiable instrument to any other person so as to constitute that the person is the holder of the negotiable instrument. The rights of the negotiable instrument can be also transferred from one person to another through this concept called negotiation. Right. Here comes section 14, which purely says about there is a transfer of ownership of the instrument. Remember what is transfer of ownership? Transfer of ownership here simply says about how that particular goods or how that particular item is being transferred from one particular person to another particular person, and that goods becomes the goods of that person only. Hence the owner is being changed. Hence it is called transfer of ownership of the instrument. There can be negotiation by two ways. As I said, your negotiation by delivery, that is through, like, you know, mere delivery, negotiated by either by mere delivery, that can be done by payable by a bearer, where what happens, it is a bearer instrument which may be negotiated by delivery. Okay, it will be a totally, the delivery must be voluntary. It should not be any forceful delivery. Second is the negotiable instrument may be negotiated by the endorsement, means by signing and then giving it to another person and specifying a particular name of that person, and then again endorsing that it will be endorsed by one person. Okay. So it can be it what how this is possible, it is possible by the payable to the order, or the order instrument can be negotiated by the way of endorsement and delivery, that is signing and delivery. Fine. So what is the duration of a negotiation? The duration of negotiation is, like, you know, an instrument may be negotiated, the instrument may be negotiated until the payment thereof by the maker, drawee, and the acceptor at and after maturity, but not after such payment. Hence, it is said the instrument may be satisfied even without the payment, and such satisfaction is equivalent to payment. Okay, so this was about what is negotiation, meaning of negotiation done, what are the types of negotiation, negotiation by delivery, negotiation by endorsement, and delivery also told. Right now, what is endorsement? Section 15 speaks about what is endorsement. Endorsement and endorsement, these both are nouns. Okay, both are nouns. Now what happens is, there is a confusion between people that, ma'am, what is endorsement, what is endorsement? It is the same thing. Okay, it is just a common, sometimes it is used in this way in some phases, and sometimes it is used in this way. And in like, you know, in Indian law it is used, and in American or English law it is differently used. Okay. Section 15 and 16 says that endorsement means signing on the face or the back of the check. Now this is the check, this is the face of the check. Okay, and I'm doing this another thing, this is the back of the check. Now face of the check, what happens, this is the person, this is drawer, this is draw, this is pay. Okay, here when it is being signed on the face of the negotiable instrument, or here it is being signed at the back of the negotiable instrument, or it is being attached with a slip of paper where it is being signed and where the details of why the purpose of the sign is being written. This is called endorsement. Okay, the person who is doing a sign here and here is what is the endorsee. Okay, it's called the endorsee. That means it is given what? It is signing on the face or the back of the negotiable instrument or on the slip of a paper, and next is called along. Along. So here a long MCQ can be asked. So signs for the purpose and stamped paper intended to be called as negotiable instrument. He is said to endorse the same. Section 15 is speaking the person to the instrument is endorsed is the endorsee. Is the endorsee. The signature may be on the face of the instrument. No particular words is necessary for endorsement. There is nothing given specifically that this should be written, right? So very important is 3 important points. So what are the important points? See, endorsement, sorry, endorsement. First is signing. Where it will be signed? Front or face or back or along will be attached. Section 15. Okay. First point. Second, by whom? By the holder of the check. Whoever is holding the check, holder of the negotiable instrument. Okay. Next, for what purpose? For purpose is negotiating such negotiable instrument. This is the only way you read what does endorsement mean. Now, understood everyone? Now, simply what does endorsement mean? Endorsement means signing a negotiable instrument. For what purpose? For the negotiability of negotiable instrument. Okay. What are the essentials for the negotiable? I mean, what are the essentials? Essentials or requirements of valid endorsement. Obviously, very important. It must be in writing. Okay. Where it will be writing? On the face or the back. Okay. Next, it should be signed. Okay. By whom? By the endorser. Next, it should be made by the holder. Should be made by the holder. Now, who all are the parties involved? Parties involved in endorsement. First is endorser. The next is endorsee. Who is endorser? the person who endorses a negotiable instrument is endorser. A person whom to whom a negotiable instrument is endorsed is endorsee. Got me? Understood? Fine. Now going ahead, we will understand what are the kinds of endorsement. First, blank endorsement. What happened in this? What happens here in this? We will see once. Okay, sorry. Going down. Yes. What are the classes of endorsement, or what are the kinds of endorsement? Blank, full, partial, restrictive, conditional, sans recourse, sans phrases, and facultative. Very, very necessary is sans recourse, sans phrases, facultative, restrictive are, I think, are the points where they ask questions. Now, what is a blank endorsement? Blank endorsement, very important, is one of the necessary, or where what happens, it is called as a general endorsement, where what happens, there is blank, there is endorser, there is endorsement made by the endorser without writing the name of the endorsee. Means there will be endorser, okay, endorser, there will be no name written here. It will be not having any name, where the endorser just puts the sign without specifying the endorsee's name. That is why it is called blank endorser. Okay. Now, what is special endorsement or endorsement in full? Where what happens, there is endorsement made by the holder, that is the endorser, signing his name and adding a direction to pay the amount to a specified person. What he does, he will sign the name, okay, name, and then give direction to the specified person, okay. Thus, where the instrument states, example, pay X or order, and is signed by A. Here, see, example, this is example. I hope you understood. Okay. Next, restrictive endorsement. What does happen in restrictive endorsement? Where what happens is it restricts the right of the further negotiation. Means when X is giving this negotiable instrument to Y cannot further negotiate and give it to anyone else. Hence, it will be called as restrictive. As the name suggests, it prohibits or restricts the further negotiability of this instrument. Okay. Partial endorsement. Partial endorsement, what happens? Here, partial endorsement, very necessary. Partial endorsement is not valid as per law. It should be full or no. It should not be partial. Okay. What is conditional endorsement? Conditional endorsement means what? It says about conditional way of endorsing. Why? How? The power to an endorser, to insert the endorsement by words, a stipulated excluding or limiting his liability to the holder by making such liability or the right of the endorsee to receive the amount due thereupon happening of an event, although such event has never happened. Okay, so it is having up to, like, it is restricting up to a happening of an event. Until unless there is happening of the event, this endorsement cannot be possible. Here under this there are four things. First, SAN recourse. What is SAN recourse? By adding these words SAN recourse after the endorsement, the endorser declines to accept any liability on the instrument of any subsequent party. If there is any liability of the instrument of any subsequent party, the holder declines to accept it. Okay, and sometimes where an endorser who so excludes his liability as an endorser afterwards becomes the holder of the same instrument. Such, let's understand one example. What is the example? See, it is written pay Mr. A or order, comma, SAN recourse is written. If this is written, it is saying that by adding this word SAN recourse, what happens if the instrument is dishonored by subsequent holder, including the holder in due course, cannot look to the endorser for payment of the same. Okay, hence the instrument is as such is not affected to all the parties, is not affected to all the parties are, is not affected, and all the parties are liable on the instrument other than such person. Other than this person, other parties are liable for this instrument. What is San Francisco? San Francisco means when and, like, when you add these words added at the end of the endorsement indicating no expenses should be incurred on the account of the bill. The account of the bill. For example, what happens? It will be saying that pay Mr. A or order and write San Francisco. That means it is saying what? It is saying this simple thing that where an endorser means the holder of the negotiable instrument who wants the endorsee, okay, or any subsequent holder of the instrument to incur any expenses on his account on the instrument. It is saying that the holder of the instrument is saying to incur the expenses of the instrument. Such instrument is called San Francisco instrument. Okay, next, facultative endorsement. What does it say? It says one thing, that when where an endorser waives one or more of his rights, the endorsement is called facultative endorsement. Means, for example, if he says that, if the endorser says pay Mr. A or order notice of dishonor dispensed with or dishonor waived, means it will be waiving off this right and removing this right. Okay, what is conditional endorsement? Where it is saying conditional or contingent. It is saying the endorsement by which the endorser makes his liability depending upon the happening of the event. For example, he will say pay Mr. A only when Mr. A, Mr. A will go to work for next 5 days. Means after 5 days, whether Mr. A has gone to work or not. After checking, this will be endorsed off. Got me? Fine. Understood, everyone? That was something which is necessary. Okay. Now, so we have something for you, that is the distinction between the negotiation and assignment. What is assignment? Assignment means where any right is transferred by the way of assignment. The transfer of property example applies here, but here negotiation, the negotiable instrument is transferred by way of negotiation. Okay. The negotiation can be made for transferring negotiable instrument. Here it is made for any right. Assignment is valid only if it is in writing and signed. Here the bearer instrument can be mere delivery or by sign and delivery. Consideration, it is presumed the negotiable instrument was negotiated, but consideration, here no such presumption is there. Then here the other party has to prove that the negotiation was without consideration. Here the assignee has to prove that there is some consideration. So these are some things which are giving about what is the difference between assignment and negotiation. Negotiation back already said there is something instrument negotiable till payment or satisfaction. This point section 60 says what, when a negotiable instrument may be negotiated, okay, until payment or satisfaction thereof, the maker, drawer and the acceptor, or the other, or after maturity but not after the payment or satisfaction. It can be done so. Okay. Next, instrument acquired after dishonor or when overdue. Okay. Section 59 says that a holder of the instrument means the person who is drawing, okay, is the holder of the instrument for now. Again, when this is going to another person, that person gets the holder. Hence, the holder of the instrument who has acquired it after dishonor, whether by non-acceptance, it can be dishonor by non-acceptance, it can be by non-payment, it can be through notice, or if it is not done before maturity. At that case, then what happens? It has only and against other parties the right thereon of his transfer. Okay. Then you have is an instrument obtained by lawful means or for unlawful consideration. When a negotiable instrument has been lost or has been obtained by whom? By these people, maker, acceptor or holder. These three people, thereby means of what? Offense or fraud or unlawful consideration. At that time, it will be called as instrument obtained by unlawful consideration, unlawful means. Discharge. What is discharge? Discharge means, like, coming out, or you're done with your work, okay, something like that. You say you're discharged. Now, for example, you're going to an hospital and there you say the patient is discharged, means what? You're coming out from the hospital and going to your home, right? Discharged means the work of the hospital and the staying at the hospital is done. So it is called discharge. In the same way, discharge of an instrument means that when the liability is being discharged ultimately, then the instrument is called discharged. How an instrument is said to be discharged only when a party who is ultimately liable is also discharged from the liability. What are the different modes of discharge? Discharge can be done in the payment in due course when what happens, already said you, section 10 we have already discussed that in this what happens when the payment is made, the negotiable instrument must be cancelled or the fact of payment must be recorded. As I said you, in the negotiable instrument, if the payment is given, it should be written here, okay, or it should be cancelled. The negotiable instrument should be cancelled. Okay, next, cancel in the point of cancellation, where the holder itself cancels the name of the party primarily liable on the negotiable instrument, that time it becomes cancellation. Release, where the holder releases or renounces his rights against the primary party, at that time the negotiable instrument is discharged. The last one is negotiation back, or a negotiation back, which says where a party primarily liable on the negotiable instrument becomes the holder of the negotiable instrument again. Okay, so the party primarily liable becoming the negotiable, becoming the holder again, is also called as negotiation back. You can write here, right? Okay, so what are the four points which we read? The discharge of negotiable instrument can be done in these four ways. First, it can be done through section 10, that is payment in due course. 2 is the cancellation, 3 is the release, and third is the negotiation back or the holder becoming primarily liable. Okay, next comes is the discharge of party. Discharge of party means can be done. What are the different ways of discharge of party? According to section 82 of the Negotiable Instrument Act 1881, the maker, acceptor, endorser is respectively of a negotiable instrument is discharged from the liability thereon by these ways. Okay, first by cancellation, by release, and by payment to all parties. Okay, further, as per section 83 of the negotiable instrument, if the holder of the bill allows of the exchange, bill of exchange allows the drawing more than 48 hours. Next, it can allow for exclusive public holidays. Or next, to consider whether he will accept the same. All previous parties are not consenting to such allowances are thereby discharged from the liability. Means it is saying, according to section 82, these are the things: cancellation, release, and payment to parties. With that, there is section 83 which is saying about some more things about 48 hours, exclusive public holidays must be given, and there should be, it should be a qualified acceptance. Then what happens is there should be material alteration, and so let's see, payment should be done, cancellation, release we have read, understood, negotiation back understood. See, 48 hours, if the holder allows more than 48 hours, and exclusive of public holidays to the drawee to accept the bill, all the prior parties not consenting to the same are discharged from the liability to such holder. Next, qualified acceptance. What is qualified acceptance? Where a holder of a bill consents to qualified acceptance, gives his consent for qualified acceptance. All the prior parties who did not show the consenting to the same are discharged. Okay, hence it is just saying holder who is showing the qualified acceptance, other than the holder, whoever is the party, A, B, C, D, whoever is the parties, will be discharged from liability. Okay, lapse of time, when the time given on the expiry of the time prescribed for the recovery of the amount due, if there is lapse of time, then obviously it is discharged. When there is insolvency of a party, means he is not able to pay, insolvent, not able to pay debt. At that time, it is also called as discharge of parties. And the last one, very, very necessary, is the material alteration to the instrument. Material alteration to the instrument means an alteration which has been done is called material alteration if these are the two things: if it alters or attempts to alter the character of the instrument, if it is changing or tries to change the character of the instrument. Next, if affects or is likely to affect the contract which is instrument contains or is in advice of. Okay, hence at this case, an instrument which is materially altered becomes void against all the parties who were parties at the time of alteration, who did not show its consent. So this can be an exam question. What are the examples of material alteration and what is material alteration? You can just read: alteration of the date of instrument, alteration of the time of payment, alteration of the place of payment, alteration of the amount payable can be the examples of material alteration. Okay, when can the instrument be not called void? At this point of conversion, the non-material alteration cases. First, conversion of instrument payable to order into one payable to bearer, elimination of words or order from an endorsement, addition of words on demand to a note, alteration of the clauses of the instrument containing penal action. These are some material alterations which are done in our Act. Section 20, Section 125, Section 48 are already done in our Acts. Okay. Coming down, what do you understand by the concept called dishonor? What is dishonor? Dishonor means failing or not, not able to pay, means not payment, non-acceptance. Okay, these are the two words where dishonor speaks about. Dishonor means purely not honoring the obligation. You are not respecting, you are not accepting, you are not giving the payment of the obligation, that is the bill or a check or a liability. Okay, normally what happens, there is dishonor which can be done by the non-acceptance and non-payment. Okay, now maybe you'll be thinking that ma'am, how do we distinguish that negotiable instrument can be dishonored, like for check, whether it can be non-payment or non-acceptance, or from promissory note, what can be? So for your better understanding, already explained, a bill of exchange is dishonored either by non-acceptance or non-payment. Bill of exchange can be done in two categories, this and this, but the check and the promissory note can be only dishonored by non-payment. Okay, fine. What is dishonor by non-acceptance? Means when a bill has been gone, okay, but where the drawee is incompetent to contract or accept the qualified bill, may be treated as dishonored. At this situation, it will be called bill of exchange is not accepted. Okay, so what is the concept? It says when the bill of exchange is dishonored by the non-acceptance, and when the drawee makes the default in acceptance, is defaulting in accepting upon when duly required to accept, when there is a liability he knows but he is not accepting that liability, it is called dishonor by non-acceptance. Okay, so there are some conditions. That is, if the drawee does not accept it within 48 hours, the presentment is excused, the bill is not accepted, the drawee is incompetent to contract, where the drawee is found to cannot find, after a lot of research also it cannot find, when the drawee is fictitious person. Okay, when a drawee gives a qualified acceptance. Okay, these are the ways where it will be called as what? Dishonor by Non-acceptance. Let's understand dishonor by non-payment. Dishonor by non-payment can be only done if the default in payment is made by the following parties. Who? The maker of the promissory note, it can be the acceptor of the bill of exchange, or it can be the drawee of the check. By three ways, it can be called as the what? Dishonor by non-payment. When what? These are the conditions. When the party is primarily liable, makes the default in payment upon being duly required to pay the same. At that time, it can be, or else when the presentment of the payment is excused and the instrument when overdue remains unpaid. At that time also, it will be called. Fine. Notice of dishonor. What is the objective of this question? The objective of this question is to inform the party or the person who is liable on the instrument about the dishonor of the instrument, just to give a necessary information to them. So what are the important points? Notice by whom? It should be given by the holder or the party liable on the instrument. Notice to whom? To all parties other than the maker of the note or the drawee of the bill or the check. Contents of the notice, there is no specific format, but there should be properly given that it should be informed, the party should be informed that they have dishonored and the instrument is dishonored and you are liable for it. Time limit for it, the notice must be given within a reasonable time after dishonor. Consequences of omission to give notice of dishonor: if the note is not given to any part to whom it is required to be given with reasonable time, such party is discharged from liability of the instrument. What can be the mode? It can be through the authorized agent. You can send the notice, can through a representative who is declared insolvent, where he has been declared insolvent, and to his assigning, by oral or written by post. This is important question. They can ask this question. Okay, now coming to this question, that is section 138. In section 138, there are a number of cases, real type cases are also there. So what is it? It is saying bouncing of check or dishonor of check. Okay, so how the process attracts section 138? There is drawer. You see the process. I just made the process for you only to make it easier. There is drawer, okay, who issues a check for discharge of debt. To whom? To the holder. Okay, then here the holder goes and presents it to the bank. Okay, this is one, this is two. Okay, this is how it comes. Then from bank, the check is returned due to insufficiency fund, means in the bank the funds are less to be given to the holder. Okay, now this is 3. It goes to the holder, and then what happens? The holder gives a notice of dishonor within next 30 days. It gives a notice. This is 4. Then from drawer, if the payment not made within next 15 months, it will give the message to the holder. Then the holder will complain in writing within next 1 month. To whom? To the court. Then court may order to do what? Of imprisonment of 2 years maximum, or fine 2 times of the amount, or both, or jail. Okay, so this is what, when there can be dishonor of check and what happens. Okay, penalty already explained. Important, remember this point. Okay, fine. Now, coming to the penalty and offenses sections. There is section 139. What does it say? It says about when a check is dishonored and it is presumed that unless contrary to be proved, okay, the holder of the check received the check of the nature referred in section 138 for the discharge or in whole any debt or other party. Hence, it is said the presumption is prescribed here is what? It is reputable presumption. Reputable presumption. The effect of presumption is to place the evident or evidential burden on the accused. What is reputable presumption? Reputable presumption means is the presumption which has been made by the court. For what? To take a true and unless someone comes forward to contest for it, proves otherwise. Okay. So normally reputable means what? To refute, to disprove, or to oppose the evidence. It is. So section 138 and 140 says what about the defense which may be allowed in the prosecution under this section. So it's nothing that important. What are the offenses? Offenses by the company. If a person committing an offense under in a company, then what happens? He is every person who at the time of offense was committed, was in charge, was responsible for the conduct of the business. Whoever is in charge and responsible shall be guilty. Remember, guilty, and shall be proceeded against the punished accordingly. Where a person nominated as a director of a company or a partner in a firm by virtue of his holding any office, employment in state government, central government, or financial corporation, allowed in controlled by these two, he shall be liable for the prosecution under this chapter. Any person who will be proving that the offense committed without his knowledge, then he will not be allowed for punishment. Okay. Section 142 says what? Section 142 says about cognizance of offense. Means a pay or a holder must make a complaint with the court. It can be made and the complaint must be in writing. It should be made within a month from the date when cause of action was arose, and the complaint must be given to the court, not inferior or any other judicial distinction. Okay. So those were important points. Then you have is section 143A, which says power to direct the interim compensation. What is happening is that court is trying an offense under section 138. What does it do? It may order the drawer of the check to pay interim compensation of the complaint which shall not exceed 20% of the amount of the check. Remember this point. Okay. The interim compensation shall be paid within 60 days from the date of order and within such period not exceeding 30 days as given by the court. If the drawer of the check is acquainted, the court shall direct the complaint and repay the drawer. It will repay the drawer the interim compensation amount with the bank rate, interest bank rate as published by the RBI. If the drawer of the check is acquitted, means free. Okay. Then this happens within 60 days. So I think you have understood. The important things I have already said you, every single important points I have discussed. There's some things which, you need to revise yourself. Trust me, it is very, very easy chapter. What is necessary for you to understand? I'm just giving you points. Understand what is negotiation. Understand what is discharge, dishonor, discharge, dishonor, endorsement, okay, are important. These are very important. Do not skip it. Others, if you have more time, just try to focus on it. If you complete this plus those 10 to 12 pages which are of check, bill of exchange and promissory note, if you complete these, I am sure 70% of negotiable instrument will be done by your side. Then if you have time, you can just go into other points also. Okay. So boys and girls, what we are doing now is we have come to the chapter called General Clauses Act 1897. What does General Clauses Act 1897 speak about? We are going to understand it. We are going to go ahead into it. I think within 1.5 hours, we are going to complete the General Clauses Act 1897 marathon. Okay. Now, what is General Clauses Act? It is GCA. It is also known as GCA 1897. Okay. This is an act which is made in the year 1897. Before this act, there were one GCA which was made in 1 year, and there was another GCA which was made in another year. So now what happened was they combined these two and brought forward the one act which will be generally used and applicable to almost all the central acts and for all the clarifications ahead in our law. So this General Clauses Act is giving us a uniformity in the central acts and regulations. Okay. And as well as it is giving us a shortened language of law in a better approach. Now, for example, it is written, he is in good faith. Now, to understand the meaning of good faith, what do? We normally, if there is a sentence we keep reading in a newspaper or a book, what do? If we are not able to understand that word, we obviously go and Google it, or we go for a dictionary, right? Yes or no? In the same way, here, there are some particular words, some definitions, some terms which have been purely explained. And why it is explained? To give a uniform answer, to give a uniform definition, to give a terminology for the whole Central Act and the regulation. So, for understanding the meaning of good faith, we go into the GCA definitions section. That is section 3. Okay. Now, must be thinking that, ma'am, definitions normally in law is in section 2. Why this here in our chapter, I mean in this act, why is it in definition is in section 3? Because here, first thing what they have done is in GCA, they wanted to keep the definitions in section 3. Okay. And here, what has happened is to make sure that, ensure that a word is given the same meaning and a uniform meaning is been maintained in all the central acts and the regulations. And also it helps in avoiding repetitions of the words in the Central Act and regulations. It helps in avoiding repetition. Okay. In that way, it is shortened and it is simpler and easier for us to understand. So basically, what is the chapter speaking? I already said you. That is why we need to understand the General Clauses Act. Now, why do we understand this act in this intersyllabus? Why? Because now we are reading in our syllabus NI, we are reading Indian Contract Act, we are reading these two acts, and we are also reading Companies Act. When we are reading the maximum very necessary acts, we also need to read the GCA, which is very necessary in the starting and the basic level of understanding law. Okay, so we have this chapter in our CA inter syllabus. Now, what is the overview of this chapter? First thing is section 1 is the preliminary section, which just says about the introduction, how it is, what is the scope, what is the object, and so. Then we have is the general definitions. As I said you, the general definitions carries from section 3 till section 4A. Then we have is the general rules of construction, that is section 5 till 13, which is saying how the rules are construed and how this is basically used in different ways. Then comes what are the different powers and functionaries. So that is covered in section 14 till 19. Then comes the provisions which are made as per order, rules, and under enactments, means under pre-enactments and post-enactments. Okay, that is section 20 and 24, and the miscellaneous section is 25 till 30. Okay, so these are the section that is from section 1 till section 30 are the total chapters saying about GCA. GCA. Okay, 1897. Got me, everyone? Fine. So GCA was enacted when? This can be an MCQ. 11th March 1897. As I said here, there were two acts, 1868, 1887. So to combine these acts, they consolidated and extended the General Clauses Act and made it in March 1897, right? So the act contains all these things which I said you. These are the things which the act contains. So what does the act? It, as I said, it rescues in the absence of clear definition in the special enactments. There are special acts like LLP, like Sales of Goods Act, there, like Partnership Act. There are special acts. There are a number of acts. In the time when there is no proper definition cleared, then it will rescue and make you aware of that particular terminology. Where there is a conflict between the pre-constitutional laws and the post-constitutional laws, the GCA comes in that point of time, right? And the act gives a clear suggestion for the conflicting provisions and differentiates according to the commencement and enforcement to avoid uncertainty. What is the objective? As already said, uniformity. It shortens the language, and then it it states the convenient rules for construction and interpretation which we have in sections, and it also guards against the slips and the oversights importing every act into it. Okay, what is the purpose? Basically the purpose is the same thing, is saying about what is it. The General Clauses Act is also called as the law of laws. The law of laws. Okay, it is very necessary for our for us to understand, to read, to interpret this particular law of laws. So this can be an MCQ. So what is the purpose of this act? The purpose of this act is one single statute, different provisions relating to interpretation of words, legal provisions, which would be otherwise have been specified separately in many different acts and regulations. Okay. Now coming down, do you have any extent of this GCA? No, it doesn't. The act does not define any territorial extent. Okay, so it is applicable and is framed by whom? By the central legislature, or it's known as the Central Act. This can be a MCQ. It is also applicable to the rules and regulations made in the Central Act. Okay. If the Central Act is extended to the territory, the GCA would be also deemed to be extended to the territory. Okay. Next, coming down is when this act is not applicable, it is not applicable to any provision framed by the authority who is not competent to pass the Central Act. Okay, remember this, when it is not applicable. Now, what are the main points of understanding this act? There are some points which should be understood before we go ahead into the depth of the chapter. What is it? First, we need to understand what is preamble, what is definition, what do you mean by means or include, what do you mean by shall and may. Now, what is preamble? Now, every act has a preamble which expresses. What does a preamble speak about? Preamble is simply a document or a copy or some pages where it expresses its scope, the objective of the act, and the purpose why this act was made. Okay. What does it ensure? It ensures the intention of the lawmaker. Why the lawmaker has made this act is the explanation given in preamble. Okay. So whenever there is any confusion or ambiguity in understanding any provision of the act, the preamble gives the guidance of the act. Okay. So the preamble of the statute is an enactment and can be legitimately used for construing it. The preamble does not override, remember this point, does not override the plain provisions of the act, but if the wording of the statute gives rise to doubts, then the proper constitution, for example, what happens where the words or phrases has more than one meaning. If a word and a phrase has more than one meaning and there the doubt arises as to which of the two meanings is to be intended in the act, the preamble can and ought to be referred to in order to arrive to a proper conclusion. So when there is words which are meaning, words or phrases which are meaning differently, this is meaning something, this is meaning something, at that time preamble comes and gives a proper conclusion. Okay. What is the meaning of definitions and why definition is required? The requirement of definition is there and necessary to avoid the frequent repetitions and to give a clarity of what the particular terms or the word is expressing about. Okay, so it is saying what it is saying about to avoid necessity of frequent repetitions in describing the subject to which the word and expressions are there. However, if there may be words which is not defined, the definitions of the act, the meaning of such words may be taken from GCA. Sometimes what happens, you are reading something and it is not being mentioned, like in the Indian Contract Act, for example, in the Indian Contract Act, you are reading something which says about the meaning of a person. It is written about person, but it is not mentioned what a person is. Then obviously you go to the GCA and there in GCA find out what the meaning of person is, and then you read this, you understand it very better way. Okay, why it is not written the meaning of person here and it is written here? Why? Because to avoid repetitions first. Second, to make not to make it the law more larger and thicker, that the people have wrong way that law is heavy, law is very very boring and so. Okay, for that they have made it. Now When can you say it will be used means, and when it will be used and or include? Okay. Now, the definition of company as given in section 2 subsection 20 of the Companies Act 2013, it states that what it states? It states company means company incorporated under act or under any previous company law. Okay, what does it say? It simply says company means it is directly giving the answer about company. When it will be given that, okay, here see another example. This is example 1, this is example say. Director means a director appointed to the board of the company. Means in the board of company, if there is any person who will be appointed, he will be called as director, right? Now, when can a word include be used? See, you have an example, that is what is body corporate. Body corporate includes means it is an inclusive definition. It says that it is not giving a clarity about what does it say. It is saying about what it includes. Means it is saying like what is the ingredients of this dish. It is not saying what the dish is speaking. It is saying what are the ingredients which speak about this dish. Got me? This is how you understand the language. Okay, so this is exhaustive, this is inclusive definition. Now, when can a shall and may be used? The word shall is to be used to raise a presumption. When there is a presumption of something which is mandatory or imperative, while the word may be used to cannot something which is not mandatory. Shall is mandatory in nature and may is not compulsory. Okay, got me? Okay, so may and shall can be interpreted interchangeably depending on the intention of the legislator. Means a person whoever is wanting to express the case according to the situation of the person will be analyzed, and how may be used can be interpreted. Okay. So coming to the section 1 or the preliminary part of our General Clauses Act, as I said we have section 1 till section 30, right? So what I said is we have divided this total chapter into different segments so that it's easier for you to understand, right? So let's go ahead, boys and girls. Come on, cheer yourself, and we are ready to do the General Clauses Act. So General Clauses Act, the section number 1 speaks what? The section number 1 speaks about the short title, and where what happens is this act may be called the General Clauses Act 1897. It says about short title of the chapter, right? So the preliminary section is the introductory section, which contains the short title, which contains the extent and the commencement and application of why we are using, from when we are starting, and what is the short title and how much is the extent of the General Clauses Act. We are going to that is what is covered in our the section 1 or the preliminary section. Hence you can have one important point is the General Clauses Act contains only the short title in the preliminary part of the act. Okay. Now, what is what is short title? Now must be thinking that ma'am, what is short title? She has not said. So the title, although is a part of the act, and it itself not an enacting provision. It is not an enacting provision. Every act is given a title to crave out its identity, like men are given their names to identify them, right? For example, there what happens is this is one person, this is another person, this is another person, This is another person, this is another person, and you do not have names for this person. Then how do you identify, how do you call them, how do you contact, how do you communicate? So just to make it easier, to give a just an overview that what the title speaks about, so that is a short title. Okay, there in you have the next chapter, that is iOS, that is not Apple phone. Okay, it is interpretation of statutes, where you see short title and long title description is given. Okay, you can understand there better. Now coming down, we have is section 3. What does section 3 speak about? Section 3 speaks about the definition. Okay, so we have a number of definitions which we have to, like, understand. So there are some definitions I would like to go ahead with. I'm not going to focus on all, but some which are necessary. What is act? So act is used with reference to an offense or a civil wrong, means anytime there is in the society some situation which is doing wrong, given wrongly a decision, at that time you go and proceed with the act and the topics which are given in the act. It includes a series of acts and words which refers the act done, extent, and also the illegal omissions. Okay, so that is what is act. Now, what is affidavit? Affidavit means, it is just a declaration which is given. It is affirming. It is giving you a concern. It is ascertaining or declaring, or you take a swearing, or you take a oath. It's like that. So this affidavit definition is an inclusive in nature. It is not purely giving what it is, but it is like, includes affirmation and declarations. Now, what does central act speak about? Central act here means the act of a parliament, the parliament which is the making, like, it is the act of the parliament, which also includes the act of the dominant legislature or the Indian legislature passed before the commencement of constitution, means before the constitution was made, whatever there was legislatures or whatever there was small acts, it also includes those acts. And also the act made before the commencement of the GG, that is Governor General in the council or in the legislative capacity. This can be a question. I feel this can be a question. Normally what happens is we read everything, okay, and we forget the definitions. We think that it will never come, but what I see it as, when you're not focusing on one particular thing, they try to focus on it and they try to make us realize that every single point is required. Fine. Okay, what is central government? The central government is something like, where it says it's section 318 is speaking on it. Just look over it, not that important. But yes, we have important is commencement. Commencement means what? It says that when an act or a regulation shall begin, okay, shall begin, or shall mean the day on which the act or regulation comes into force. Okay, next, yes, this is very, very important because it has already come in one exam for 2 marks, and there can be different case studies, small type of case study. So and so is the case study can come, and they can just indirectly ask you, what do you mean by document as per section 3 subsection 18. Okay, so now what is document? Here if you see, document shall include, here it is an inclusive meaning. Okay, it includes any matter written or expressed or described upon any substance. Okay, any substance by means of letters, figures, or by any more than one means, then this can be intended to be used and which may be used for the purpose of recording that matter. Okay, so it helps in recording a true and fair view. For example, book of accounts, for example, office orders, office notices, emails, and so. Okay, Then coming down, we have we have question related to the document. So make sure you read it. Now, financial year, this is important. What is financial year? Financial year, as per section 3 subsection 21, speaks about the commencing of the year, or you can say commencing on the first day of the April of every year. Okay, what is calendar year speak? As you know, calendar year means 1st January till 31st December, where you celebrate new year. Okay, but financial year for us is 1st April till 31st March. Fine. What do you mean by good faith? Something which is done honestly and irrespective of whether it is negligent or not. Okay, that is called good faith. Going ahead, government not required. Government securities is required. Government securities shall mean securities of the central government, state government, but it does not include the securities of a government of any part B state of any act before the commencement of the constitution. This part B question, if you read before document, we have a small thing where it explains what are part A, part B and part C states. Okay, that you read, you will understand. Here, what is immovable property? Immovable property shall include land, the benefits arising out of land, the things which are attached to the earth, and things permanently fastened to anything attached to the earth. Okay, for example, building and land. For example, trees must be regarded as immovable property because they are attached and rooted to the earth. Okay, so let's see. The standing crop is one that is example of immovable property. See, very important, timber. Boys and girls, make a note. Timber is not permanently attached to the land. It is an immovable property. Okay, next, any machinery fixed to the soil is immovable property. The right to catch or carry fish is an immovable property. See, the right, important. This can be a question. Right to drain of water is not immovable property. Remember this point and this point. This is important. Okay. Now, they can ask you a question related to this and this, I feel. So just go on with it. Okay. Understand and clarify yourself and then write. Okay. There are some more other terms which are necessary for you to understand, like month. There you have movable property, oath, offense, official gazette. Then you have who is person. Person can be a company, association of person, body of individual, whether incorporated or not. What is rule? Rule shall mean a rule made in exercise of a power conferred by any enactment, and shall include a regulation made as a rule under any enactment. Okay. What is schedule? Schedule means a schedule to an act and a regulation which occurs, in which the word occurs. Then you have is year. You have already written, written. Now coming to section 4. What does section 4 speak about? Section 4 speaks about application to the foregoing definitions to the previous enactments. This provision is divided into 2 parts. The first part is this one and the second part is this one. Okay. And then we have section 4A, which is saying there is certain definitions to the Indian law. Let's understand that. Now, the application of terms and expressions to all the central acts made after 3rd January 1868 to the regulations made after, on or after 14th January 1887. Remember, 3rd Jan 1868 till 14th Jan 1887, whatever the terms and expressions were there in between this duration. Here, section 3 of the following words, expressions that is saying about affidavit, immovable property, imprisonment, month, movable property, oath, person, section, and year. And also unless anything repugnant to the subject of the context after 3rd January 1868. Okay, here it is saying on or after 14th January 1887. After, this is within, this is after. Okay, so here on or after what was made? Commencement, financial year of offense, registered, schedule, subsection, writing. These all things were inside those year, and it was being segregated in that way. Okay. Now, application of certain definitions to Indian law. Okay, as per section 4a, what does it say? It says that there are some definitions in section 3 which are expressed, that is central act, central government, gazetted office, like in it's related to the Indian law. See, if you understand, it's related to the central act, it's related to the government, it's related to the government securities, official gazette, and Indian law. What do you mean by this? These all things were there. Now, it is saying that on and from 1st April 1950, he construed and references to the Consolidated Fund of India and Consolidated Fund of State, as the case may be. It was just section 4 is saying about two things. Before 14th, 14th Jan 1887, and this is after 14th Jan 1887. And section 4a only simply says about Indian laws and what are the terms in Indian laws. It's related to government securities, then you have Indian law, and so. Okay, now understanding what is section 5. Okay, we have understood up to section 4, boys and girls. We are going to understand what is section 5. Section 5 means what? Coming into operation of enactment. Central Act comes into force from the date it is expressed in it. Okay, when the Central Act does not express or inform about coming into operation, then it will come into the operation on the day it receives the assent of the President and the Governor General. Okay, understood? For example, you have an example. See, SEBI. Okay, SEBI's ICDR rules, ICDR regulations are there, which were issued in 2015. Right, which was issued by the SEBI, wide notification 14 August 2015, but with effect from 1st January. Remember, 1st January 2016. It was notification date is this, but it came into effect from 1st January 2016. Hence, this regulation shall come into enforcement from 1st January 2016 rather than the notification in the Gazette. Got me? This is the example. Now, there can be a presumption which can, presumption against the retrospective effect. Now, what happens with this? Now, for example, what happens is a Companies Act is there. There is a Companies Act. The Companies Act 2013 received an assent of the President of India on 29th August 2013. Okay, it was received. I mean, it was given a consent by the President on 29th August 2013. And it was notified in the official gazette on 30th Jan 2013 with enforcement of Section 1 of the Act. Accordingly, the Companies Act came into came into enforcement on the date of its publication in the official gazette. Publication in the official gazette. So it is saying that all acts are applicable prospectively, means it will be given after date, but there can be acts which can be made applicable retrospectively as it is expressed, provided Companies Act 2013 is an example. Understood, everyone? When the assent of the president is given, from that date it was notified in the official gazette on 30th Jan 2013 with the enforcement of section 1. But accordingly, the Companies Act came into enforcement on the date of it. It was like published, that is 30th August 2013. Okay, understood? Very good. There are some examples with it. You can just see this SEBI example. It is there. MTP it is used, and this study material RTP November 2013. It's saying about act and regulations, how these provisions are related. Give reasons to it. Then coming is the presumption against the retrospective. That is section 6. Section 6. Now, what is section 6? Okay, see, what I'm doing is I'm mainly focusing, and when I'm explaining one section, I'm going to the depth of the section. I'm not leaving things, okay? So I feel you should also do these things. So in that way, you will cover 70 to 80%. And that is absolutely enough for you to pass and get good marks in our subject, as well as to clear your CA inter. See, what I'm saying is, whatever you read, even if you read 60% of the syllabus, read it in such way that you know 100% of the 60% you read. That's necessary. Don't try to keep reading the whole 100 mark, like 100% of the syllabus, and just 20. That's just bullshit. Okay, so you need to frame or schedule your course or your way of efficiency in such way that how you can clear your exams, and how do you focus in getting good marks, and how do you focus in covering the chapters, whatever more better, more better. First time you read, just 20% of it. Second time you read, you add on just 5 more percent. The third time you read, you will get an idea of 35%. The fourth time will be something which you get approx 50 to 60%. Okay. The fifth time you read is about 60 to 70% you approach. So I focus that you should minimum cover that 5 times minimum should be covered, or 4 to 5 times should be the coverage. According to your efficiency, you can just change your percentages here. Okay. Now, what is the effect of repeal? Section 6 here says about repeal means revoke, come back, or terminate, or cancel, or annulment, or obliteration of the statute. It is revoke, cancel, annulment, obliteration of the statute. MCQ. See, they can give you any one word and say you this word is used in which section of which chapter, then you need to give the answer. Okay, so what is the objective of the repeal? The objective of the repeal is not to make changes, but to remove the enactments. Remove directly the enactments which have been served their purpose and have no other reason to be there in the act. See, now you tell me, what is the purpose of GCA? To shorten the language, to use a uniformity like to make it uniform in overall, so that it's easier for you, right? In the same way, when you are having a small amendment done to this thing, there is a Companies Act. Okay, in the Companies Act you have made this amendment, and this amendment was made and it was used also. Now okay, it was also used. Now for example, this amendment was only for this particular situation and it is used. Now as and when this situation or the purpose is fulfilled, you can also remove this portion. You can remove the portion from the act. Okay, when you remove it, it gets easier, it gets better for the people who are reading it, and for the General Clauses Act also, right? Okay, so so what happens is the effect of repeal, or what repeal speaks about, the previous operations of the repealed act. Like what happens is, if any act repeal the other act, then it will not affect. Very important is, there can be a question asking you what will be the effect of repeal. If you're doing repeal, I said you what is repeal. If you're doing the repeal, what will be the effect of repeal? Section 6 says that if any act is repealed, repealed means revoked or cancelled or removed, okay, then it will not affect, what things. There are some 5 to 6 points it will not affect. First, it will not affect the previous operation of repealed act. Second, it will not affect anything duly done under previous act. Third, it will not affect the rights and privileges under the previous act. Then fourth, it will not affect the liabilities which are incurred under the previous act. Fifth, it will not affect any penalty or punishment for offense committed under the repealed act. Then it will not affect any inquiry or investigation pending under the repealed act. So in short, one small thing I want to say, that any new act coming into doesn't mean that the old act activities are being cancelled. It doesn't mean the activities of the old act will be continuing even if there is new act coming into. Got me? This is simply saying about section 6. Now coming down is, what is section 7? 6A. There is 6A. What is 6A? 6A is just saying, simply saying that there is repeal of act making textual amendment in the act and regulations. It's not that important, but yes, there is a addition to section 6, that is section 6A, which saying repeal of act making textual amendment, means there will be adding on words or inserting amendment by expressing omission or insertion or substitution of any matter, any words. Okay. Next, section 7. What does section 7 say? Section 7 says about reveal of repealed enactments. Okay. What does it say? It says that in any act or regulation made after the commencement of this act, any act or regulation which was made after the commencement of this act, it shall be necessary for the purposes of reviving, underline this very important 3 words, that is for the purpose of reviving. Either can be wholly or it can be partially. Any enactment wholly or partially repealed expressly to state that purpose. Okay, it expresses to state that purpose. So it simply says, understand the gist. What it simply says, it is simply saying those enactments or those acts which was removed, okay, from whom? From the central act or the government. From whom it was removed means it was repealed, right? So if those acts are repealed by the government, then it is the wish of the government to also get, like, it can also get that same acts again, but only mentioning what is the purpose of the act to be brought forward, means to revive again the repealed act. What is the purpose required for it, it should be mentioned. That is the main thing. Next comes section 8. Section 8 simply says about construction of references to repealed enactments. Means it is saying whatever the acts which were, like, removed or repealed. Okay, it was repealed and removed, right? Then, with or without modification, any provision of the former enactment, then the references in other enactment or in instrument to the provision be construed and the references to be to the provision so reenacted. Section 9 says about commencement and termination of time. So it just says about, it shall be sufficient for the purpose of excluding the first in the series of days and any other period of time to use the word from, and for the purpose of including the last in the series of days or any other period to use the word to. Okay, for example, what happens is a company declares a dividend for the shareholders in the AGM held on 30th September 2016. Under the provisions of the Companies Act 2013, the company is required to pay declare dividend within 30 days from the date of declaration, from 1st October to 30th October 2016. In this series of 30 days, 30th September will be excluded from the, and the last day 30th will be included. Okay, this is how they do the calculation. Then coming down, section 10 is saying about computation of time. Computation of time is just saying about if for example the court is closed, like, or you can say is if where the act provides that any action proceedings is taken in any act or the office within the prescribed period. If the court is closed on the last day of the prescribed period, then the action or the proceeding can be taken on the next day. Okay, so it's just it is if there is a declared day which is given or a prescribed period which is given, but the court is closed on the last day, then the next day will be taken into count. Okay. Fine. Coming down, we have is what is section 11. Section 11 speaks about measurement. Section 12 speaks about the duty to be taken in the pro rata in the enactment. Okay, pro rata basis in the enactment. So it just says that it shall be calculated proportionately for any lesser time. Okay. Section 13 speaks about the gender and the number. What it says about it, as I said you one small example. He is in good faith means whenever in the law it is given he is in good faith, it is being described that he also includes she in the situations whenever there is a woman or a lady or a girl talking about it. Okay, so what is section 14? Section 14 speaks about in case like it is saying about powers conferred to be exercisable from time to time. It is saying that central government has the right to use the power from time to time. It can exercise its power whenever in need. Okay, I'm just saying the gist and important points. Next, section 15. Section 15 speaks about the power to appoint to include power to appoint ex officio, means it is saying that it has a power to appoint any person to fill any office of such appointment, and it may be either by its name or by its virtue of its office, means this like the position of the office or by its name. Okay, the power to next section, section 16 says about the power to appoint to include power to suspend or dismiss. Okay, so it says that the authority having the power to appoint also has the power to dismiss or remove the person who has been appointed. Section 17 simply says about the substitution of the functionaries, where it says to apply law on any person, it can be applied to his official position, not to the name of the person. So section 19 says what? Section 19 says about the official chief and subordinates, where what happens, it says that the law is applicable on any senior officer. Remember, the law is applicable on the any senior officer. It will be applied to a junior if any junior is exercising the function of the functions of senior. Okay, next, section 20 is saying about construction of notifications issued under enactment. It purely says that the meaning of any term provided in the act will be the same in any rule order provided under the act. Okay, now coming to the section 22. Section 22 is saying if an enactment date and the effective dates of any act are different, enactment date and the effective date are different, then the provisions or the establishment of the office under the act will be only and only enforceable at the time of effectiveness, not the enactment. It will not be effective from the effective, not the enactment, but from the effective date. Okay. So we have done section 14 till 19, that was power and functionaries. I think I gave you every information what is required for you to understand, because it's marathon. We can't go into the depth and reading every single point and every single letter or the phrases, but the gist and the important thing which you should remember, I've already explained. Now coming to almost the last sections which we have is the section 24. Section 24 says about what? It says about the continuation of orders issued under the enactment, repealed and reenacted. What happens in this? It says that the provisions of the repealed act means what? Those acts which are removed, revoked, or annulment is done, okay, will be effective until next new act has been superseded or withdrawn or modified. Okay, what is section 25? We are coming to the miscellaneous sections, boys and girls. We are in the end of the chapter, so just 5 to 7 minutes more and we are done with the chapter. Section 25 says what? It says about the fines. What does it say? It says that section 63 till 70 of the penal code, Indian penal code, and the provisions of the code of criminal procedure, that is COCP, shall apply to all the fines imposed under the act, regulation, rule, and bylaws. Okay. Next, section 26, it's saying about the provisions as to offenses punishable under two or more enactments. Okay, it's saying that where an act or the omission constitutes an offense under two or more enactments, then the offender shall be only liable, means the person who will be liable, or the the person who is taking the punishment shall be liable to be prosecuted and punished under any one act, but shall be liable to be punished twice for the same offense. Okay, what is the meaning of service by post? Section 27 says, very important question of 2 marks can be asked. It says that unless otherwise specified, we shall consider the following any document which is to be sent by post. That means the mode of post should be registered post and the effective date should be date of delivery. The last two sections, come on, energy should be the same. Citation of enactments. Section 28 says about citation of enactments, where it is saying the title and the short title mentioned is given properly for giving an explanation or reference to the number and referring any provisions for it. Okay, section 30, the last section, which says application of act to ordinance. It says the word act includes the meaning of ordinance also. So here we are done with the GCA. I think we have happily understood every single point, every single thing we had clarified. Very important parts I have covered, and I think I have covered the 85% of the chapter. Now this is for you, the MCQ are there, just go on with it and you can do the best, man. You can go off getting 60-65 in total law. Okay, this is the summary chart for you. Just before exam you can go on and understand this thing. Okay, the next chapter we go with the interpretation of statutes. Till then, take a break, small break, come back soon, and we start with interpretation of statutes. Till then, stay safe, take care, keep smiling, be positive. Bye bye. So coming to the one of the most important chapter and a very easy and a mark fetching chapter, which actually the students think that it's the vague and the very slow and a very boring and we are not able to understand, we are not going to get the grip of the chapter. I'm sorry to understand. If you see this video, you will, trust me, you will understand it so nicely. Yeah, it's a marathon. I'm not going to go into the total depth of it, reading one by line or one word, but yes, you will get the theme of it. So that why I said you it's necessary and very important, because ICAI, that is our institute, the Institute of Chartered Accountants of India, has taken out this course from the final material and brought it to the intermaterial. There is a reason for it. What is the reason? The reason is the CA Institute wants every single CA inter person or the pursuing CA inter to understand the interpretation of law, to understand the depth, why, how, and what is the reason of making this law. Okay, so that is why they have brought from final to the inter level, because in the inter level we are reading almost in the basic level. We start from the basic level and go ahead, and in final we cover a lot of portions. So if we read this something which is necessary to be read in the basic level, if we read it afterwards, it will never be stored properly in the mind. So it's necessary for every CA inter student to read this chapter. And yes, one more thing is it is very much important to why, because it covers 10 to 12 marks. And how much I feel 4 to 6 marks can be an MCQ portion of it also. Okay, now what does interpretation of statute speak about? Interpretation means what? You interpret something. Like for example, I'm saying that uh, I'm just saying that ocean is a feeling of newness. So when I give you this particular statement, there is some emotion in me and some way of thought process, and I have written this sentence. But when you read this sentence, you will think in different way. In the same way, when we have five fingers, the five fingers do not think in the same way of the same situation. We need to make the understand them the understand the real meaning of what the lawmakers are wanting to speak on this sentence, on this situation, on this case. So it is purely saying about how it is being interpreted. Means there is process of application of our mind, process of application of our mind to do what? To get the real meaning and to get the true viewpoint of how and what the statute or what the act is speaking on. That is what is the interpretation of statutes. Now, must be thinking, what is statute? Statute is nothing but enactment. What is enactment? Enactment is the same word which we always listen, that is law, the act. Okay, so we are reading is interpretation of law. We are interpreting the law. How do we interpret the law? We are putting a stress on our mind and making the application think more better and better and better to get the best outcome of interpreting the law and the deeds and the documents. So this basically chapter is very necessary to understand the lawmaker's point of view, to get a grip of what the law is actually wanting the people to understand, to also understand how law has translated and given their way of analysis to the public or to that particular situation or case study. So this is how we are reading the interpretation of law, interpretation of statutes or interpretation of law. 10 to 12 marks necessary, 4 to 6 marks MCQ. We are going ahead. There are some relevant, I'm just giving you the overview. There are some relevant things which are necessary before we go ahead. What is it? There should be a relevant terms and terminologies which should be understood. What is the importance of interpretation of statute? This can be a question. There are two rules, primary rules and the secondary rules. There are different aids of interpretation, means there are some things which are very helpful in interpreting the law. So there are internal aids, there are external aids, which is the most important part of our chapter. Then comes, there are some rules of interpretation of deeds and documents. Fine. Can we go ahead? Yes. So I hope you have got the correct thing. See, every chartered accountant, a company secretary or a cost accountant, CA, CMA and a CS must read it properly. Why? When you are advising your client, after you become a CA or a CMA or a CS, when you become, when you are starting a practice, or even if you are not starting a practice, when you are actually going somewhere and someone knows that you are a chartered accountant, they ask you some question on a particular something, on situation, you need to interpret the law in a proper way so that a proper public can also understand. Okay, so these often these enactments may be capable of more than one interpretation. It is in this context that awareness of interpretation as a skill becomes relevant. Okay, now, what is meaning of statute? It is a will of the legislature. The statute is a law established by the act of legislative power. Okay. Now, what do you mean by document? See, document is what? You now, this paper, this PDF which we are reading is what? A document, right? In the same way, when you are having a paper or a Xerox is what? It's a document. When you are having a GST certificate, it's what? It's a document. When you are having a tax audit report, it is what? It is a document. Hence, what does it say? It is a paper. What it suggests, this paper says what? It is an evidence that you have done a tax audit and it has been signed by a chartered accountant. That's what you are proving. That's the legal document which is enforceable in count of law. Now, what are the elements of documents? I feel this is a necessary question to be done. Elements of documents is matter, record, substance, and means. What is matter? It's the first element, and its usage with the word any shows that the definition of document is comprehensive. It is comprehensive. What is substance? The next element on which the mental and intellectual element comes to find a permanent form. Record. It must be a certain mutual and a mechanic device employed on the substance, and it must be writing, expression, and description. What does mean speak? Mean speak about the elements, that is letters, figures, marks, or symbols which are involved in the document. What is deed? Deed is an instrument in which, like, it is in writing which has a legal nature. I said you what is interpretation. Okay. Now, interpretation can be legal, it can be doctrinal. Okay. Now, what is legal? Legal is when there is an actual rule of law which binds the judge to place a certain interpretation of the statute. What does it say? It is a actual rule of law. Remember, actual rule of law, and binds the judge means in the court there is the judge to place a certain interpretation of the statute. Okay. It binds means it keeps the judge involved with this rule of law. What is doctrinal? Doctrinal here speaks about it when its purpose is to discover it is real and true meaning of the statute. Legal interpretation is divided into authentic and usual. Okay. What is authentic? Authentic means it is derived from the legislator itself. Usual means it is derived from some other source or some other law. Doctrinal interpretation is divided into grammatical and logical. Grammatical interpretation applies only on the ordinary rules of speech and for finding out the meaning of the words used in the statute. Okay. Beyond. Logical interpretation speaks about when the court goes beyond the words and tries to discover intention of the statute in some other way. It is said to resort that it is logical interpretation. So now we read that legal, doctrinal, authentic, usual, grammatical, and logical. Important. Okay. This also, it's almost the same. You can read it. Okay. The term construction, what does construction speak about? Construction speaks about a written document or a statute. What does it say? It determines the true meaning or the intention of that particular thing or the act or the text or the document. Okay. Intention of the legislature or the will. Now, let's understand what do you actually mean by interpretation and construction. Interpretation and construction are different from each other. Interpretation is finding the true sense of the firm, and construction is drawing conclusion respecting subjects that lie beyond the direct expression of the text. Remember this thing. If you remember the first point, meaning, you can go ahead. Okay. So what is, I think you have understood that thing. Now, here, interpretation and construction overlap at the time Here the court would resorting to what is called as construction. However, the two terms interpretation and construction overlap each other, and it is rather difficult to state whether the interpretation leaves off of construction begins and construction begins. Okay, so that's how it's having a very thin line of difference. That this is the first point, is the difference. Now, for example, in Income Tax Act, okay, Income Tax Act states which particular income is taxable and exempt. Further, if amount is invested in XYZ sources, then you get a deduction. You get a deduction. Understanding the tax of law. This says that if this is the situation, that means you get a deduction. Okay, that is what it is interpreting. That is what you understand from the tax laws. What is construction? If income tax is giving a deduction on this investment, then in construction, what does it say? In the way of construction, in the meaning of construction, it says then I should frame my transaction in such manner. That means it is making the person realize this sentence and do what is required for it. That is, do tax planning, understanding the situation, and doing the best for it. Okay, that is what is construction. Now, why do we need what is the need and importance of interpretation and construction? Okay, now what is it? It is a process of finding out the real meaning of the act, and the intention of the legislature in enacting it is ascertained. Okay, so what happens is, we need to interpret due to some reasons. The first reason is if there is ambiguity of the words, means there is a lot of confusions which have been created due to the words which have been used, the words of the statute, and that must be resolved by the judge. Now, the second is the words and the legal expert not perfect. It says that to find the meaning of the statute, the judges must use various methods of statutory interpretations, including traditional methods, and the legislative history and the interpretation must be taken care of. The statute is drafted by a legal expert. Hence, but the legal expert and the words are not perfect. The words convey different meanings when used in different situations and circumstances. Okay, next is uncertainty in legislation. Uncertainty in legislation means there are some unforeseen situations which are inevitable, and new technologies and cultures which make the existing law very difficult. Hence, uncertainties may be added to the statute in the course of enactment and need to such as the need for compromise and catering into special interest groups. Then you have other importances. The court must try to determine how the statute should be enforced. If any provision is open to two interpretations, the court has to choose the interpretation which represents the intention of the legislature. Remember this point. But one should keep in mind that the legislature is supreme, and when creating law, the court is merely an interpreter of the law. By interpretation, court cannot make sweeping changes in the operation of law. It can just be this is the court, this is the person judge in the court, and this is the situation, this is the medium. The court is being the medium and interpreting the law and making the case turn yes, valid or void. Okay, so now we'll understand what are the rules of interpretation of construction. Primary rules, secondary rules. There are some 6 rules which are very, very important. The first one is literal construction, second reasonable construction, harmonious construction, beneficial construction, exceptional construction, adjustum generis. Adjustum generis is very, very important topic to be read. Okay, and secondary rules are noster, choice, and effect of uses. These are important, and some 1 2 extra are also there which are not that necessary but has to be read. Okay, so first one we will understand is the literal construction, literal construction or grammatical construction. What happens here is like there won't be any logical way of interpretation. It will be something whatever is written that has to be only interpreted on the face of the language itself. No adding, no subtracting, no omitting there the words. So literal meaning is clear and unambiguous. Okay, the next rule is beneficial construction, where it says about logical interpretation, where you have to think logically, you have to put your brains on it, apply the logics on it, and then give the give your suggestion. Okay, so where what happens, the rule of beneficial construction, or it's known as reasonable construction, applies where the ordinary people, ordinary meaning is, you know, damaged or absurd, something nonsense, not that you know, clear, where the literal interpretation fails to give the purpose. At that time, this beneficial construction rule comes into our focus. So what happens? The words of the statute must be construed so as to lead a sensible meaning. Here it says the exclusive reliance on dictionary meaning or literal meaning may not indicate the proper intention of the legislature, but you need to use the logic on it. Okay, that's what the meaning and the gist is speaking about. What is harmonious construction? Harmonious construction speaks about keeping all the provisions and respecting all the provisions. You need to, respecting all the provisions, you need to remove the conflict between them. Like if there is conflict between two or more provisions, then one section shall not be allowed to defeat the other provisions of the act. Remember this point. One section shall not be allowed to defeat the other provisions of this act. Hence, it is saying that if there is a doubt about the meaning of the words of the statute, this should be understood in the sense in which they harmonize the subject to enactment and object. So simply it says, taking all the provisions, respecting all the provisions, you need to remove the conflict. Last, the next is saying about reasonable construction. Okay, reasonable construction. See this one. Harmonious construction done. Reasonable construction, which says the rule of beneficial construction is also known as the purposive construction, or this reasonable construction is called the beneficial construction, is also called the hidden rule. It's also called the mischief rule. First thing, why it is called a purposive construction and why also it is called a hidden rule? Because there is one person who is known as Haydn. He has given this rule. That's why it's called hidden rule. What does it say? It says that hidden rule must be applied in those cases where the word of statute is ambiguous, where it is unclear, which is very absurd, which is not giving a clarity. At that time, hidden rule must be applied. Out of the more than two meanings can be merged. Now, this rule directs that the court must adopt the construction which shall suppress the mischief and advance the remedy. It should close or neglect or suppress the mischief and advance the remedy, and give focus on the remedies which can be done according to the true intentions of the lawmakers of the statute. So it's saying that the court shall interpret as per the demand of the lawmakers. Then we have is the last one, which I want to say is the rule of exceptional construction. This rule is saying what? It says about to give a sensible meaning to them, and if at all possible, the word or is normally distinctive and is normally conjunctive. Okay. However, it also says that the words may is normally directory, and shall is mandatory. Okay. So it just focuses on the two words, which is or and when where it is used, and according to the legislation it is speaking about the intention of the legislature and how it is being used in which context. Okay. And how may and shall is also used. Fine. Now, the expression containing the words without prejudice to the generality of indicates what? It indicates that it is not intended to cut down the generality of the meaning of preceding provisions. Simply, it is just saying about how, is that this one may and shall is used. Okay. What do you mean by adjustum generis? Adjustum generis speaks about and means that of the same class or the same species. Now, for example, I will say you that Mr. X is interested in playing indoor games like cricket. Means it is saying, no, sorry, outdoor games like cricket. It means that Mr. X is also interested in football. It is also interested in, volleyball, throw ball, kabaddi. It can be anything, any outdoor games, right? So it is of the same category, same species, of the same class. That's what is saying about adjustum generis. So what? So applying the rule of adjustum generis, the general words cannot be assigned any meaning. Remember, cannot be assigned any meaning other than the same category meaning. Okay. So simply adjustum generis applies when it applies in the statute contains a enumeration of specific words if there are n number of words. Second, at the subject of enumeration constitutes a class or a category, then the class or the category is exhausted by enumeration. Next, the general terms follow enumeration. If there is no indication of the general legislative intent at that time, the adjustum generis applies. Okay. So the rule of the adjustum generis is not absolute rule of law, but only part of the wider principle of construction. And here the rule has no application where the intention of the legislation or legislature is clear. Fine. Then comes noster solis. That means the construction of associated words. What does it say? It says that the words shall shall be interpreted in context of associated words. The words can be construed or interpreted with the associated words. Okay, that is what the clear meaning of the rule of nocitur solis. Example, I'll say the word plant. Okay, as I said you, the word plant can define anything. Okay, now plant can be telling about a plant and machinery in some factory. Plant can also mean plant. Okay, so plant can be of so many times. Now for example, I'll give you an example of tube. Now when I say tube, it can be a tube light, it can be an ointment tube, medicine tube. Okay, it can be a tube to fix, right? So the tube meaning can be only understood by reading the case or the situation, which tube it says. For the tube light, is it saying about the pharmacy related thing, or is it saying about something else? That's how you interpret, right? So that is what is rule of nocitur solis. Then you have another rule. Secondary rule is contemporea exposito. Contemporea exposito rule applies if the statute is an old statute. If the statute is an old statute, okay, and the language of the statute is not clear, it is very, very impossible to understand properly. Hence, contemporea exposito states that the best way to interpret a document is to read it as if it would have been read when made. In that way, if you interpret, you can understand the lawmaker's way of thought process, what and when he saw the situation, how he wanted to express when he wrote it. Okay, so it is saying use time machine and go back to the time of the enactment of the act for interpreting it in a better way. Now coming to the internal, we are reading the aids of interpretation. Internal aids we are going to read now. Internal aids are what? So these are the internal aids of interpretation. What are requirement? There are various parts of enactments which are required for making the interpretation helpful. Okay, first comes the title. Under title, there is long title, there is short title. As I said, short title is the nickname of the statute and long title explains in a better way, right? And then comes is the what is preamble. I think we have understood what is preamble. It speaks about the focuses on the scope, object, and the purpose, why this act or the law or used. Okay, in case it gives, it also explains the clear view of why this act is being done. Okay, then coming down is why heading is required. Okay, the use of heading is required to legitimately be used and properly construe the enactment of its act. Then we have is marginal notes, where it says about, they are printed at the left side, and it focuses on giving essentials of the headlines and titles of the section. Then comes is the key to interpretation is in the definitional sections and the clauses is whether you have statutory definition and the definition explained in a better way. It give a proper interpretation, it shortens the language and avoids repetition. Then is there can be restrictive and extensive definitions. There can be ambiguous definition, that is confusion. There can be definition which is to the contrary context. Okay, Then there is some examples which are given, that is illustrations which are appended, means which are added to the section. Why? Because to give a clarity while you are reading. Okay. Then you have is the significance of proviso. Why proviso is required? Proviso is purely required, which gives a special attention, special treatment to the main section. For example, you have section 3 and there you have proviso 1 of section 3, means it gives you a proviso, an added qualified to create an exception. Proviso here speaks about there is an exception to this section. Okay, and this exception speaks what? Okay, then coming is, what is the difference between this one? I feel is necessary for you to understand what is proviso, exception, and saving clause. What is exception? Exception is an intended to restrain the enacting clause to a particular cases. It is restraining the enacting clauses to particular cases. Proviso is used to remove the special cases from general enactment and provide it specially. What is saving clause? It is used to preserve from destruction certain rights and remedies. Then you have object of the object of explanation. That's not that important. You have significance and use of schedule. Schedules are added to the end of the act. It contains the details of every particular subject matter. It contains the rules, the forms, and different things which have been added and how it has been attached, and so. So I think we have almost done. Now we'll read is external aids. External aids are of these types. 6 external aids are required. The first one is historical setting, means it is used, it is just saying it cannot be used as an aid if words are plain and clear, but it is saying about you need to consider in order to arrive the proper construction. So you need to check on the historical points. You need to check on the previous enactments. You need to find out the enactment is saying what, and then go ahead. Then you have is consolidated statutes and previous laws. Means what does this say? It says about the preamble is stuck to act to consolidate, and the courts may stick to presumptions, and it is not intended to alter. What are usage? Usage is taken into consideration in construing an act, and it provides quite often key to the statute. Earlier and later acts and analogous acts means what? It gives earlier means old acts which is replaced by new. Construction of new acts means 2 acts which have been added and brought together in one. Then statutory definition and judicial definitions in the dictionary definition means what is statutory definition? Statutory definition speaks about in the statute how it is referred. Judicial means the meaning of the word may be referred to if there is no statutory definition. What is dictionary definition? It says that if to find out the general sense, how do you understand in general view that the dictionary definition is used. So now we have some things that is I think we have almost done it. Let's see just once. We have almost done it. Whichever is necessary, I have covered it. Okay. So we have covered it within, I think it's just 40 to 45 minutes of our session. We covered the whole interpretation of statutes, and trust me, whatever I covered, that's more and more than enough. You just go through the MTP, RTP after you watch the marathons. Every single chapter will be clearly in your mind. Before going to the marathon, boys and girls, check that you have at least read twice the regularly. Okay, then you concern and go with the marathon or the fast track or whatever you say, and try not to go in fast forward. Okay, because if you go fast forward, nothing will be stored in the mind. If you listen, see, there are different ways of learning. It can be listening, it can be while, while watching, it can be while continuously reading, it can be like, memorizing number of time, rewinding number of times. These are the ways. Just select one way which is good for you, which is attractive, which is best for you, and go ahead. Trust me, you will fetch good marks. Now it's the time for you to just give the comment here and just say how you like the sessions. Like, what is that you felt good about the sessions, which was a very interesting point or section or chapter which you felt was the best. Just give your view. Feel free. Be happy always. Stay safe. Stay fine. We will be back soon. Any doubts, we are always there for you. Take care. Signing off. Bye bye.